Good morning. I never heard that expression before. You can tell you're English. Mad as a box of frogs. That is so funny. Oh, that's so funny. Mad as a box of frogs. I've never heard that one before. Ah, boy. All right. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Welcome to a few new members. I think we're a great place to trade and chat and talk about the markets. We've got about 6 minutes to go. 6 minutes to go. As you know, first few minutes of the trading day, once we get started, I'm usually taking profits off into strength and then reassessing the markets. Right now, I just want to show you what the markets are set up, how they're set up. All right. So here's one day. Here's your 1 day view, or non-zero day, I should say. This is actually non-zero day. So where are we? We're just above this support at 68.15. We got immediate resistance at 68.50. Why do I say that? Because these are positive gamma strikes. These are showing you what the dealer's looking at. Okay. This is the dealer's response or actions to all the puts and calls that are being sold and bought. And it shows up. Purple is positive gamma, red is negative gamma. Okay, positive gamma creates support and structure. Right now, we've got a 23% stability, so we could see prices move around quite a bit this morning. With this in mind, we are looking for consolidation. I'm going to kill your eyes here. We are looking for some consolidation up here of the 5 day move we had last week, Monday through Friday. Okay, we're looking for some consolidation. We're not looking for a break above 68.70 over here, that middle pivot, anytime soon. It'll look like this. Okay, so right now we've got lower highs. Okay, so we got this big, and I'll emphasize it by a darker red line. So we have resistance. We have support below, and we're probably going to stay somewhere in between this area. Okay, so between this 50-day, 21, probably the 21-day. Probably stay, we'll probably bounce at the 21 day if we get down there. Right now, futures are currently up 29.30 handles. Okay. So, with this, no panic, no worry. Let's look at junk bonds. Junk bonds, we want that back above the 50-day. Okay. We did have a nice little bounce in junk bonds. Okay. Yesterday, we had a nice little bounce, grinding higher. Okay. So, the way I interpret this asset class is okay, we were above the 50-day. We had a nice 5 day run. What are we doing now? Okay, so now we're not 100% sure. Let's be neutral. Okay, I'll be neutral with you. Let's go take a look at breath. Okay, breath had a good week. All right, we ran up. You can see all these advanced decline percents. Take the advancing stocks, declining stocks, divide them, gives you a percent. Okay, well, we're getting close to plus 30% on the S&P in the top panel. Mid caps, S&P mid caps, S&P small caps, NASDAQ 100. Okay, I follow these four. So right now we had this little pullback yesterday. Does that mean we're going to continue to pull back? I have no idea. We don't know until we see price action. However, what I do see is that positive gamma is starting to build up. Let's look at net open interest. Okay, so you can very clearly see net open interest is pretty large. Starts at 68.50, 6,900. There's a pretty big node there. And then another node up here at 69.40. below, we don't have a big node until 67.50. That was a level we wanted to pay attention to yesterday, and 68.50. Now, is that an iron condor? That's not an iron condor, right? I would. Okay, hard to tell here, but I think Captain Condor. Hmm. Very curious. I don't see Captain Condor on here. What I do see is support just below 68.15, a little resistance just above where prices are about to open here this morning. We're looking for a trend. Okay, that purple line needs to start trending. I'll show you. Okay, we got less than a minute to go. I'll show you yesterday, and we'll get to down to business here. Okay, here's yesterday. Okay, you can see we trended up most of the day, and then we fell quite dramatically from around 1350. Okay, 1:50 p.m. We started to move lower. Then we consolidated. So that's what we're looking at right now. We're looking for a trend. Okay, we're about to open here. MongoDB, already talked about this. MongoDB, this is what we're dealing with. Okay, we'll open up here near above 390. We're looking for a fade, very similar to what happened with Oracle. Okay, we are open. Okay, here's Oracle over here. This is where we were. We were in the money after earnings, and we were just patient and waited.
Plus 800.
Okay, there goes Apple. Apple's on the move. Apple's on the move. Okay, there goes Apple. Okay, I do want to do something with Apple. What happened with my? Oh, there it is. Okay, Apple. Apple on the move. Okay, Apple's on the move. Maybe you sell some into strength. Okay, New York Fangs are kind of mixed right now. Okay, so this is what Oracle looked like. Okay, you can see Oracle was in the money after earnings. We had this short side calls go in the money shortly, and then we just waited for it to pull back to actually the same day we rolled out. Okay, and then we found out that we could take profits. So that's what Oracle looks like. This is what MongoDB looks like. MongoDB is currently in the money. Okay. You can see break even is at 391.10. We're above that level right now. And we'll wait for this to fade. All right, S&P watching. Okay, Apple. Okay, we did fade a little bit from the pre-market highs. S&P fading a bit. Give it a few minutes for the markets to settle down. You don't want to make any knee-jerk reactions. Okay, we do have Credo as well. Credo, we could probably take this one off, I imagine, in the next couple of hours. Okay, Credo, well below our short strikes at 222.25. You could take the put side off. That's going to be probably $5 credit or $5 debit. Okay, let me just go see what Credo looks like. Credo, ooh, that's up a lot. Holy shizzle. Okay, let me go ahead and close Credo. Create a closing order, $28. It just jumped to 60. Okay, this is jumping around. Okay, I'm going to put a limit order out there to sell at $30. Credo, I'm going to put a limit order to sell at 30. No, that's not what I want. $30. Okay, they're trying to trick me here. $30. Good till canceled. Okay, let's see if that held. $30 good till canceled. All right, so let's see if I can get out of here at $30. Okay, Apple pulling back. So you didn't chase Apple, did you? Okay, you didn't chase Apple. You took some profits off in the strength, working pretty well. Okay, we do have a couple of people asking me about MicroStrategy. Looking to get long MicroStrategy. Probably one. Now I'm probably going to do like a 185, 190, 185, 195 on MicroStrategy. Okay, I already have some MicroStrategy or strategy as it's called now. Let's see how this is doing. Actually, no, that got it's probably those calls probably evaporated last expiration. So let me go to January 2026. Let me do. Okay, these are quite expensive. Okay, the 50 deltas are 220s on strategy. Wow, that's pretty far out there. 220 is close. All right, let me look at something a little closer. Let's go December 17 trading days. And let's see, the 210s or 50 to 40 to 220, 230. Buy. Yeah, that's far out of the money. These are expensive. Okay, Credo. No, I don't want. I want MicroStrategy. Why is this on Credo? Oh, there we go. Now we're talking. Okay. 20 deltas. Okay. 190, 200. Let's do 190, 200. MicroStrategy, buy a vertical. I'm gonna hold on to this. I'm not gonna buy it right this minute. 190, 200. I'm gonna save this. I'm gonna come back to this in a few minutes. Save this. Okay, so I want to get long MicroStrategy. Maybe do it now. What the hell? Let's see. MicroStrategy. Maybe I'll just do half. Okay, edit. Let me just do half of that. Let me do like a few of these. Limit. Okay, I just did a 190, 200 on strategy for December, 17 days. Okay, watch Apple. All right, so this is the morning is giving you opportunities to take some profits off into strength. MSTR bought 17 DTEs. That is, no, that's not 17 DEs. Those are February. Bought February. 190, 200 calls. Well, for now, we'll add filled at, what was my fill? My fill was $3.83. $383. Stop minus $1. All right. Apple fading a little bit. All right. So I get the sense that people are a little too frisky this morning. Let's let this settle down a little bit. Let me go take a look at MongoDB. Okay, so that's showing a little bit more strength. That's okay. MongoDB, DB. MongoDB, just looking for this to lose some of the implied volatility. Let me just go take a look at that real quick. Okay, MDB. Okay, you can see this is fairly expensive. 1 month implied vol is 70.43. 1 month realized vol is 34. So you're pretty big spread there. About 64, excuse me, about 44% between the two, implied and realized. Okay, put spreads are fine. You can take the put side off. Okay, we can do that. MongoDB, take the put side off. MDB. Okay, let me take the put side off. Create a closing order on the put side. Puts. Don't really need to. They're a penny. Okay, let me see if I can get out for a penny. Okay, I'm trying to close the put side of the Iron Condor for $1. Debit, $10 total. Okay, let me put MDB over here. Mongo. Look, what is the S&P doing? S&P starting to chop around. Okay, let me set up my trader window. Okay, MongoDB. Let's see what they had to say here. MongoDB experienced a significant increase in pre-market trading, rising 22%, blah, blah, blah. Maintained at neutral by UBS. Neutral, not overweight, not a buy, neutral at UBS. My buddy works at UBS. Well, they moved down to Florida. He and his wife. MongoDB maintained at overweight by Wells Fargo, outperformed by Bernstein. All right, so we got a bunch of upgrades. Need that enthusiasm to retreat a little bit. Reality set in, and let's see if we can get some profit taking here. Okay, we'll roll this out. Probably a month. Same strikes. Let's see what we can do with that right now. Let's see. Let me cancel this. Cancel order. MongoDB. All right, I'm going to roll these out. MongoDB. Let's see what I can roll this out for. Create a rolling order. And let me go out to, let's see. No, I'm going to wait. I'll wait. MongoDB put side. Create a closing order again. Put side. Puts. Okay, the puts are nothing now. Puts are zero. Puts are zero. So if this does start to retreat, I can get the puts off before they start to increase in value too much. Let's see. Focus, Vinny. Focus. Okay. So create a closing order. Put side. 270, 265. buy. Okay, so I'm going to buy that, and I'm going to go 10 bucks. 10 bucks. And limit. Good till canceled. Confirm. 10 bucks. Okay. So I'll reduce. All right, so I just got out for 10 bucks. 2 bucks. I got 2 bucks. All right, so that's good. I put a limit order to sell at 10, got out at 2. So the puts are gone. Okay, the put side of MongoDB is gone. Now I just need to get rid of Credo. Let me look at Credo, and then we'll look at some trades here. S&P is starting to bounce around. Let me put you on. Okay, here we go. Okay, look at what we're seeing right now already. 0 day. We're hedging flows are dropping off. Hedging flows dropping.
IRBT, KZIN, SPEV, SMX, BEE, DBLT, CETY, KZIA, YTKG, CRWG,
Okay. Credo. Let me go take a look at Credo. Credo. All right, Credo's on the move. We're trading 210. The call side is 220. You can take the put side off. I could do that. Same thing we did with MongoDB. I took the put side off of MongoDB. Okay. Credo. Credo. Let's take the put side off. Create a closing order. Okay, watching the S&P out of the corner of my eye. Put side. Okay, let me see. I'll do $5. $5. Limit. Good till cancel. Okay, I'm out of that. For $50 total. MongoDB. We're waiting for price to fade. Then
TC may res in 10 seconds. SONN may res in 10 seconds. PLRC may resume in less than a minute. BMNU, BMNG, BERI, SMX.
okay, Oracle. Okay, watching Oracle. Okay, Oracle has earnings next 2 weeks from now, right? The 14th, I believe. Let's go take a look at Oracle. Don't panic about MongoDB, all right? So right now you're showing a negative, right? You're showing that you're in the money, and whoever bought those calls that you sold, they're what are they going to do? They're probably going to take profits, right? I would. If I was up as much as Mongo is showing you right now, I'd be out. I'd be taking profits. Right? This is up what, 70 points, whatever. So let the obvious happen. Let the obvious happen. Don't hyperventilate. Okay, so here we are. 390, 395. All right, so let me pull these together a little bit so it's more accurate. 390, 395. All right, 390, 395. Okay, we're down. We're up here. Okay, RSI's overbought already. Think about what you would do if you had calls and you were this much in the money. Are you going to just let it go? Or are you going to take profits? Remember, these expire on Friday. So we're going to roll out at least 2 to 3 weeks, maybe a month. Probably do the same strikes. Let this fade like Oracle did. Okay, let me show you what Oracle did, right? Oracle, take a deep breath. Oracle, here's Oracle. This same thing happened with Oracle. We were in the money. What happened the next day? Got a lot of selling. Is it the same situation? No, but it is tech. You had this huge gap up. Okay, so you have imbalances that you need to deal with. A lot of people want to take profits. That's invariably going to happen. Okay, so watch MongoDB. Watch for the profit taking. Not only that, but implied volatility is going to collapse. Okay.
CRWG, CWBX, CRWU. NUKK. ELUG. KALA. CWBX. LABX. CRWG. CRWU. ONMD. BRRW.
Okay, so we're waiting for a profit taking. Maybe it doesn't happen today. Maybe it's tomorrow. Okay, but we're not going to get panicky.
CNCK. CRWG.
MongoDB will be fine. Okay, Credo call side. Let me just look at Credo again. Okay, so the S&P is just sitting here, giving us time to consider other trades. All right, so we're starting to move higher. I took this off of $5, by the way. Credo. So the put side, $5 debit. $50 total.
LRC may resume in less than a minute. ONMD. CWBX. LABX. ABTC may res in 10 seconds. SONN may resume.
All right, so there we go. All right, let's look at Mongo. Don't want to spend too much time on this one because there's a lot of other things going on. Let's look at the S&P 500. S&P. Okay, we're still bouncing around here. You know where that break of structure was yesterday? It's up here. Okay, so that's a little liquidity grab right there. Okay, so we're pulling back in. Yesterday we had liquidity down below that got taken out. The liquidity, think of the liquidity down below. This, you remember there was a big green bar across the bottom, green shading, right? Think of it this way. As this was pushing higher, there was a lot of buyers down here looking to get filled. They were passive orders, right? They were just sitting here waiting. We got a gap up. We could get a fade here. So watch hedging flows. Hedging flows. Remember, we're waiting for 10 o'clock. We're waiting for 10 o'clock for this to turn up. Okay. We're looking for a trend. Okay, we're looking for a trend. Right now, we could fade a bit more, but we'll see what happens here. Are we going to fade? Is this going to be a two-day fade on the S&P? Looks like we might be fading here. Okay, so here we are. Okay, so we had a 5-day move up. Today is day 2 with a little doji tight price action. Okay, this number right here is moving. This was 27%. Now it's 37% stability. Okay, that just tells you how much you can expect prices to move. The lower the number, the more price movement you can see. The higher the number, the more tight price action will be. Okay, so the higher the number, tighter price action. Lower number, bigger price action, wider price action. Okay, so S&P. All right, I'm just trying to get a barometer on the markets here. Okay, let's look at up-down volume. Yesterday it was down volume 1-to-1. Okay, today we got 3.5-to-1 on the Qs. All right, so this is much, much better than yesterday. So expect a little improvement here after they sell a little bit.
BRRWU may resume in less than a minute. CRWG. CONL.
SPEV. PLRZ.
The Qs alone are more than 3-to-1.
ABTC.
Okay, we're looking for a move higher. Up volume. Let's see what the Qs look like. Qs look a lot better. Maybe we trade the Qs today. Apple with a little dip. All right, New York Fangs are mixed. Let's go take a look at the New York Fangs. This is another barometer that gives you an idea what to anticipate. Okay, so is that bullish or bearish? Not a trick question. That's bullish. New York Fang is bullish. Boeing got some good news this morning. Okay, Apple, Microsoft on the move. Microsoft's been underwater lately. Let's go take a look at Microsoft. Okay, Microsoft. Yeah, still not interested in Microsoft. I'm more interested in Apple. Apple looks really good. Apple's trending. Okay. Just don't want to buy it up here. We had the 285s. Okay. So the call wall was 280, 285. Let me just check Money Magic updates. It's probably got the call wall probably shifted, right, Money? Yes, it shifted to 287.50. All right. So Money Magic updates. We had 280, 285 where the call walls, 280, 285 on Apple. Apple calls yesterday, 280, 285. We tested 285 just now. However, the call wall shifted up to 287.50. Okay. So that's new resistance. So looking for a little dip. Okay, here's S&P. Maybe let's see. Thinking about a long here. S&P. Let me go to S&P. Let me just check the hedge flows here. Still a little early. It's almost 10 o'clock. Looking for this to hook upward. Okay, I'm just going to fill up my active trader window with calls and puts. Okay, that's what we're going to do first. So if you use Thinkorswim, what I do is I have a window or a screen devoted to puts and calls on the S&P, right? So once I see a move, I can quickly just click once, and that sends the trade, buy or sell. Okay, so let me go to. Okay, let's see where's this is up here. 68.50. 60. Let me look. Let me load the 68. 68.50s are $7. 68.60s are $4. Let me load the 68.60s. I feel cheap today. That goes there. Okay, my active trader window for the call side is filled with 68.60s right now. Put side, I'm gonna go same thing. What's support? 68.15. All right, so 68.10s are $5. 68.05s are $4. Let me add these on the put side. Send to my put side active trader window. Okay, so I got puts and calls ready to go. All right, so on the call side, I have 68.60s. On the put side, I have 68.05s. They're relatively about the same, around $4, 4.50 on the puts. Puts are a little bit more expensive. So I'm just watching this, watching for a turn up. Now, it's very possible and highly likely that we're going to stay in a tight range today. Okay, highly likely. We're inside of the upper part of yesterday's wick. We're inside Friday's price action. Okay. You can mark your chart up this way. I'm going to just show you what I'm thinking. Okay. I'll just show you what I'm thinking here. I'll go here. I'm just looking for prices to stay like in this zone. Okay, more or less. Okay, so there's your high. Why am I thinking that? Why am I thinking this? Well, look at the New York Fang. Look at the New York Fang. Okay, so this is what I'm looking at. All right, S&P. New York Fang looks good. New York Fang is telling us to be thinking bullish. Okay, they're at the high of the day. Oh, yeah, it goes the S&P. All right, let me go call side. Okay, I'm going to buy some calls here. Okay, just bought the 68.60s. I'm going to give it about $1 stop.
Okay, LL. TE.
68.60 calls filled. 480, 480. Stop
CRWG.
$3. So I'll give it a little bit more room.
NUKK. IREX.
Okay, here we go.
IRE.
There goes the S&P. Let's look at hedge flows turning up at this time of day, but we need to see this start to trend. Hedge flows must start trending.
CWVX. IREX.
All right. Call side's working for now. Okay, I'll start taking a little bit, maybe take a little bit off, and if I make about 50% on these. All right, already starting to see a little profit taking. A little choppy. The Qs look better. Qs look better.
IRE. IREX.
Qs look better. 4-1 up by them. 5-1. 5.5 to 1 up fall.
RWG. OKLL. TE.
All right, Taiwan Semiconductor. I was going to put this on the watch list. Taiwan Semi, TSM. Okay, that looks good. TSM, like it.
SONN may resume in less than a minute. EMNU.
BQ.
TE. CWVX.
Okay, here is junk bonds. Junk bonds looking a little better. Okay, let's see if VIX can fade. VIX, don't forget VIX. Mentally, you should be able to go through this list without me saying anything. VIX dropping is bullish equities.
TMC. SONN may res in 10 seconds.
SPEV.
Focus,
RZ halted down.
New York FANG,
TE.
Tech, Semis, QQQ.
OKLL. IRE.
BQ.
Okay, there goes the S&P.
SONN.
TMC. IREX.
All right, let me, forgot to take my magnesium this morning. Can't do that. You get older, it's very, very important that you take magnesium supplements, okay? At least 500 milligrams a day. Okay, I just got a loose connection here. Bear with me 1 second. Okay, that was my my mic cord is, I think there's a little dust in the connection itself. Gets a little scratchy. All right, VIX moving lower, that's bullish equities.
EBTC.
BRRWE may res in 10 seconds.
SONN.
BQ.
Okay, sorry, I didn't mean to have this on here. That's VIX, 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 VIX. Um, okay, S&P 500 looking good. Watch the VIX. Okay, we ran into some resistance here right at the open. Okay, we're right at the resistance that we ran into at the open. Qs, let's take a look at the Qs. Qs looking very strong. Okay, higher highs, higher lows on the Qs. Maybe buy some Qs. NASDAQ. NASDAQ. Can I trade some NDX? NDX. Okay. QQQ. Qs, let's see, today. Qs, looking for that to continue higher. Okay. Qs.
THC. PLRC may resume in less than a minute. SNBR. EITF.
All right, I bought some Tues, the 0-day 624s. Okay, that's it for now. I want to see this follow through. Palantir, tech stocks looking good. Palantir, big move, Palantir. Palantir's on the move. All right, that's a bullish leg here on Palantir. Palantir. Okay, nice bullish leg following through. Okay, the ATR is $9 on this one. Okay, it's already up $8, so you'd be chasing. Best case scenario for Palantir is you wait for the inevitable intraday dip. Okay, you got nothing but buying right now. Wait for the dip. Palantir, wait for the dip. Okay, let's see what's Dell. Okay, so Dell, I have Iron Condor on Dell. I took the call side off. Now I just need to take the put side off. Let me see what this looks like right now. Dell. Let me delete this one. Delete. And let's use this one. Okay, so Dell's on the move. All right, I got about $1,300 in credits left. I have 10 of these. I took the call side off at $30 debit. All right, so it leaves $129 in credit. I could close this now for a nice profit and just be done with it. These expire on the 19th. Let me see what I can close these for. Create a closing order, $72. Let me put a closing order, good till canceled, at $30. Okay, $30. That'll give me $100. That'll give me $1,000 total credit profit. Okay. Debit. Okay, that didn't go off right. Edit. Debit. Good till canceled. $30. $30. Confirm. No, why is it not taking this? Why is it doing that? $30. Okay, let me change that. $30. Okay, S&P pulling back a little bit. That's not letting me do it. Why is it doing this? Sometimes it works, sometimes it doesn't. Okay. It could be like that. I'm going to change it to $25 then. $25 debit. I'm just adjusting Dell. Okay. Pay. Good till canceled. 25. There we go. All right, cool. Dell, I'm going to close this for $25 debit this side. Okay, so that's going to be about $1,000 in profits on these 10 iron condors. Okay, I already took the call side off yesterday on the dip. We got that dip yesterday in that hammer. Okay, I took the put side off. I mean the call side off. Now I have the put side on the bounce. I'm taking the call side, the put side off. Sorry. Okay, so let me explain something. So I'm going to do this so that I can just do a quick video. I'm just going to grab what I do live during the trading day. So let's take a look at Credo. Okay, Credo. All right, yesterday I wanted to sell a iron condor. All right, so if we go back one day, you can see where prices were right around $175. Now Credo had I believe a 13% expected move. All right, so for a 13% expected move in Credo, what I did was double it. Okay, so I take basically 30 bucks. Okay, 30 bucks added to the price. That gives me around 220. Actually, I went a little further out. I decided to go to a 13 delta, give me more room. We traded like a 15 delta on MongoDB, and you can see what happened there. Okay, so what do I want to do here? All right, so for the purposes of a iron condor, what you're looking for is for price to stay between your short strikes. The red lines are my short strikes. Okay, so I sell a call, and at the same time, I'm buying a call above it. Okay, so in this case, I sell the 220, buy the 225. That creates a credit spread, a call credit spread. If I do the same thing on the put side, sell a 145, a 12 delta, I sell a 145, and then I, at the same time, buy a 140 call. That creates a put credit spread. Together, that creates an iron condor. Okay. So you're short the 145 and the 220, 225. Oh, that's what I wanted to do. I wanted to change this here. 220 is about right there. Okay, it's already starting to fade. Okay. So what you're doing for earnings, the dealer, in order to ensure that they're not going to, as much as possible, in order to ensure they won't have to hedge this, they pump up the implied volatility for earnings, right? So the volatility could go from something like 35% up to 50, 60, 70, sometimes 100, 200%, depends on how much of a move they're expecting. So the dealer inflates the prices they're willing to sell, okay? And the implied volatility expands. After earnings, the dealer no longer has to worry about that hedging for the most part, and the stock will settle down again and move back to reality, more or less. So the implied volatility collapse. That's what we're saying. That's what we're trading. We're trading the implied volatility. We want to see this stay between our short strikes. Let somebody else bet on a long and a short. We bet on the implied volatility collapsing and for the price to pull back in between our short strikes, 145 and 220. Okay, so one more time. We sell the strikes closest to the money. We sell the 220. We turn around and buy the 225 at the same time. We sell the 145 put. We buy the 140 put. All of this happens in one transaction. We get $1,150 credit. We become the bank, and we assume the risk. Okay, the total risk is the broker is going to require you to put up probably twice this, so about $2,000. So you have to set that aside. You're not in margin, you just set that aside. You can't trade with that until the trade closes. You close the trade the next day, you get that money goes back to being tradable. So those $2,000 you put aside now becomes available to you if you close the trade today. Okay, so that is a iron condor and call credit spread, put credit spread. Very easy to understand. Okay, and the lower the delta, the higher the probability that your trade is going to be untested. Okay, I sold 12 delta puts. and I sold 13 delta calls. You can see we're already starting to fade back into the range. So I'm going to be able to get out of this trade probably for about 50 bucks total debit, which means I'm going to make about $600 overnight in credit profit. So if I do that every single day, that's over $10,000 a month. You make 500 bucks a day, average, you're going to make 10,000 or better a month. Okay, so that's one goal, one type of transaction, one type of trade, just selling premium. You should get comfortable selling premium. The biggest issue I see with new traders is that they see the maximum loss and that throws them off. Oh, I can't risk $2,000 to make 1,150 or even 50% of that. I can't risk $2,000 to make 500. But what you don't realize is that's just telling you the maximum loss that you could take. If you fell asleep or you went on vacation, you forgot all about the trade, and the trade closes in the end, the most you can lose is that $2,000. Okay, so that's why you set it up as a call credit and a put credit. So you protect yourself by buying the wings. Okay, you buy these outside wings. That protects your trade. That creates a maximum risk definable trade. Get comfortable selling premium because it's one thing that you're missing that most traders can make a decent income from once you get used to it. Okay, watching the calls here. We're not following through right at the moment. Let's go look at, okay, hedge flows, kind of just sitting here now. Are we right below this resistance level? 96 percentile at 68.50. 93 percentile at 68.75. Got some negative gamma. Looking for prices to move higher. Okay. The other thing with iron condors is you can trade, you can sell one side. Let's say you get a big bounce. You can sell the put side. Okay. Let's say you get a big drop. You can sell the call side, close the call side. So that's what we did yesterday. This is an example of Dell. Okay. The day of earnings, later in the day, I decided to, because the implied volatility was still pretty high, I decided to go ahead and sell a iron condor for 1,600 bucks in premium. Yesterday we dipped. What happens when prices dip? Your calls lose value, right? So that's when I want to close it. I want to close the call credit side, the call side. I want to close this call credit for a lower price than what I sold it for. So basically I closed it for 30 bucks, sold it for approximately 700 bucks. 30 bucks times 10. Um, okay, now I'm just waiting for this to move towards the 50-day moving average. The markets are fairly bullish today. I will take this call side, the put side off, and I'll be done with this trade. I'll move on to the next trade. Yes, exactly. Yes, exactly, Rob. Okay. Yes. Yeah, you sell a 15 delta, Rob, that gives you an 85% probability of winning. No touch.
LIVE halted.
SPEV.
Mm-hmm.
SONN.
Yeah, so all we have to do is wait. How many times have you been in calls and it didn't work, right? You had a big pop up and you didn't sell. How many times has that happened to you? I know it's happened to me quite a bit. So when I get a 50% move or a 100% move or 3 or 400% move overnight, hell yeah, I'm going to take profits. That's what's happening with MongoDB, right? All right, it's already starting to fade a little bit. Okay, so MongoDB gonna hang out of here a little bit. That's gonna kill some. That's gonna kill some theta. All right, theta decay is gonna kick in a little bit. Implied volatility is gonna kick in a lot, and the cost to close these are gonna become lower. Okay, S&P looking for a break higher here. S&P. Okay. That's the Qs look a lot better. Qs looking better. Okay, we're still looking at what 5-to-1 up volume on the Qs, 5-to-1 up volume on the Qs, only 1.65 on the SPY. Okay, up volume, down volume. That tells you the intensity of buying and selling respectively. So if you got 5-to-1 up volume on the Qs and you have only 1.6 on the SPY, which would you rather trade? I would rather trade the Qs right now, which means I want to look at the tech stocks. Okay, there goes Microsoft. There goes Apple. Shizzle, I missed Apple. I wanted to get back into some Apple. Okay, can't buy the high of the day. As a trader, if you want longevity, you need to be patient. Okay. When you're trading certain instruments, you have to gauge your risk, right? If you're trading a penny stock, I have much lower tolerance for risk than I do if I'm trading something like Google. All right. So we went through this with a couple of things recently. This one company, SMX, right? SMX is on the move, trying to push a bit higher. Now, this is a fairly inexpensive stock. It was $12 not this past Thursday. Yeah, this past Thursday, right? Was it? Let's see. Today, Monday, Tuesday. Yeah, last Thursday, this started off at $10, $8 to $10, right? And we were talking about this when I posted it late in the evening on Thursday. The stock went up to $60, $70. I think it was like the high was like 73 or something like that. Okay, so you should have a much lower tolerance for this type of risk. Conversely, Google, you might say, "Oh, that's a lot more risky. It's a hell of a lot more expensive." In reality, Google's a lot less risky because you got a lot of people who are willing to buy the stock from you. Oh, you don't want it at 310, 315? I'll buy it from you. Right? You have a lot more liquidity. When you're trading options, you're risk defined, but you still have to moderate your risk, right? You don't want to take 100% of your account and put it in one option trade because you're probably going to blow it up. Watch the S&P here starting to fade a bit. Puts are starting to catch a little momentum. Okay, let's see what hedge flows look like. Okay, hedge flows turning back down. Hedge flows turning back down.
Alert -800.
Okay, I just got stopped out of the calls. Okay, put side is running here.
You may rest in 10 seconds.
Still.
PLRZ. SMS.
Okay, dropping off here 60.
SMX.
SMX.
Okay, hedge flows continue to move lower at the moment.
SMX halted to the upside.
SMX.
SMX.
Let's see what we do here. Do we have S&P? Okay, already start to lose a little bit here.
SMX.
EDEX. SMX. CNCK.
Okay, a little shakeout there. Let's see what hedge flows are saying. Hedge flows kind of trying to hold on to this level.
SMX.
Okay, Reddit following through again today. Let's see what Reddit looks like. Reddit, that's on the watch list again this week. Reddit follow through. Reddit follow through.
CNCK.
Bullish day on Reddit. Let's see. What's Walmart doing? Here's Reddit. Reddit following through. All right, volume picking up. Heck, that looks good. Walmart. I sold some Walmart 100 calls, January 100 calls into strength yesterday. Looking for Walmart to fade a little bit like it did a week ago. Okay, so on Monday, Tuesday, this faded back to 50-day. I'm just looking for a fade, maybe back to the 5 EMA not shown. Here's a 9 EMA right here. Okay, we're dropping a bit more.
INTW.
Where 5, 15, 30, and 60-minute are now on sell signals.
MYSC.
S&P. Okay, still looking for hedge flows to tell us something. Okay, we got a little bit of support down here. Right in this area, 68.20, 68.25. Looking for hedge flows to turn up. Okay, so let's see. Boeing looks good. NVIDIA up quite a bit. NVIDIA off the highs of the day. NVIDIA.
INTW.
CNCK.
CNCK. SMX may rise in 10 seconds.
Qs are starting to turn.
TLRZ.
Okay, so Goldman Sachs looks good. I might sell some more put premium. CRM, Salesforce looks good. Could sell some put premium on Salesforce. Look how wide the Bollinger Bands are. So implied vol is probably pretty decent. CRM.
SMX.
All right, CRM. You can see CRM is fairly expensive here. Sell call spreads. Could sell a iron condor on that one. CRM. Okay, what's Oracle doing? Oracle still consolidating. This is day 7. Day 7. We got earnings coming up on Oracle. A lot of talk about their debt issues. Okay, Oracle, a lot of talk about their debt issues. Oracle, oh, it's the 10th. Okay, so they are the 10th. They have earnings next week on the 10th. Okay, so they don't make a whole lot of money. Just shy of 1% earnings growth, 12% revenue growth. They missed last time. Okay, looking for S&P to climb here. Let's see what Trace is telling us. Starting to hook upward. All right, so it's just a bottom right now. It's not trending, okay? Technically, we have a trend starting at 920. Lower highs, lower lows. That needs to reverse. We need a higher high and a higher low. All right, coming off the low right here, S&P. S&P starting to push a bit higher. MACD is starting to turn. Okay. Let's go to the 1-minute chart. S&P, note at the bottom. Okay. MACD is turning. Okay. Indicators, MACD.
SMX.
I'm just fiddling around with some indicators here. Okay.
NXPI,
MACD.
MNDR, GDXD,
MNDR.
DUST, GDXD,
Okay, still no trend S&P. Looking at the Nasdaq 100, Intel is leading. Intel, Applied Digital, MicroStrategy, Shopify, NXPI, NXP Semiconductor. All right, the top 5: Intel, AppLovin, MicroStrategy, Shopify, NXPI. Number 6, Palantir. 7, Booking.com. 8, Mercado Libre. 9, Team Atlassian. 10, Synopsys. They had a big deal yesterday with NVIDIA. NVIDIA is number 11. Marvell, Applied Materials, ARM Holdings, Applied Materials, again, Cadence Design, Global Foundries, LRCX, a lot of chip stocks on the move here. Trade Desk, XCOM, Microchip, ASML makes the machines that makes the chips. Okay, Amgen. Okay, biotechs. Let's take a look at biotechs. Biotechs were trending last couple of weeks. Since about August, biotechs have been on the move. XBI. Okay, consolidating recent gains. All right, it took off in August. XBI. Let's see. Materials have been looking pretty good. Materials, that's pulling back today. Communications, okay, that's pulling back. Energy, pulling back. Financials, hammer. We need the financials. Industrials, okay, watch Boeing. Boeing got some good news this morning. Big gap off the low. Almost put that on the watch list as well. Looking good. S&P moving back up. Watching your MACD. Watch your MACD. Okay. Okay, let's take a look at some indicators. Let's see what the money flow is telling us. Okay, so we still got pretty much a dip. The Qs look like they want to turn back up. We've got 6-to-1 up volume, it looks like. What do we have on the Qs? Qs are just shy of 5-to-1. SPY is still 1.6. The Dow Industrials, 5-to-1. Okay, so if you're trading any of the, there goes the S&P. S&P. CRM has earnings. Okay, cool. Salesforce has earnings. According to Corey, let me just go check out CRM. Salesforce has earnings tomorrow after the close. Okay, Salesforce. CRM. S&P on the move. S&P climbing back up, shaking people out, taking stops. S&P on the move back up, looking good. Let's look at trace hedge flows. Okay, we need this to start trending. Higher highs, higher lows. It's still very early. It's only 10:43 on the East Coast. I'm your host, Cousin Betty, coming to you from theclosingprint.com. It is Tuesday, the second day of December trading. Okay, what is Bitcoin? Bitcoin looking good. BRMN. Let's see what those are looking like. BRM. Let's see what the Bitcoin stocks look like. Coinbase. Coinbase looks good. CONL, COIN. Riot. IBIT.
SMX halted to the upside.
Bitcoin on the move. Looks good. MicroStrategy. MSTR. Ooh. SMX. SMX on the move. Okay.
SMX. TLRY may resume in less than a minute.
SMX.
SMX. TLRY. XXRP. SOLM halted. FLY. FLYE may res in 10 seconds.
SMX.
SMX.
Okay, watching Trace.
TLRY.
Trace bottoming, turning up.
FLY.
Okay, you can see 6850 is the next resistance level, 6850. Okay, SMX, that's one that Mondo and I've been fiddling with recently. Fiddle, fiddle, fiddle.
LPTH. SOLM may resume in less than a minute.
AKTX.
SANA. YTKG halted down.
Nice move back up. We did hit this level prior, all right, so maybe take a little profits off in the strength.
INTC. TLRY.
SMX looking for that to come off a halt.
SOLM may res in 10 seconds. SMX may resume in less than a minute. INTW. ASTS.
Okay, watch the hedge flows. Watch the hedge flows, folks.
TLRY.
Okay, so who do we have tonight, earnings wise? Tonight,
FX may res in 10
tonight,
seconds.
tonight.
TLRY.
Whoa.
CRML.
CrowdStrike, Marvell, Okta, Okta 11%. Marvell, I think I marked one of these up. Let's see, Marvell, S&P looks good. Back up to resistance. Maybe take some off. If you took some calls at the low, take some off into strength, into resistance. Marvell, do I have anything?
CRML.
Marvell.
FLYE and zoom in less than a minute.
Okay, I might do an iron condor on Marvell. You can see I already marked this up. Okay, Marvell, I think this has changed though, right? Marvell. Okay, we got a little 9% move on Marvell. All right, so easy to calculate 10% and then just give yourself a little extra room. Probably do a 15 delta. Okay, so we're at 90, 93, let's just say 94. So round that up to 10 bucks, 10 bucks, 104, 105. Maybe you sell 110. Do like a 10 delta. Let me see what I'm going to set something up here in Marvell. Okay, Marvell. S&P still going. Marvell. Okay, if you didn't get stopped out of those calls that I mentioned earlier, those are profiting. Marvell, let's see. Today's Tuesday. Do I want to sell Fridays? I'm going to go out a week. I'm going to go out to the 12th. Give myself a little bit more time. Okay. S&P's on the move. You can hear that ticking in the background is Tick Strike. If you want to get Tick Strike for yourself, you can get a free account at financialjuice.com. I don't make any money by recommending it. I like it for news. Also, the ability to use Tick Strike. It's a little delayed on the news, but the Tick Strike is real time. Let's see. Sell an Iron Condor, Marvell. Iron Condor. All right, so Iron Condor. Let's see. Let's go to ridiculous. Let's go to. Okay, it jumps from a 20 delta to a 14 delta. 115 is a 14 delta. That's going to be nothing. You have to do at least 20 delta. 20, sell the 20, buy the 13 delta. Looks like everybody's piled into that. 110, 115. All right, so 110 on the upside. 110. Cutting a little close. 110. Might have another one we have to manage. 110, 115 on the upside. 110, 115. And from the put side, subtract $10. I'll just go to 80. Nice round number, 80. Let's go 80. Oh, that's gonna be nothing. Gonna get no premium. Gonna get no premium on this one. 80, 75. $80.75. That's $140 credit. That's okay. All right, so let's look at the 80 side. 80 is a survey says 17 delta. 80.75. I'm going to go ahead and do 10 of these. Okay. Marvell.
QTTV.
Okay. Let's see if we follow through on the S&P. Okay, we just above this level here.
TLIH.
We need to break above that red band overhead. That's supply.
Melted down.
Supply above, liquidity below. Yesterday we had a lot of liquidity that disappeared because we took it all out. There were passive buyers down at the low. There's passive sellers up here at the high, looking for this area above to be resistance for now. That is supply. Okay. So right up in here is supply. You don't want to buy the high of the day. You don't want to buy the high of the day. You want to wait for a dip.
XRP.
Okay, wait for a dip. If you already have calls, if you bought those 6860s, those are profiting.
MSOS.
Okay, MACD is starting to flatten out. Okay, you want to pay attention to your MACD when you're taking profits, when you're taking an entry,
GDXD.
when you're exiting. You always want to pay attention to MACD. Once it starts to peak, think about taking some profits. Are we near resistance? We are. Let's see if this can turn back up. It's still got a gap between the signal line and the MACD line. Okay,
BETA.
still is a gap, so that looks good. If this turns up and starts to go, watch the volume. Watch the volume on the S&P. Okay, SMX, that's off. Okay, so Mondo, I'm going to take a little bit off into strength here. SMX, that looks looking good. Okay, let me just take a look at SMX. SMX. Okay, nice little bounce. All right, I'm going to take some off here. Okay. All right, I just took the half share of SMX.
FLYE may res in 10 seconds. BERA.
Okay, SMX.
EBEX.
All right, sold half plus 22. See if it can go some more.
MLYE.
I'm just looking at MACD. That's all I'm looking at right there. Price action looks good. Oh, that's interesting. I never noticed. I just added a new indicator, a MACD, but it had what was it called?
EBEX.
Let's see, MACD strategy, MACD strategy. Okay. So I want to give this guy a thumbs up. I like what he did here. Okay, so he does the MACD. He shows the MACD, but then he shows the divergence, -2 on MACD. All right, you see that? That's a pretty cool indicator. All right, so I got this MACD. I'm just fiddling around with different MACD versions. This one's MACD strategy. It is by, let's see, who is this by? About the script. MACD is by, what's the trader's name?
YDKG may resume in less than a minute. CSL.
Okay, let me take a 2-minute break. I'll be right back.
DUS. GDXD. YDKG may res in 10 seconds.
FLYE.
My son's texting me. What is he saying here? Let me just send him the link to the room today. NVIDIA. Apple's on the move. Apple is gone.
China and Russia reached consensus on Japan-related issues, according to the Ministry of Foreign Affairs.
Okay, call wall's just overhead. Apple.
AI chip take on NVIDIA and Google. Again, Amazon rushes out latest AI chip take on
YDKG.
NVIDIA and Google. So the details of this
ELRC.
cloud unit brings the latest version of AI chip to market, renewing efforts to sell hardware capable of rivaling products from NVIDIA and Google. Accelerator core Trainium 3 recently installed at a few data centers will be available for customers beginning on Tuesday. Dave Brown, Vice President of AWS, said in an interview.
YDKG.
House Speaker Johnson says we did not commit to ACA extension offer.
All right, S&P watching. Hedge flows turning back down again.
YDKG.
What you're seeing on the screen, the red and purple bars on the left, that's updated every 10 minutes. As options trade, it's updated every 10 minutes. To update real time would just be too intensive, machine intensive. Maybe at some point, the right side, the graph, that is real time. That's real time price action and hedging flows.
YDKG.
So you know in real time exactly what dealers are doing. Okay, looking for the breakout.
BERA.
YDKG. AHMA.
ETHU.
YDKG.
AMCU.
YDKG.
OPEN.
YDKG.
BERA.
Okay, we still got bullish action here. Okay, Marvell, I did take a trade on Marvell. Let me just mark this up for you. So I have a record of it too. Filled orders, Marvell. Marvell for $1,370. Okay, $1,370 for Marvell earnings. Okay, I took the 110, 115. Okay, so selling the 110, buying the 115 call. Okay, 110, 110, 115. Okay, somewhere in there. 110, 115.
YDKG.
Okay, so 110, 115, and the put side, I took the 80.75. Okay, 80 would mean a loss of the 50-day. I don't see that happen. 80.75. 80.75. And I can adjust these during the day if I need to. 75. 80 put. Let me just make a record. Microsoft, Apple is still driving higher.
AMDD.
110 is a 20 delta. 20 delta. And the put side is a 17 delta. $17 delta, total trades $1,350, $1,370.
AMDD. GDXD.
And this is for 12 December.
DUST. AMDD.
Okay, I'm gonna get the break evens. Break even on this one.
OPEN.
A little profit taking there on the S&P. Okay, break even is 78.58. 78.58.
YDKG.
POM.
And 111.42.
BQ.
Okay.
LABD.
BQ.
Okay, so that's Marvell.
LABD. GDXD.
Apple and Microsoft at the highs. S&P pull back.
FBYD.
FBYD halted to the upside. FBYD. ONDS.
Okay, let's see what Reddit looks like. Reddit. Okay, NASDAQ. I will say NASDAQ is looking much better.
FBYD.
Let's see the Qs. Qs look better.
SMX.
S&P taking a little bit of heat right now. S&P after a 5-day move last week. Okay, I have no idea where that came from. I don't know what's going on here. Got this stupid circle around my cursor. So S&P looks okay, but the Qs look a lot better.
SMX.
Qs look a lot better.
GDXD. NBD.
YDKG.
Okay, Dell. Dell looks good. I'll hold on to that for a couple more days. MongoDB. MongoDB.
GDXD. LABD.
Okay, it's fading a bit more. MongoDB. Just a little fade.
NBDQ.
FLYE.
Hedge flows turn back down. So it looks like we're going to have this whippy price action. Look for support down here, just a little bit lower.
LABD. NBD. SMCZ.
SBEV.
NBDQ.
And we're approaching area where we bounced before, right in this area around 68.20. 68.15 is 98 percentile. We should see, maybe we get that, we test that and then bounce. S&P pulling back.
SBEV. YDKG. FLYE.
Looking for a bounce in this area.
FBYD may resume in less than a minute.
SBEV. SMX.
NBD. REPL.
FLYE. REPL.
LABD,
SMX,
FBYD may res in 10 seconds.
Okay, S&P trying to bounce here. Let's see what Trace is doing. Hooking back up. Okay, we're looking for a bounce in this area.
LABD,
SMX,
FBYD halted to the upside.
REPL,
ONDS, REPL,
YDKG,
NVD, NVDQ,
SMX,
Nvidia shares pay gains in the session low up 6%.
REPL,
And off the back of the Amazon comments, we have that
ONDS,
Russia's out its latest AI chip. It's taken Nvidia and Google. If you're a real day trader, go real time at financial juice.
YDKG,
NVD,
Let's say 67%.
Okay, watching the markets.
Let's make a big, beautiful deal, people. Come on.
ONDS,
Okay, looking for hedge flows to turn up.
LABD, ONDS,
High material sequence that the company expects demand from China to be lower next year after capacity build over the last few years. High material sequence the company expects demand from China to be lower
LABD,
Tick cumulative is still facing lower.
next few years.
REPL,
REPL, LABD,
REPL,
REPL, ONDS,
Okay, hedge flow is still pointing lower at the moment.
LABD,
REPL,
FBYD may resume in less than a minute.
S&P note MACD is still lower. S&P note your MACD is still drifting lower.
LABD,
side will pop out healthily down.
LAVD FBYD may res in 10 seconds.
REPL.
CHA.
So reminded with what the cabinet meeting is supposed to be about. Main topic
Looking for a bounce.
recently was
Watch hedge flows.
alleged drug smuggling.
Hedge flows trying to turn up.
Specifically, the second follow-up strike that killed survivors. This is according to AP News. The administration insists that the second strike is lawful.
ONDS.
Mitch Bradley, not excess. This is what AP News is saying. What the meeting is going to be about today.
REPL.
CHA.
REPL.
NVD. LAVD. SMCZ.
Okay, hedge flows continue to drop off here. Be careful.
NVD. IONC.
FBYD.
LAVD. TSLQ.
Low tick alert -800.
NVD. RGTZ. LAVD.
All right, hedge flows continue to drop off here. S&P, nope, MACD is continuing lower.
TSLQ.
You got another red bar on MACD
NZ.
YDKG.
as price action pulls back.
PLRZ. YDKG.
IONC. NVD. RGTZ. SOXS. TSLQ.
YDKG.
LONC.
Finally, Skeptic expects to hear Trump at his China meeting. Video is on the page to launch.
YDKG.
Okay, so there's a series of lower highs and lower lows, hedge flows, you can see. Okay, looking for a bounce. See if we can't get a bounce soon.
Low tickler minus 800.
IONC. RGTZ. UBIX. SOXS. RGTZ. NBD.
Okay. MongoDB fading a bit more. Okay. So MongoDB fading a bit more off the high. Just need this to fade into tomorrow and maybe drop a bit. As people take profits, the markets are pulling back. So most likely people will be taking profits off.
RGTZ. NBDQ. SOXS.
This reminder for later on. 2 pieces of time from his announcement.
NBD.
Announcement from CDs will be about the initiative to create
All right, I got to take a couple of minutes. I'll be right back.
RGTZ.
Walmart CFO says peak impact of tariff costs likely
NBD.
in Q1.
RGTZ. UBXY.
Just some further details in regards to Japan and China saying they reached an agreement with Russia and Japan. Beijing and Moscow carried out strategic alignment on issue related to Japan, reached high level of
SMX.
dozens.
TECS.
They basically agreed to firmly uphold the hard-won victories.
UBIX.
And China and Russia will resolutely counter any comeback
NBD.
by fascism or Japanese militarism.
RGTZ. IONZ.
S&P 500 turns negative, Nasdaq 100 pairing gains 0.2%. Surely expect
FBYD may resume in less than a minute.
videos on the This is expected to be speaking about these strikes on the alleged drug vessels.
Okay, what's hedge flows doing? Hedge flows trying to turn here. Looking for hedge flows to turn up. We're bouncing right at the put wall.
FBYD may res in 10 seconds.
What's Walmart doing? Walmart, I did sell some Walmart yesterday. Here's okay, here's Credo. I told you, I'm sorry, this is Credo. Told you that with MongoDB, we'd probably see a little fade, a little profit taking. Okay, profit taking, still seeing profit taking. Need to see this fade a lot more during the day.
TECS. SOXS. TSLQ. TSLZ. KOLD. SOXS. UBIX. NVD. TSLQ.
Joe, always great to have you with us, especially to talk gold as we're wrapping up a banner year for the
TSLZ.
metal. Up nearly
TSDD.
60% so far, holding pretty strong above that 4,000 level.
YDKG.
What's your prediction as we go into the end of the year and into 2026 as far as what we can expect from gold and its price?
Well, I think you nailed it. We're nearly 60% up for 2025. I think you have to reflect a little bit on what's happened. First, it's been a standout asset.
UBIX.
Risk and uncertainty of risk assets has been starting to show cracks in the system, and people are understanding the value of gold. Second, the demand in the shipment
TSLQ.
of structural central banks reserves, Western and Eastern investors all working together to continue to drive the price higher. And that, for 2026, gives us a very sound, strong case that this upward trajectory, maybe not at this pace, will likely continue into 2026 with investors, central banks,
SOXS.
key for driving
TSDD.
the overall increase in demand for gold.
UBIX.
We have a lot of drivers of this increase, but unlike equities and crypto, we've seen gold climb almost in a completely straight line.
Looking for a bounce. We're at the put wall. S&P is at the put wall.
Is the biggest driver of that consistent movement.
The constant need for an investor to understand how to offset the risk they have as they continue to chase returns. So having equities and bonds are a necessity in all portfolios, realizing now that the political, geopolitical, trade tensions that have developed over the course of the year, the economic impact those activities are having on the economies on a global scale, all of these factors are weighing in on risk, and that's where gold's standout performance plays a key component in a portfolio. You're looking at roughly 18 to 20% of the demand year to date in the form of reserve assets for central banks. They're looking at where they can go to offset dollar and dollar-based asset risk. And you're looking at Western and Eastern investors globally looking at how they can manage risk in portfolios. That's what's driving it.
So in terms of portfolio construction, Joe, as someone's looking to put gold in their portfolio with some of the shifts that we've seen in gold this year, sort of moving from a safe haven to potentially now a diversifier, how should one approach owning gold?
I think it's a great question. The key thing is to consider what your risk profile looks like and what allocations to gold.
Okay, watching your hedge flows, looking for this to turn back up.
And that's where we actually stand out against other assets that might be saying, yeah, we're a safe haven.
FBYD may resume in less than a minute.
EQ.
When you look at what gold can do in good markets and in bad markets, you'll find that an allocation ranging between 5, 7.5 to 10% might be good for a portfolio offset. The key is talk to your advisors,
CLS.
talk to your consultants, and run the analysis and run it like it's an asset that you're structurally holding. There's going to be momentum, but ultimately the longer-term trajectory for gold is really well positioned, particularly as we head into 26.
And part of that strong positioning is this shift that you mentioned from west to east. We're seeing, gold investment access really growing in China, in India, and some of these other markets. How important is this emerging market infrastructure build out then?
FBYD may res in 10 seconds.
First off, I'd say it's been an amazing thing for us to see in large. It's critical for sure, particularly when you take it into the context that 70% of gold still is emerging market demand driven, and a lot of that is in the consumer space.
All right, starting to bounce now, watching hedge flows turning up. All right, we tagged this level right here at 68.15. It's a 98 percentile. Starting to see support. We're at the put wall. Hedge flows trying to turn up. As you can see on the screen, hedge flows trying to turn up. All right, looking for a MACD cross. Looking for MACD to cross up. Watching your MACD in the lower panel, trying to turn up. Okay, the Qs still look pretty good, right? The Qs. It did fade as well. Got a nicer bounce on the Qs. MACD is turning here as well.
SOLT.
All right, nice little bounce. The Qs looking good.
BERA.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the market. Welcome in Nicole Penelides, host of Opening Bell and the Watch List here on Schwab Network. Nicole, great to see you as always. What's catching your eye so far this morning, other than
MACD trying to cross on the Qs.
Yeah, because yesterday we had down arrows on December 1st, the first day of trading of the new month. But in fact, now with the up arrows today, we are up 6 of 7 trading days. And we're seeing some of the leading sectors, such as technologies and industrials and financials. Those are some of the leaders on Wall Street, some of the winners, Boeing, also Caterpillar, Goldman, and United Health. So we do see the trend here back, the rally that we had underway, which turned the S&P and Dow
Voice
positive
news
for the month of
disconnected.
November. at least back at least a bit here. And I would note that part of this is about what the Fed does and doesn't
We're on a
do.
5-minute buy signal. 15, 30, 60 are still on sell signals. Futures.
Next week, the meeting's on the 9th and the 10th, and you have, an 87% likelihood that you're going to have a cut of 25 basis points. That's good for the markets. The other thing is that the Fed's quantitative tightening has now officially ended. It's been canceled. And that had been a squeeze on money markets and liquidity to the tune of over $2 trillion. We'll be rolling that over into treasuries and mortgage-backed securities. And that too, Tom Lee, who's very well respected, said last time they did this in 2022, the markets took off the next 3 weeks. So we're seeing that. And last but not least, that also paves the way for crypto because this liquidity issue, was a liquidity vacuum, it's been called, put some pressure,
And BYD.
headwind on crypto. Now we don't have that, and you're seeing Bitcoin, which had been at 80,000 on the 21st of November, and today at 91,000.
SMX.
All right, and we are getting some updates on this Warner Brothers Discovery potential sale of its entire business
ELRZ.
or parts of its business. And the reports on these latest offers, these are binding offers now that they're into round 2. So can you catch us up on what the reports are saying about the bids, who they're from, and what they want? And look, Bloomberg saying, as you noted, binding offers and that one of these is likely to stick and that they'll get working on one of them. We know that we already had prior offers, but now it's round 2. The offers were due December 1st, and the players are Paramount, Sky, Netflix,
ELRZ.
and
First,
Comcast.
as Putin starts
Believe
talks
that
off with
Paramount
Witkoff and
has
Kushner.
a better regulatory environment. If they do this, they would be taking the whole Warner Brothers. Netflix reportedly tweaked their deal, and now it had been a key part in stock. Now it's mostly cash. But the Paramount Sky deal is mostly cash as well, and they have backing. They have the debt financing ready, and also Comcast is ready to go. So it looks like they have a
ELRZ.
few offers here. These
And
3 offers
BYD.
to contend with. We had seen that Paramount Sky offered around $60 billion prior, and now it's reportedly higher. And you had the CEO of Warner Brothers, Zaslav, saying that he was hoping for $70 billion. He had said that earlier in the year. In the meantime, this stock has gone from $7 on Liberation Day week up to $25 pretty much. It's 24 and change. I mean, this move here is 145% in 6 months. It's been unbelievable. But now with this second round of offers and some clarity, which will be the winner and take this forward for Warner Brothers. So we'll continue to follow the story. But certainly Paramount reportedly has the best regulatory environment because Netflix, for example, while it's not necessarily a theater company, could have some, butting of the heads with the Warner Brothers story. So we'll see which one they go with. It will be very interesting to watch this all play out too, and if they're interested in selling the entire business or just the studio and streaming component, as Comcast and Netflix reportedly only interested in those. But like you said, they're trading even higher today on the news of these potential bids, up 1 1/3%. All 3 suitors trading slightly lower. Thanks, Nicole, for breaking that down for us. That's Nicole Petalides. And now it's time for the disruptors. George Tillis, our senior markets correspondent, is here with today's company. We're highlighting Marvell. They have their earnings after the bell today. George, as far as expectations for Marvell, what's the street looking for?
Well, this is interesting because we know in the context of some of the demand for alternative chip manufacturers, particularly those that provide markets with customized silicon chips, companies like Broadcom, we're starting to see some movement, like Google, for instance, with their GPU chips, movement towards players outside of the core players in the GPU space like AMD and, of course, NVIDIA. So Marvell fits the context with companies like AMD as well as Broadcom. Overall, if you look at the price performance of Marvell in the last year, it hasn't been very good. The stock is down over the last year by 5% year to date. It's also down about 15%. If you actually consider what's happening from the standpoint of challenges for Marvell, one of the primary challenges I discovered, I suggest, is that they have about 40% of their revenue exposure in China. So that might have been essentially an anchor against some of the profits going forward in the past. May still be an anchor going forward, but it also could be a situation where hyperscaler demand, including major customers like Microsoft, as well as Amazon actually pick up some additional demand for Marvell's technologies going forward. So they're essentially a customized silicon manufacturer across multiple industry groups, data centers, enterprise networking, carrier markets, but also consumer electronics, but automotive and industrial end markets, which places it kind of uniquely positioned in between Broadcom's as well as A&D's technologies. Now, into the quarter, if you look at the EPS estimate, 75 cents, that's 71% increase compared to last year at around 43 cents. Sales are also estimated to be higher by 35%, coming around $2.05 billion. As we move into this quarter, the other thing you got to keep in mind is the challenging environment that Marvell has faced in the past has really been structural unprofitability on a GAAP basis. So they're profitable on an adjusted basis, but on a GAAP basis, they haven't been profitable. But I did notice in the last year, as sales have been increasing.
Korea News, Pushkov and Dmitriev joined Putin at US talks.
Lost about $100 million. The loss situation for Marvell is improving, meaning they're getting closer towards that inflection point. They just haven't actually reached it yet.
And it's really interesting setup too, as I was taking a look at their chart, in advance of their earnings and knowing they're very close to being profitable. The last 6 months have been really impressive, up more than 50%. But as we look at the year-to-date performance, they're down 16%. So as you structure a trade with their earnings event today, how would you approach this?
Well, that's a good eye, Marley, because you're right. If you look at the last 6 months, performance has actually been quite good. And like I mentioned, that positive momentum we're seeing in that near-term price action fits their narrative around that possibility they become profitable. And that can create a big push to the upside in the stock. But I'm not going to bet on that. So what I'm going to do is I'm going to structure a...
We have posted out the article from Axios again. NVIDIA CFO says we're absolutely not losing lead in AI race.
With 10 days to expiration.
According to sources, White House has proposed revised fuel efficiency standards on Wednesday.
A one standard deviation move of around 11% up or down. But I'm going to go out about 1.8 times on the upside and about 1 times on the downside. So I'm going to plug it in with statistical soundness. So essentially, I'm going to sell on the upside the 110, 115 call spread. Again, that's about 1.8 times that market maker move higher, gives us more of that upside potential flexibility here. And then on the downside, the 82.77 put spread, which is again 1 times that market maker move. Now altogether, earlier today, you could have structured this for about $1.75 a share in credit or $175 a contract. So in essence, the sweet spot is structural, is for the stock to stay within the confines of the short strikes. 110 high, 82 low. You have to consider break-evens in this case is 111.75 high, and of course 80.25 low. And then you earn that $1.75, and your risk is confined as well to essentially $3.25. That only occur if the stock blows out in either direction above the long strikes, 115 high or 77 low.
And we're trading sort of right dead in the center of that right now at 92.21 as we head into their earnings later this afternoon, which we'll of course be covering on Market on Close. George, I want to thank you for that, for walking us through the expectations and also the example trade there. That's George Tillis. Coming up next, we've got our 360 round. We're going to break down the earnings we got from MongoDB after the close yesterday. They've got shares rallying to a new 52-week high today. We'll talk through the numbers next on
GLBS.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute user insights.
IOMC.
Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's... And Trump's speaking now at the Cabinet meeting. One of the videos in the feed. It looks like the video hasn't switched over, but it should do.
This is a make or break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me and my advisor Jennifer. She was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations.
And the video has started.
Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution. From options to earnings to volatility.
RGTZ.
We bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at
STLA.
noon Eastern, live on Schwab Network at schwabnetwork.com.
Sorry about that. Didn't realize I was on mute. Okay, so we got a pretty much a tight range. When we get to the bottom of the range, you probably want to think about calls. When you get to the top of the range, you probably want to think about puts unless we break out above 68.50. For now, we're pulling back a little bit.
SMX.
And trusted financial journalists streaming live on Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com. 2025 kept investors on their toes. Now get ready for the road ahead. Join Schwab's panel of experts on December 11th for
Okay, Marvell, Goldman Sachs. I'd like to sell some more. More credit spreads on Goldman Sachs. You can see that we just been very active with these. $1,000 at a pop. This last one for 19 December, that was $850, but the previous ones were for more than $1,000. And as long as banks continue to move higher, you can sell put credits. I would sell right below the 50-day maybe. Let's see what JP Morgan looks like. JP Morgan, I also sold some on JP Morgan. I don't currently have a position in JP Morgan, but I have been selling, as you can see. We went in the money on the previous ones. Looking for that to bounce. All right, so I'll wait a little while. I'll wait a little bit more for the banks to continue. Let's see. Let's see what Morgan Stanley's doing. That's higher. Wells Fargo. It's okay. All right, Wells Fargo looks pretty good. You could sell some put premium on Wells Fargo. And Bank of America. Bank of America doesn't offer a lot of premium, so I wouldn't sell anything on my Bank of America. Citigroup. Okay, these all look pretty good. PNC, they bought First Bank or whatever, are in the process of buying First Bank, I believe.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange.
Very choppy price action.
A little bit of nibbling after starting out December week. Let's get right into a check of your scorecard as we hit.
Okay, looking for a bounce. Palantir, looking for that bounce. All right, looks like we got the bounce.
SOLT.
Information technology is the top of the leaderboard, but it's being weighed down by energy, materials, and consumer staples. The Dow right now has a gain up a little bit more than 0.25%. NASDAQ 100 better by just shy of 0.5%. Russell 2000 up by less than 0.1%. Here's the roadmap for today's show. We'll look at example option strategies for CrowdStrike.
Palantir moving higher. Okay, just bought the 180, 185s for January. 16 Jan.
Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. You got Tom White in our Chicago studio.
180, 185 vertical calls. Filled at $1.78. $1.78.
The uncertainty in markets, even though we had that 5-session, rally into the end of November.
SOLT.
Yesterday, a little bit weaker. We're off.
Trump says something is going to happen on healthcare, but it won't be easy.
In there out of the administration concerning Ukraine.
Okay, nice little rally underway. The Tues a little bit better. The Q is a little bit better than the S&P, but they're showing some nice strength.
It's also reflective that markets are still on edge. These risk assets where valuations in the S&P 500 are still relatively elevated at this point, compared to historicals. So we might be in for a little bit more. It seems like the market, if you look at the breadth, it seems like it wants to rally, but I think there might be some headwinds that are created, whether it's geopolitically, whether it's interest rates that continue to firm up here a little bit. Those are raising some red flags. One of the positives is we got that rebound where we wiped out all the losses in Bitcoin yesterday. I thought maybe that was going to be the trigger to some upside exposure here today in the rebound. But we keep pulling back from these session highs. So volatility continues.
That's a
CXM.
good point about, if that potentially could help things. Although, KG, I know you talked about this earlier, kind of that decoupling between equity markets and crypto markets. But KG, when you look broad stroke across markets, in particular equities, what's your take?
Yeah, I would say once again a little bit more of a consolidation. Actually, if you look back to Wednesday of last week, we now have a defined range both to the upside and downside, and we're pretty much trading within that range right now.
Trump says we're going to give refunds out of the tariffs. So again, we're going to give refunds out of the tariffs.
But I think we are continuing to gyrate. Also, you are getting a lot of commentary from
S&P 500 looks good. Trying to make some higher highs and higher lows. S&P 500. Watch MACD. MACD is just grinding along. MACD is just grinding along. Bullish trend for now. All the New York fangs mixed. Microsoft pulled back a little bit. Apple pulled back a little bit. They all pulled back. Palantir turning back up.
That might be a negative catalyst for the market, at least for the next week and a half or so. But once again, we are trying to find a defined range here. It just seems that there's a lot of commentary coming from these tech CEOs. Actually, AMAT also then talked about their exposure to China, and that they actually thought we will see a pullback or still a consolidation when it comes to their China sales into 2026 as well. So kind of mixed commentary coming from these tech CEOs, from the semiconductor space, which is obviously kind of leading us or led us early on in today's session.
That's a good point you made about like what's going to be the next catalyst, because in theory, normally, for instance, this would have been a week that we'd get the jobs report on Friday. We won't have that. We do get ADP tomorrow. It'd be interesting to see if that acts as some form of catalyst, because it at least is a data point before the Fed meets. Let's talk about what's happening over at OpenAI.
Okay, watching spot gamma levels, SG. Is that what you're talking about there, Jason?
Message about a code red, about shaping up, improving ChatGPT. To me, this comes on the heels of the momentum around Alphabet, Google's Gemini, right? And the uptick over that. I know Alphabet, Google is softening a little bit today, but look, it had a strong November, and it's clear that it may be overtaking in terms of momentum ChatGPT. Tom, what's your take?
Yeah, panic button officially pushed here by Sam Altman, the CEO of OpenAI, in this letter to some of the employees here. This code red, basically, this is kind of a result of what happens as you're rolling out new
Trump says, I believe in the near future. You won't have income tax to pay. Again, Trump says, I believe in the near future. You won't have income tax to pay.
Gemini 3 rolls out, and the reviews were sparkling on that, way better than the reviews that we saw.
Okay, we're still sitting down here at the lows. Qs look a little better, but S&P just like a big bear flag.
That's going to be a concern for the investors in OpenAI at this point. That, along with all these roundabout deals that they've got going across the board, are they going to be able to finance those if they start falling behind in this AI race?
Got to get these hedge flows to turn up.
Hey, everybody, the U.S. has got to win the AI race. Well, ChatGPT's got to win the AI race here domestically and globally also, because the competition's heating up. Business customers, they're flocking to Anthropic and some of the others in this space. That Nano Banana image generator that Google Alphabet came out with the release of Gemini 3, that's ramping up millions and millions of
watching these hedge flows.
Platform also. So this is a war, and I think the flag is up at OpenAI, and you have to start wondering, if you look at SoftBank, big investor in OpenAI, they sold all of their NVIDIA holdings again. And Sun basically said that, hey, we have to sell this to re-up our investment into OpenAI. You wonder if he's going to regret that, because they're falling behind Gemini 3, and it's technology. It moves fast. So, not surprising that we're seeing some of these warnings hit the headlines.
Yeah, that image generator, the Nano Banana one, it is better in my opinion because I've seen how it performs, say, compared to chat. You do different things like a birthday picture or something, and when you do it on chat, it's like this doesn't even look like me or my child. And Nano Banana still, kind of maintains your image. Sidebar, sorry about that, KG. I want to get your take on OpenAI, and it's to me again, it's clear this is their response to Gemini.
Yeah, it keeps sounding like you guys say.
Okay, S&P is just stuck here. Can't make up its mind what it wants to do.
Obviously, you are seeing Gemini.
Hedge flows turning back down.
When it comes to demand, they are the second most downloaded AI app, I believe, in the App Store last week. I believe that's actually what's being shown here. And in the consumption hours, I saw.
We're just sitting right on top of the 68.15 zone.
Consumption that a lot of individuals are utilizing that technology for. So it seems like Gemini does have a little bit more of a leg up. And yes, we are seeing this kind of too big to fail type of environment. I will say it. I know a lot of people are shy to say it. OpenAI is trying to position themselves in a way where they cannot fail. And Tom is exactly right. If they can integrate enough, maybe they're going to get enough backing in order to support their business. I'm not sure if that's going to be the right method or strategy, but it seems like that train has already left the station here. And once again, I think you have Alphabet doing a phenomenal job. Is there a little bit of a concern? There is, but I'm not sure if there's an end-all goal here outside the money.
Okay, what are we going to do here? All right, it is a little after 12. Let me switch channels. Let's see what Kevin is talking about here.
But once again, if you don't have that next move, then why is an investor trying to get into that business here? So I think Alphabet once again has the leg up, and then they also have the TPU business, which is obviously getting a lot of traction as well as far as eyeballs being looked at.
Okay, not interested.
We tested very briefly like a week and a half ago, and now it's going to break out to a fresh high. This is every stock. And when you actually look at the earnings growth away from the Mag 7, to Jim's point, there's a lot to like about the rest of the market.
Qs, higher lows, printing, higher lows on the Qs.
Buy the same 10 stocks that you're sick of hearing about. I am saying that, but not to the exclusion of what Shannon is saying and what Jim is saying about the broader trade, and the broader trade looks good. Now, I still think the Mag 7 names are some of the best names. And it's not that there isn't controversy around the theme, but I think that controversy is priced in. NVIDIA's
Okay, let's go see what some of these condors are doing. All right, so Doji at this time of day, not a surprise on Marvell. Credo, I have a limit order to sell Credo, or buy it back rather. Okay, it's moving back down into the range. So Credo, if I haven't already gotten filled, BMNU, Bitcoin stocks moving higher, BMNU.
What is the argument against the Mag 7? That there's headline risk? What are we doing here? So I think both ideas are correct, and that's a really healthy market. The generals are going to work, and they're broadening out. Look at that RSP. About to make a fresh high. That's bearish? What planet are people from?
Oh, but I think it's more nuanced as well, that you could have more dispersion, as we talked about.
Okay, Credo. Dell, we talked about Dell. Okay, I can take this one off pretty soon. Dell and MongoDB. MongoDB. All right, still hanging out up here. All right, let's see what we can roll this for. Let's see if we can roll this MongoDB. MongoDB, where are you? MongoDB.
We're talking about you finally have some dispersion among the Mag 7 names, whereas you generally have not. Now it's been more pronounced than it ever has. you could make the case. That's one of the points.
That's
Let's
true.
hit Apple.
It's not an easy
I know it is.
situation.
Let's hit Apple
What a mess.
because it hit a record high today. Its 7th positive day, and they're shaking up their whole AI leadership. Steve Kovac is following that for us, and he has more on that now. I guess it's probably not a surprise given what the narrative has been. Correct?
Yeah, that's exactly right, Scott. So let me just kind of break down what happened here. John Giannandrea, he's stepping down as the AI boss at Apple. That is not a surprise. Any Apple watcher kind of expected that one to happen after that big miss in delivering Siri earlier this spring. Now, he is being replaced by a former Microsoft...
Okay, I'm going to save this. What I looked at is the January 16 MongoDB, January 16, 390, 400. So they're going to be $10 wide instead of $5 wide, but gives you $122 credit. Okay, so I'm going to go ahead and do that. All right, I just rolled down, sold the, okay, I'll put it on the screen here, MongoDB. This fade gave us a nice little exit, not an exit, a roll. Okay, so we took these and rolled them. Okay, so what I did was I take these, rolled them up. I sold the same ones, but out in January, 390, and then the other one, this one, I sold the 400. 400. Okay. Okay, rolled this, rolled to January, 390, 400 call. Okay, so that's what I did. I rolled it up, and that gave me a credit. Okay, credit of
I guess the big question is, will they use a third-party
$192.
that's going to power Siri? Because that's what we previously had heard the possibility would be. Would it be OpenAI? Would it be Anthropic? Or will they look internally and build out Apple Foundation, which is the LLM that would give them the opportunity to power Siri itself? That's an interesting dynamic in this story. Obviously, it's more cost effective to power it internally.
Oh, okay. All right, cool. Done.
I'm interested to understand what the direction's going to be moving forward on that.
Yeah. Jimmy?
For a long time, we've been talking about Apple and whether it's going to have this upgrade super cycle. We are having some sort of an upgrade cycle. I don't know that it's super, but it's not bad. And that seems to be enough right now to push Apple higher. You add on to it the potential for a new AI paradigm going forward with new leadership, and that's why the stock is higher. Having said that, I own it. I find it hard to put new money to work in the name right now. At 33 times forward earnings, and estimates right now show long-term earnings per share growth of 7.5. Josh was just talking about the PEG ratio. This PEG ratio is about 4.25.
All right. All right. So that's what I did. Excuse me. I kept the same short strike. I just bought a 400. That gave me $192 credit. 193. Okay. 193.
According to the Wall Street Journal, a code red versus Google and Gemini. This is interesting. Mackenzie Segalos.
Okay, I'll post this. Don't worry.
What does this mean? I mean, is this now put Google in a position now where they have
closed
an opportunity now to beat OpenAI in any stretch?
It certainly seems to signal that. So this code red warning comes from a leaked memo cited by the Journal and the Information. And in it, Sam Altman tells staff to pause work on ads, help in shopping agents, and then shift focus back to their core ChatGPT experience, faster responses, better personalization, more reliable answers. And to your point, Scott, it is the clearest sign yet that OpenAI feels so Gemini 3
industry. It has topped ChatGPT on key benchmarks and helped push Gemini's monthly users from 450 to 650 million in just a few months. Altman told employees that a new reasoning model launching next week already beats Gemini, but the memo makes clear that OpenAI's moat is under real pressure here. And it's
Trump
not
says
just
we're going to
Google.
New Orleans
It
pretty
rolled
soon
out
with
two
the
new
National
models
Guard.
that it says matches both GPT-5 and Gemini 3
And then
on
Louisiana
benchmarking
governor
tests.
asked
Another
for help for
reminder
federal
that
help
this
in New
leaderboard
Orleans.
in AI is shifting in the course of weeks, not years, not even months, and all of this is coming as OpenAI is committed to $1.4 trillion in long-term AI infrastructure
Okay,
spending.
getting a little rally here.
It was a lot easier to investors when ChatGPT was
Trump has the
comfortably
National
ahead.
Guard will go to New Orleans in a couple of weeks.
New Orleans. That's my hometown where I grew up in New Orleans. I don't even recognize New Orleans anymore. It's so overrun with corruption, and it's just terrible to grow up someplace and have it change like that. 390.
So I think you characterized it at the beginning of the show as this dynamic where you have all of these mega cap companies now kind of going at each other, trying to introduce these new chips. Gemini 3 and the potential relationship with Meta is extremely powerful. Look what it's doing to the shares of Broadcom, which is the design partner on the tensor processing units. You're seeing as they move into their earnings report, very strong warranted appreciation because you're going to get an increase in orders as we move forward, as more and more people realize the value in these Gemini 3 chips. So it's interesting. Look, I don't think, and I think it's foolish to say, well, this is extremely detrimental to NVIDIA. No, I just think it smooths out the opportunity. It kind of blends it across the entirety of the Mag 7.
Okay, Q's looking good too. Q's are on the move.
Meta today had a bullish
High tick alert plus 800.
High tick alert.
Which is interesting. I know you have that. Amazon has unveiling their new Trainium chips, an AI model at their Invent conference.
Okay, Q's are on the move. There goes the S&P. S&P ripping now.
Yeah, I have Amazon as being one of the three most important companies in AI. I think they're right alongside of the OpenAI and all of its third-party companies that it's working with, and then of course the Google Cloud. And I think like these are really the three. So Microsoft is in with the OpenAI business. That's not going to change. Amazon to me is the one that has the least appreciation on Wall Street, but potentially the most traction where it really counts with business customers. Anthropic is the biggest enterprise AI player. Like, people don't even understand that because it's not going under AWS per se, or the people that do understand it are not getting this point across to the investment community. But Anthropic really has the paying customers who are already AWS customers and has massive traction. They're not spending as much as OpenAI. They're not doing a press release every 15 minutes. They're not popping up on podcasts. Nobody even knows the name of the person who runs Anthropic, but they're very quietly entrenching themselves amongst corporate America and some of the biggest enterprise scale customers, and they've got revenue to show for it. This idea that it's OpenAI versus Google, I think it's fun for us to talk about when we're looking at the stock prices. We don't have a stock price for either OpenAI or Anthropic, but I'm telling you right now, if we did, I think the Anthropic share price would be rising right now, and the OpenAI share price would be falling. The closest we have in terms of publicly traded proxies are Microsoft and Amazon, and then of course Alphabet. But it's very much a horse race. Leadership is shifting.
Hedge flows, watching that turn a little bit right here. All right, moving back up to the highs of the day. So we just got a doji. That's all you're looking at.
In part because we still have that same uncertainty to navigate from a consumer standpoint. I think the one thing I'd point out that
ELRZ.
people lose a little bit of sight of relative to the guide is the fact that
BMNU.
we really pulled any
BMNR.
downside from tariffs off the table. Our team has done a great job of navigating some of the volatility there. And one point last quarter we would have called out the bottom half of guide, in particular if India tariffs stay in play. And despite the fact that they're still there, we've been able not only to reaffirm but pull up the bottom and feel good about the way we're going to be able to close the year and are positioning ourselves to navigate what we think is.
Hegseth says that we've only begun going after narco-terrorist votes.
BMNU. BMNR.
JK, you mentioned on the earnings call this morning, you've seen some softer traffic the past 5 weeks. Is that focused on one specific brand, and within categories, where is that consumer cautiousness?
Yeah, I thank you so much for the question. It's really not evenly spread at all. Those of our brands that are really more aligned to upper income, higher end have stayed stronger and maintain momentum. Those of our brands that set outside of the U.S. Absolutely have maintained the momentum we've seen within the business. November for us, while I know a lot of the world really turns to holiday in November, even though we've got 1 month under us, we've got over 70% of the quarter ahead of us. Our big month is December overall, and November, even Black Friday, Cyber Monday are less impactful on our quarter overall. What we did see in those brands that have a little bit more exposure to lower and middle income customers, we did see some pullback in traffic, at the start of November, and that maps to all the macro events that I know you guys have been covering, and certainly what's reflected in consumer confidence. But we've also seen build. We've seen improvement in conversions, which gives us really good confidence in our position in the quarter.
Let's talk a little bit more about pricing, because just as we are very aware of the consumer sentiment surveys out there, we're also very aware of what's going on with the price of gold and silver on the one hand, and diamonds not going in the same direction on the other. So what does that mean for pricing for you guys? How much ability do you feel you have to pass on some of those increases to your consumers, especially as you say, as you've been navigating the
All right, it looks like we're going to go some more. The queue is rising.
Yeah, hats off to our team and to our partners for a lot of great work. I mean, on the tariff front, we've done everything from navigate countries of origin, pulled some production in the U.S., we've leveraged some supply chain efficiencies to really not only mitigate any of the headwinds that might come from it, but also
All right. So we got a nice little pop here in the Qs. Qs looking very strong, leading today with up-down volume is 3-1. It was 5-1 earlier. It's 3-1 now. The SPY is 1.4. NASDAQ Composite's 1.7. Up volume. The Dow Industrials, thanks to Boeing and a couple of others, is 5.8. 5.8 up volume, leading.
Understand that value proposition and are supportive, particularly as we think about how do we position ourselves relative to the competitive landscape to still leverage our scale and deliver value for them. Silver, to a lesser degree, I think we're seeing some renewed interest in silver, in part because of some of the higher cost of gold, and even as we go into this holiday, we've got brands like Zales that are leading into key items.
Okay, we're moving a bit higher now. MongoDB, we rolled this out. Okay, if you understand what's going on, have the same strike that I'm short, 390. However, I bought the 400 out in January. That created a credit. So I rolled this one from December that expires on Friday out to January. Gave me a $193 credit. Looking for a fade in MongoDB. Okay, so that's what we did. Kept the same 390 strike. We just went 10 wide and went out in January. Okay, S&P on the move. Q's on the move. Note your MACD. Note the MACD. How can you say you're not guilty when everybody saw you shoot the guy? I don't get the law. Because they asked him a few questions they shouldn't have asked him. They gave him his, read him his rights. That's crazy. You shoot somebody, got it on camera, and you claim not guilty. I don't get that. I guess you got to be an attorney to understand how that shit works. Imagine doing that shit 200 years ago. Anyway, hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Tuesday, the second trading day of the month as well. New month going into OPEX, end of the month. We're looking for a rally, looking for price action to consolidate perhaps S&P. Okay, we're looking for this little consolidation in this range. Right now we're filling out this range a little bit better. S&P is showing more upside potential.
We're going to do three very quickly, and one of them is a throwback that I know you'll appreciate. But let's talk Morgan
MACD
on November 20th.
still got a little gap between the signal line and MACD. Looking for more upside potentially. Buy order blocks as we break structure. You can see we're breaking structure there. BOS, break a structure. Following through, lots of fair value gaps. Notice all the fair value gaps. That's people chasing after price action, trying to get in, not getting filled, so it creates a fair value gap. Fair value gap is formed on a 3-candle pattern. First candle and the third candle do not overlap. The second candle do not overlap, so you get a fair value gap. Basically, think gap like when the S&P gaps up or gaps down, except there's no candle. Put a candle in between, you have the same concept. It just shows the speed at which the markets are moving and people are not getting filled. So they have to chase after price action. So it's an indication of strength as well once MACD turns up like it is, okay? MACD's turned up. MACD's turned up.
That's where you set your stop. So long as she remains above, I think you want to be long this name. You could buy as many GPUs as you want for your data center. If the infrastructure is not talking to each other, it's worthless. Sienna is that telecom infrastructure. Last name is Baker Hughes. This is oil. Oil is only 3% of the stock market at this point. Nobody cares until they care. Gold shocked the market this year. People did not expect gold to have.
Yeah, gold's unbelievable. Unbelievable. We have a member who has a shit ton of gold. He took a picture of his safe. I was like, wow, that's crazy. He's been holding on to gold for years. Congratulations to you. Won't mention names. Okay, nice little rally here so far.
Especially Baker Hughes. This is one of the best stocks in the market technically, and I think the fundamental picture improves.
Okay, we're moving right back up to the supply right here. Okay, this is supply. There are people up here that probably want to take some profits off, or they're short. There's probably some stops overhead. Stops above.
So we've owned Baker Hughes for quite some time now. It is up 19% as I see it year to date. It's up 12% on a one-year basis.
MACD's still rising. Looks good.
Stock. I think Josh is right. Energy ownership is at a very low level. I would call it underweight. Baker Hughes is working. Also, Refiner's working, Mike. Valero, Phillips 66, Marathon.
BLO.
Shannon, energy
Marathon, BLO.
matter. Any reason besides
besides it being under-owned, perhaps?
It's under-owned, but I also think that it's tied to the fact that there is this concern about oversupply, particularly in nat gas. But if you think about the necessary spending and the power issue that's associated with AI,
Boyle did make a new high. Boyle, so if you haven't sold it, I already sold it into strength. Made a small profit. I didn't like the way it dropped last week. Boyle, okay, I sold it. It dropped. I didn't panic. Waited for the bounce. 2 days later, I sold it for a small profit. Now it's up. Yesterday, it gapped up, made a new high. Today, it's pulling back in. Boyle, I'm out. Okay, the Qs look a lot better. Okay, 9 EMA is crossing up through the 50 and the 21-day. RSI is rising. Volume looks good. MACD stochastics momentum is clearly bullish.
I do consider that mid-cap. Hey, that's your baby. I mean, the same drivers are in place here. Data centers, all the AI infrastructure build-out is going to benefit both stocks. So just, pick your horse according to what type
Jim
of
is right. Yeah. Jim is right. So Ciena's like the high beta little brother of Cisco. This company put up 29.4% revenue growth last quarter. Cisco couldn't do that if you put a gun to its head. It's two totally different ways of capitalizing on the same theme. And there's no reason why either one of them couldn't work. So I think it's really more a question of like, how much momentum are you looking for? What kind of margin of safety do you need from an earnings multiple? But I agree with him.
And how much risk is there in this part of the food chain if all of a sudden people start talking about rethinking of overall budgets, or maybe it can't be all
MACD still rising.
A lot. So, and that's where the different investing styles come into play. So if for whatever reason there was another moment where the AI CapEx story were in doubt, or God forbid somebody canceled plans for a data center.
Hedge flows, topping out. Hedge flows.
Goes in and lowers his average cost and buys. Talk about the best stocks in the market. I'm not interested in them once they become not the best stocks in the market. So everything we write at CNBC Pro comes with stop losses for both traders and investors. Nobody's looking to get married to Ciena. By the way, I owned this as a retail stockbroker. I built a position in this in the late 90s. It didn't end well, although the stock went up thousands of percentage points. Like, the ending is never pretty. So, Mike, that's a really great point, and that's why we talk about risk management in the same breath as we talk about opportunity.
It's an excellent point. And I think you have the ability to risk manage much different than you did in the 90s. And one of the ways you could do it is continue to look at where SoftBank is.
Okay, we're rolling over here.
At the CDS for Oracle, you're looking at the CDS for SoftBank. It's very clear that there's hedging activity going on against the $18 billion corporate debt offering in September by those who took the other side of that trade. But SoftBank
Looks like we're just going to go back and forth, no trend.
40% since October 29th. And I think that's reflective of what Josh is talking about, the concerns that maybe there is a stumble or a bump somewhere here with this AI narrative as you move towards 26.
Just not enough to go around.
The signals are there to watch it, though.
Pretty healthy. The market is at least trying to figure that out. All right, up next, Joe's got a new buy. Plus, we will debate our top calls of the day. Halftime. We'll be right back.
All right. Watching Bitcoin. Bitcoin is looking a lot better. Bitcoin's at the highs of the day. Bitcoin high of the day.
Into this reserve, this $1.4 billion reserve, is the cash that you have raised from selling shares, correct?
That's correct. It's from selling equity at a premium to MNAV, which by definition.
Okay, a little bounce here. Looking like we might go a bit more. 5, 15, 30 on a buy signal. 60 minutes still on a sell signal. Tick cumulative still trending a bit lower. If you're going to lean into anything, tech looks good. The Qs look a little better than the S&P. This is the S&P. Here's the Qs. New York Fang. New York Fang. Okay, that looks good. New York Fang. Let's see. New York Fang breaking out of a descending pattern. Okay. New York Fang, you got a descending pattern breaking out to the upside. Okay, you can see histogram, volume looks good. Everything is looking good for the New York Fang, so let's see how far we go with this. Microsoft's still pushing. Apple, get the little dip that we're looking for on Apple. It's lunchtime, so I'm not really eager to do a whole lot. Apple. Looks like it wants to go again for the high of the day. Apple. 287.50-ish. That's stop prices.
It's the market understanding that a perpetual preferred instrument that pays 10 and now three quarters of points, that's STRC, is better than other alternative things that you might be able to invest in. So it's going to take a while to season the market. It could be a year, 2 years, 3 years. At that point in time, I think we'll be able to really grow a lot of capital through our perpetual preferreds. The big challenge people had with them was how are we going to pay the dividends in the short term if we see volatility in Bitcoin, volatility in MSTR. Now we've created this US dollar reserve to address that challenge.
I'm also curious when it comes to your Bitcoin buying strategy. You guys have pretty consistently bought that Bitcoin, and it seemed pretty price agnostic. Is there any thought of going for I get it.
Okay, Microsoft looks good. Microsoft, I'm not crazy about the daily, but we are looking a lot better. Microsoft daily. Intraday, we're showing a lot of strength. Microsoft. Higher highs, higher lows. Looking for Microsoft to be above the 50-day. Palantir. Okay, looking for higher highs and higher lows. Palantir.
They needed to go beyond where they were, which is messaging. They needed voice. They needed email. And it's
What's Meta doing? Meta.
If you could look at a one-year chart as I'm speaking,
Meta a little higher today. Meta. Not feeling a whole lot of momentum here on Meta. Freeport.
That 151 level rather. You'll see if you pull the lens back over the last 5 years, there is a very strong runway for this stock to move towards $200 as we go into 2026. There's profitability on this company. The free cash flow generation is there. And looking forward, the forward PE at about 26, 27 is a reasonable valuation that even my good friend James Lebenthal would be happy with.
I mean, it peaked about 400. So you're talking about we have a little bit of a runway to 2. Obviously,
what's interesting, and Mike, I know you appreciate this when you do pattern matching on technical breakouts.
Meta.
These screens very similar to the XBI.
Let's see.
If you just kind of say to yourself, okay, forget the fundamentals behind it. Let's just look at the pattern.
Apple.
There's something very similar that's kind of unfolding.
All right, this time of day is not the best time to be buying new positions, entering new positions, waiting for B and C pivots. Okay, we got Apple just breaking out, headed back up to the highs. MACD turning up, trying to turn back up. MACD.
The kind of application software mini bubble, and then it's like they crash, and then like a 2-year base.
Nvidia turning back up.
I think the one thing when you screen it out, you say to yourself, okay, it's the profitability, and there is the profitability. Yeah. There is the forward-looking reasonable valuation.
That's what we mean by growing into the multiple.
Yeah.
And honestly, it's what people don't think about when it's at 150 times earnings, but you should. And Joe, I totally endorse this. This has been
Bitcoin, higher low on the daily. About 2 weeks ago, we put in a hammer, and then we followed through. We got rejected. Now we're trying to push above the area where we were rejected. If you look at Bitcoin on the daily. Okay, we had this bounce over here. A week goes by, we come back and test it. Now it looks like we're going to follow through. So check out MSTR. MSTR and other Bitcoin related names. These are getting a nice little bounce. Hammer yesterday. MSTR strategy. Hammer, lots of volume coming in, 62 million. Okay. Coinbase. IBIT, IBIT. All right. BMNR. Bitcoin. Bit mining immersion. Nice bounce.
But I actually do. CrowdStrike expects 1.22 billion in revenue, and if they hit that number or better, that would be 20.5% year-over-year top line growth. Cash flow 261 million. That would be 33%.
Okay, looking for S&P to run.
Not a lot of companies.
Watching hedge flows turning back up, higher highs, higher lows. Plenty of time for this to continue trending the rest of the day through 1 o'clock, 2 o'clock into the close. So if we can get the hedge flows to continue to rally, it's possible we could run up to this 6860, 6850 zone. Michael mentioned that one earlier. We hit 6850 and got rejected, dropped off. Microsoft's still pushing. Apple still looks good. BMNR, very active on Zen.
It's funny, I've often thought about it as biotech in the sense of there are certain companies and approaches that are effective against certain things, and you test them, and you always have to kind of revise and develop it more.
Well, I think the challenge here is that, prior to the AI explosion, we were all talking about cyber being sort of the next big thing. And I think that the undercurrent here is that there are going to be some winners and losers, and there continues to be innovation here. But most importantly, cybersecurity isn't going away. And I think actually the use of AI compounds the need for cybersecurity. And so I think this is just an ebb and flow where cybersecurity is always going to be part of an enterprise tech stack. And it's going to ebb and flow in terms of investor sentiment. And that's what we're really working through.
Right. The bad guys have it, so you got to have it.
Mike, you mentioned in software a lot of stocks that over the last 5 years had that precipitous parabolic move.
Oracle managing a little bit higher today. Oracle.
I know Josh owns Zoom. I own Zoom. I don't know if Josh is disappointed, but I'm somewhat disappointed in the performance of the stock post earnings. I would have thought there would have been stronger follow through given the conditions that you've outlined, and where I'm trying to express to the viewers that there's that technical opportunity. You're not seeing it there. So
did not catch a spark.
Okay, Walmart. Let me take a look at Walmart. Want to get back into some Walmart calls. Okay, so buyers did step up, so we're not going to fade down to the 90 EMA. It looks like Walmart's going to keep going.
You can see it's kind of been a ceiling for a little while here. Look at the last couple of months. Okay. Yeah. All right. Up next, we're taking you inside the risky $6 trillion slice of the alts market and what every investor needs to know about it. Robert Frank, following the money for us next.
CRML's on the move. Okay, let's take a look. CRML. Critical metals are turning. CRML looking a lot better. CRML. USAR getting a bid. Okay, looks like USAR. They're talking. Palantir, USAR. Oh yeah, that's on the move.
PLRZ may res in 10 seconds.
All right, USAR. Turning off the low. Looks like that could get going here. Okay. Okay, USAR looking for a follow through to push higher. CRML. Critical metals, CRML. Turning. Okay, a little bit more selling here. All right. USAR climbing, looking good. All right, let's see what's working the markets. Boeing still top of the list, up $16. Gap back above 200. Caterpillar is one we marked up a few weeks back, if you recall. We were looking for a descending channel breakout. Let's see if I have it here. Caterpillar. Caterpillar. No, I don't have it. Huh. I thought for sure I marked this up. Okay, well, anyway, Caterpillar, I was looking at a descending channel breakout. Okay, and we finally got it. I know it's out there on the ether. Okay, so this descending channel. Okay, descending channel. Descending wedge. Breaking out to the upside. Caterpillar looking good. I'm going to save it this time.
Some recent bankruptcies show they can also be more risky. Robert Frank.
Oh, did I already?
Now he joins us. Hey, Robert.
Mike, great to see. Well, private credit, as you just mentioned, has
Okay.
been growing rapidly.
Caterpillar breaking out.
One of the biggest drivers is a little-known corner of the credit business called asset-backed finance, or ABF. Now, the ABF market has more than doubled to over $6 trillion since 2006, expected to top $9 trillion by 2029. Now, the big banks largely got out of the ABF business after the financial crisis, but private lenders rushed in and, some say, added to the risk. So rather than lending to a company based on its cash flow, asset-backed loans are based on specific collateral, like a warehouse or aircraft or even an income stream like music royalties. Now, losses on ABF funds have typically been lower than direct lending funds, so they've been considered more safe. But then we had the First Brands Group, that's the auto parts company that went bankrupt in September. They borrowed against accounts receivable. Turns out.
All right, so that looks good on Caterpillar. Apple.
To more than one lender. Analysts say that with so much capital chasing these loans and all these new ABF funds being created, the risks of
Tues.
blow-ups could also be rising.
All right,
for more on
so.
the ABF market and the boom in private credit, you can sign up for the Inside Alts newsletter out today at cnbc.com/insidealts. That's
Tues.
cnbc.com/insidealts. Mike?
You see volume tapering off as we're pushing higher there.
People might get flashbacks to other things, auction rate securities. How concerned or not should we be?
No, I mean, I think that there are going to be some idiosyncratic situations that are going to create uncomfortable outcomes for investors. And so I think you want to focus on both diversification and underwriting standards. And if you think about the difference between
Hedge flows back and forth, back and forth.
The benefit of asset-backed finance is that the duration.
They're just ping-ponging around.
Along the way. And so I think as a
All right, now we're going to taper off a little bit.
It should be sized appropriately, but the reality is that you still have to have strong underwriting and you have to be diversified regardless of what you're doing from a private credit perspective or a public credit perspective. So we don't see a lot of difference, but we do acknowledge there likely are going to be some of these situations.
And Jim, I just wonder about the so much money raised in a hurry by the likes of the private alternative asset manager. Oh, hang on, Jim. I think we are going to go to the White House where Treasury Secretary Bessent is speaking.
Investment by companies, investment by countries is turning into a CapEx boom for the U.S. Capital expenditures up 15% in history. When CapEx is up, jobs will follow. The One Big Beautiful Bill is an incredible, as you said, Thanks to your leadership, along with Speaker Johnson, Senator Leader Thune, we had that done on July 4th with Terry.
Hedge flows turning down.
And the great thing about that bill, sir,
Okay, who's trading here? Palantir, the 180 call, 17 million on the 180 call for January. All right, Palantir looking for that to follow through.
you also insisted on the 4 benefits for working people: no tax on tips, no tax on overtime, no tax on Social Security, auto deductibility for American cars, and that is retroactive. So as a result, in 2026, we are going to see very substantial tax refunds in the first quarter. So the best way to address the affordability crisis is to give Americans more money in their pockets, which is what this bill has done. We're going to see real wage increases. I think next year is going to be a fantastic year. Taxes, deregulation, energy certainty. That's why everyone with your leadership is coming to America. Bond market had its best year since 2020. Everyone said could be done. So we're going to have
Tues pulling back in. S&P 500 pulling back.
before the Schumer shutdown. We're going to go back to that. So not only are we going to have great growth, but it's going to be low inflationary growth. And stock market
Okay, MACD
following, but next year
still got a gap between the signal line and MACD, but we do have that bit of selling there at the at VWAP.
that we're killing the American people. Close the border. The promise kept. Interest rates are down, and 10-year bond again best year since 2020. And inflation, led by energy prices, is going to roll next year. I think it's going to be a fantastic year. And we can look back, be very proud of this year, but I think 2026 is going to be great for the American people. Thanks, Steve. It's going to be great. Thank you very much.
Thank you, Mr. President. It's an honor to serve with this great team that you've assembled. And
All right, coming right up, final trades after this break.
Okay, futures continue to drop off here. Okay, so you can see what's going on here. Anticipate it. Range bound, doji, moving from high to low, back to high, back to the middle of the range, chopping people up. Okay, so we're headed back down towards the low. So if you have puts right now, watching for an opportunity to sell or take some profits off into weakness, don't expect that we're going to pull back dramatically. There's nothing really out there that suggests we'll see a big move. Okay, you can see stability, all right, throughout the day. This has gone from 27% to 62%. Over the next 10 minutes or so, this looks like you can see this number's dropping a little bit. Okay, S&P dropping off. Hedge flows turning back down. So I'd expect to see hedge flows turning back up after it dips a little bit more. Look at this price here at 68.10 potentially as a test if this keeps going. But yeah, it doesn't look that bad. I mean, if you look at the daily would just look like a spinning top. Range bound, looking for prices to stay within a range. Okay, so we're looking for prices to stay somewhat in a range here on the daily. Okay, to consolidate the move that we had last week, a 5-day move. Okay, from 65.20 up to 68.50. All right, we're still dropping off here. So expect price action to stay in this zone. Coming back down to the put wall. The put wall is where the dealers have an incentive to keep prices above. If for some reason we were to drop through the put wall, then this scenario right now could head back down to the lows that we saw on Thursday. Right now, I wouldn't be doing anything, just waiting.
Off its highs, trying to rebuild off of wave of declines we saw on part of the Amazon news. Semis are up though, so it seemed like the day started, everyone wanted to buy the OpenAI complex again and decide that maybe Google wasn't going to own it all. But Joe, we're within 100 S&P points of the intraday record high, but it's been a little bit nip and tuck the past couple days.
Yeah, it seems as though it's been binary. It's either the AI trade or it's the broadening trade. Looks like, to your point today, it's about AI, it's about
hedge flow still moving lower.
And some of the other sectors are kind of sitting out on the sidelines, unfortunately.
And Jim,
Okay, so the blue are puts. The blue are puts. Puts are being bought when this drops. When price action moves higher, puts are being sold. Okay, when the blue turns up, we need the orange to turn up too, and the green is next expiration, not 0 day. I like to see all of these turn up.
I think that passes quickly and that we get stronger footing as the weeks progress.
Yeah, there's no doubt that's happening. Although, Josh, Robinhood up 3% today. That's one of the tells on whether people think retail traders are still in the game.
Well, that whole wing of the market is up.
Yeah.
Okay, so when the blue is dropping, that's telling you puts are being bought. The orange calls are being sold. When the blue turns up, that's telling you puts are being sold. That produces positive gamma. And calls start moving up. That's the best condition you want to see.
Netflix. It's weird. As a shareholder, I'm reading these stories about
Low
them
tickle
for
at
some reason wanting to bid
-800.
for Warner Brothers, and I'm sort of not sure if I want them to win or not.
Okay, puts are still being bought.
Right? I mean, that's why it's 19% off his high. Yeah.
I'll do Oracle, Mike. I mean, I'm not saying that the ultimate bottom is in, but I do think it rallies into earnings next week.
All right, Shannon.
Financials, I think that there's a potential for recovery in some of the private equity firms as well as traditional money center banks.
And Joe?
Semi-equipment name Teradyne, I think it goes to 200.
200. Gotcha. All right, guys. Good to spend part of the hour with you.
Thanks, Mike.
That does it for halftime. The exchange starts now.
Thank you, Mike. Football is well down there, by the way. Bitcoin is on the rebound today, and a code red has been issued.
Hedge flows back and forth like a sine wave. We don't have any edge unless you're fast. Okay, looking for a little bounce now, right on top of the put wall again. Again, I'm looking for a doji, spinning top. Buy calls at the low, sell puts at the, buy puts at the high. Rejection. I did take an iron condor on Marvell. Okay, looking at these, stocks still look good. Goldman Sachs, Microsoft, Honeywell, NVIDIA, Apple.
Issuing a code red at an OpenAI to focus all efforts on improving the quality of ChatGPT. Meanwhile, Apple is shaking up its own leadership for the AI world, and Amazon is rolling out a new in-house chip. We've got a full team here to discuss it.
Salesforce, CRM looks good. Amazon, grinding higher. Amgen, it's okay. Let's look at the S&P 500. Boeing, top of the list, gapping about 200. Intel, having a big day today. Intel. Intel doing well. I did buy more of the June 40-50 call verticals. Okay, Intel's doing well. So when you get these spinning top kind of days, all right, if you can get used to the idea of buying puts at the high of the day at rejection, taking profits when MACD turns back up, and then buying calls at the low of the day in a spinning top situation, range bound, look for prices to turn back up and confirmed by MACD turning up If you can get used to doing that, you could trade intraday. But for now, for those of you who aren't day traders, people getting chopped up. So buy calls at the low of the day, buy puts at the high of the day. Okay, in a range bound condition. Right now, we're just bouncing back up. Palantir dipping again, turning back up.
Maybe ChatGPT had gotten too cold. They're getting simple answers wrong. So again, it's sort of just this idea that this is their crown jewel, but also their single point of failure. It also sort of makes clear that OpenAI hasn't diversified all that well. Everything is still riding on this chatbot that is vulnerable to big moves from the likes of Google, Gemini, and Anthropic.
Okay, Tay, jump in here because I know, look, we've all seen the headlines about how great the Google Gemini model is, and that's fine. But I'm already noticing that as a user, I'm kind of defaulting to ChatGPT because that's just where I've had my history. I have my history, I have my searches, it knows me, and I don't want to spend that kind of time with someone new. And I know that you're a little bit skeptical as well of the idea that Gemini is going to suddenly come in and eat the company's lunch, but obviously...
I know. I used Gemini the other day, and it gave me some erroneous numbers. I had to revise some things. You can't take all of these things verbatim. You got to do your own research.
ChatGPT's market share, like you said, the personalization, the memory, and all the workflows, they're going to come back. I actually think that Gemini and Claude Opus from Anthropic, what happened over the last 2 weeks when both models kind of beat each other and did really well in the benchmarks, that's extremely bullish for the entire AI adoption, AI progress space. It shows that the scaling laws are still intact.
MACD still turned down.
I expect ChatGPT and OpenAI, when they train the new models on the new Blackwell NVL72 clusters that just went live at Microsoft data centers in October, those clusters are so much more powerful. When they train the new models on those Blackwell servers, ChatGPT will come right back.
Steve, jump in here.
Yeah, let me tie this all together. What Deirdre and Tay just said, and we can all flow it back to Apple. So you have engagement, right? This engagement problem with OpenAI. You have this idea that the models are performing better and you have to spend than each other and kind of leapfrogging each other.
It's a little after 1 o'clock. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is December the 2nd. I'm going to take a 2-minute break, and I'll be right back.
As they originally pitched it, which was, hey, it's going to use all the personal stuff on your phone in a private way. You talked about memory, Kelly, how that is a great thing that you like about ChatGPT. Well, what if the chatbot could also tie into your email? What if it could tie into your text messages? What if it could tie into everything on your phone in a private way? It would be even more useful. That is the pitch Apple's going to make in a few months' time, early next year, when they release this chatbot. So we're seeing this wide open pie basically continue to get bigger as they all chase each other. One other thing, we talk about engagement. Huge red flag when you have OpenAI talking about this, because we've seen this throughout the tech industry in Web 2.0 with social media networks. When they need to boost engagement, they do some junky things. You know, that whether that's weird push notifications, the thing you get when you talk to ChatGPT is always asking you, can I help you with something else, Kelly? Can I help you with something else? And then, of course, you get into these lawsuits about suicides and self-harm and so forth. OpenAI has yet to prove that it takes that balance of safety and growth as seriously as maybe it should. So one red flag I had when I hear all these, code red within OpenAI, and perhaps Deirdre can add on to this, is what changes can we expect to see to boost the engagement? Are they going to change it to be more sycophantic again? Are they, what are they going to do here in order to get that engagement growing the way it was growing? And that's something to be concerned about.
Steve, that's a great question. Let me help you out with that. That's what it would say. Deirdre, jump in here.
Yeah, and I wonder, what is that going to cost OpenAI, right? Because their model is a little different. And what we saw with Gemini is that they built a world-class model using TPUs. That is such a key point. Google is able to do things like distribute it through AI mode, potentially billions of users. Question, what's going to power the Apple chatbot? Is it going to be Gemini? We know that TCUs have brought down the cost. And that's a huge advantage that Google now has over OpenAI, or maybe OpenAI, it's already been reported,
going to turn more to TPUs as well. I'm sure Tay has thoughts on this.
Go ahead, Tay.
I think all this discussion about TPUs is really amusing because Google released the specs in Ironwood back in April, and now everyone's surprised. There's this thing called TPU that exists. NVIDIA's NVL72
It's not that though, Tay, is it? It's the fact that they trained Gemini 3, which is the leading model right now, fully on TPUs, because you can say all those things, but the proof is in the pudding, isn't it?
Well, Anthropic just beat Gemini, even though part of that
trained
is
on TPUs.
Yes, but like I said, the NVL72 GB300 Blackwell, which is a much more performant version of the NVIDIA chips, have just gone live in October. And when OpenAI trains their latest models on those chips, it's going to be much more performant.
Guys, what's a TPU again?
Tensor Processing Unit.
Okay.
Their custom AI chip that's unique to Google. You need to be on the Google Cloud to use it, which was sort of a knock against why people would use TPUs, right? Meta doesn't want to put all of its business onto Google Cloud, but the fact that they're more performant, we can show you an element too over NVIDIA's chips. I think we're just only seeing the beginning of it.
What is it? Go ahead, Tay. How does that make it different from I understand, I know the CPU, I grew up in the 90s. I know the GPU, Tay. What is it? What exactly is a TPU?
EPU is similar to GPU, but GPU is more flexible, but it's basically an ASIC, a fixed function ASIC that is kind of made to do AI workloads that Google has worked on for over 10 years. Google talks about all these specs and performance metrics, whatever, but the reality is those are specs. And when you have to integrate the entire systems, all that stuff in real life,
No, let's get still sitting here. Could go either way. Hedge flows. Hedge flows still very choppy.
As a software company that makes chips, right? So just please integrate all of these themes.
So basically, TPUs is the AI chips that Google makes, and it's primarily used for internal workloads, and it competes with NVIDIA GPUs. They're similar, except GPUs are slightly more flexible overall. But the funny thing about everyone talks about TPUs, Morgan Stanley said the actual amount of TPUs that were made this year were down, and Google market share for NVIDIA GPUs at Google Cloud went up this year. And people are freaking out about this Meta deal, several $1 billion in 2027. Let's put that in context. If it's a $3 billion deal, that's less than 1%.
Here, Reddit. Let's go look at Reddit.
Everyone freaks out, but the reality is all this is good because we're in a massively supply constrained environment. So everyone's like dying for compute capacity, and that's why people are going to NVIDIA, people are looking at Google.
Yeah.
But I think the reality is we're in this overwhelming demand situation, and everything is
Reddit Doji.
I was just going to say, yes, we're in a cycle where everyone wants this demand, but NVIDIA sort of has the dominant position. Tay, are you saying that that's just going to continue unfettered, that other hyperscalers are going to look at these efficient TPUs and say, okay, if we can't get our hands on enough GPUs, we're going to go for them? Do you really think that NVIDIA can just keep the dominance that it has, even with TPUs? We heard from Amazon today with their own custom AI chips.
So I'm very confident NVIDIA is going to be dominant over TPUs. If you look at the customers...
The same dominance, though?
Yes. Maybe it'll go from a couple percent to 5% in a couple of years. That's a big deal.
Big move, isn't it?
When the market is growing at 50% per year and you lose a few percentage points. And if you actually look at the customers, it's really only Meta, like Amazon and Microsoft, the major hyperscaler buyers. They're not going to buy Google TPUs because they compete with them on the cloud side. And there's only a handful of startups that have the software sophistication to actually put TPUs to use. The vast majority of enterprises, corporations, sovereign cloud are going to use NVIDIA because it's the most optimized chip. They do the best performance every year on this annual cadence. And they don't have the crack software engineers that a handful of AI model startups have.
I love it. I appreciate this. Steve, I thought it was noteworthy, by the way, as well. We talked about Apple kind of being a side story in many ways to this, and we've talked about some of the changes they're making. Stock was still at an all-time high yesterday.
And today, too.
And today as well.
Yeah.
What does that tell us?
And so much of that, Loop Capital actually getting them upgrade, almost has nothing to do with artificial intelligence, Kelly, because this is going to be a free product. You spend $20 a month on ChatGPT, Apple's going to give you, or at least they say they're going to give you, a very similar, perhaps better, more personal experience for $0. You just buy the phone and it comes with it.
to the chip point, they're also doing something very different that allows them to build
Okay,
systems that work
Bitcoin. We're still looking for some follow through in Bitcoin. Okay, Bitcoin's been pretty active today. Nice rally. MicroStrategy, MSTR, gapping up. After bottoming yesterday, we had a nice hammer. Nice hammer yesterday. So this is looking really good for MicroStrategy strategy. Looking for this to move back towards the 20-day. That's the fair value in the short term. Fair value in the short term is the 20-day moving average. Fair value in the intermediate term is the 50-day moving average. Looking for prices to move back to the fair value short term of 200.
And notably, Bitcoin is back above 90K. But as we discussed yesterday, AI, as much as you want to debate the ins and
All right, so that looks good. What about IBIT? IBIT. Nice turn. BMNR. Turn. IBIT. IBIT. That looks good. BITX. Riot blockchain. Okay, looking for more upside. Riot.
Thanks for coming in. Did I characterize that correctly? And by the way, kudos. What do we call II now? Xtel. Thank you. Number one strategist for that call all year long. That there's something bigger taking place here. So tell us what that is.
Intel having a good day. Intel, I have the 40-50 call vertical for June. Okay, we're heading in the right direction. I would like to sell these, eventually take the profits and buy some shares. Looks like Intel has started a new thing over the last few months. Okay, so it's definitely a big base that lasted a year-long base, breaking out on news and partnerships. Okay, so 50 is a recent high. Obviously, you don't want to buy the high of the week right here or the high of the day, but if you get an ABCD pattern, maybe you get something you can buy here.
If I could put it as the eureka moment as I was reading your work, it occurred to me like this. I keep thinking about, softening employment data and falling interest rates and rate cuts as the end of a cycle, right? That's what was happening in 2008. The economy's softening, the Fed's behind the curve, they're trying to catch up, and that's a bearish sign. But then I read what you're talking about. You go back to inflationary episodes where that's the top concern for the market. And once you have employment softening and the Fed's cutting, then that means you're through the bear market. That actually is the beginning, possibly, of a rally and a broadening.
Reddit or DDT. Reddit off the highs of the day. Looking for this to turn back up. Reddit.
Does that give you any concern, though? Like, we'd be building on a rally that's been so strong for the past few years.
Well, I think we have to compartmentalize the rally and where it's come from. We had a big bear market.
Okay, so ACWI is the all world index minus the US. Okay, all the companies out there around the world. This is the best of the best. ACWI, MSCI, all world index. Okay, US is excluded from this one, so that looked pretty good. That's on the watch list. Apple on the watch list, obviously that's doing well. Apple. App 11, number 3 on the watch list. That's doing well so far this week. Okay, for the week. Apple for the week, App 11 for the week is up 10.5%. Okay, AROC, AROC. This is one I added. Don't know a whole lot about the company. Looked pretty good. Not getting much movement. AROC, probably take that one off the watch list. Bloom Energy, that's one that Frano brings to our attention from time to time. Bloom Energy, higher watch list. CTRE. Care Trust, it's a REIT. Okay, speaking of REITs, how are the builders doing? Builders are flagging. Toll Brothers, DHI, DR Horton, Lennar. These are all flagging. What about the casinos? Caesars still moving higher. MGM, little dip this morning, but following through. MGM, Wynn Resorts. Okay, that looks okay. Las Vegas Sands. Okay, consolidating.
People have gotten so bearish on these parts of the market.
And look at the ISM again yesterday.
And it's still
XBI, the biotechs, those given a couple of days of consolidation.
suggests that finally
Energy,
2026 will start
not
to
so
see that
much.
get
Financials,
expansion. Up until 3
Doji,
months ago, we were not seeing
industrials, Caterpillar
What are those signals, by the way?
is one. Caterpillar looking good. Boeing looking good. Gapping up. So if you like Boeing, I would be considering maybe some consolidation, maybe even an iron condor here. Sell below the recent lows and sell above the recent highs. Let me put together a trade like that. Let's see, 225 to Boeing. Let's see, Boeing, BA, Boeing. 17 days. Let's see what we can get here on Boeing. Boeing. Sell an iron condor on Boeing now that it's near the highs of the day. Boeing. Let's see. 15 delta is a 220. Okay, that's up here near the recent highs and the 50 days in between. Okay, so let's see. 220 is 14 delta. 10 delta is 225. 220. Let's look at 220. Sell the 220, buy the 225. And on the put side, down below this, 175, 175, and 170, 170. That's only $45 credit. Okay, that's not much. Oh, you know why? We need to go out a little ways. Go out, say, January. $1.20 credit.
The Russell's still only up 12 points this year. The Nasdaq, I think, is up 21. Do we get
$1.20
growth among smaller companies? Do we get really strong performance, or do you still view it as having significant headwinds where
January 16? Okay, so the 220 is what? 220 is a 26 delta. Okay, so 225. Just looking at a potential iron condor on Boeing, 225, 230. Boeing doesn't have a lot of history of making big moves to the upside over a short period of time. 225, 230. Put side. Okay, something a little closer, like the 190. 180. 180 is 11. Oh, no wonder this isn't giving us any credit. 175. 185 would be below the 21 day. 185. 180.
Always good to check in with. Gives us hope. Michael Kantrowitz.
$123 credit. So $1,230 credit for 10 of these.
The crypto-related companies like Circle, Robinhood, Bullish, and Strategy. Strategy's up.
Okay, let me just check real quick.
Of course, these names were crushed recently. Circle's down more than
Boeing.
70% from its recent highs and almost fell all the way back to its
Let's see, Boeing.
We'll delve more into it next. Plus, Bank of America says those small caps could be poised for a big recovery next year. We were just
Boeing.
talking about it. They're going to give us
Okay, Boeing, very expensive.
themes that they say are also emerging. That's ahead on the exchange.
This is The Exchange on CNBC.
Okay, I sold a January iron condor on Boeing with the idea that this is probably going to grind higher. But right now it's a bit overbought. I'm thinking it's going to consolidate here for the next few days. Okay, can we get a rally? Can we get a rally? End of day rally? S&P. Caterpillar. Caterpillar, of course, looking good. Caterpillar. Okay, S&P 500. Oh, let me go check my lunch. That's a timer for my lunch. I'll be right back.
SMX.
And that
513 resistance level. So when we look at our moving averages here, we are right on the money here with our 21-day exponential moving average in yellow. That comes in right around 516.50 or so. Just below, we have our orange 63-day EMA coming in right around 502. So those would be some short-term areas to be on the lookout for potential support and resistance. Meanwhile, RSI is improving somewhat for the bulls. Our downward sloping trend line has been broken, and we are on the verge of crossing above that 50 midline here as well. So now we can see when we finally show our volume profile study, the volume starts to really drop off once we start getting too far above 505, 510 or so. So this would be more of a thinly traded area to be on the lookout for here. We can see, though, that our yearly linear regression line, our fair value line, our line of best fit, just above current prices right here. So that comes in around 516, 517 as well. To the downside, though, finally, -1 standard deviation channel comes in right around 460 or so.
Okay, yeah, and a name that is definitely a great barometer for the overall cybersecurity as well as enterprise spend aspect of technology. So it's going to be a critical report as we still have, of course, have earnings, just not our behemoths as we have the bulk of tech that is already reported. So now with all this in mind, considering that this name has been, all over the board as far as its post-earnings moves, Alex, how do you think through trading this name?
Yeah, neutral to bullish strategy, using some of that support levels that Rick talked about to keep, this one above those levels, hoping that they hold despite the sort of more sideways performance that we've seen as of late from CrowdStrike. It goes out to next week's expiration. So that's the December 12th expiration, not this Friday's December 5th. It's the 475, 470 put vertical spread done for a credit. Now, this was more of looking to go to that 475 level to stay below some of those key levels and less about trying to get a credit. So what you'll notice is that for $1 credit, it actually has a little bit worse risk reward than what we typically look at. In this case, you'd be risking $400 and only can make 100. It does only go out until next week. There is this earnings event that's largely going to determine whether or not this trade, from an example standpoint, would work. But with that break even 474, looking for support to hold. Rick talked about there not being a ton of volume above. So if there's some good news, perhaps the stock does go back to the highs, but you don't need that to happen for this one. Just stay above 475 through the end of next week.
Okay, yeah, and this one, thank goodness, we're not looking at 2026 expirations quite yet, as this is more of that earnings pure play. But now shifting gears to Okta, which also operates in a very similar space, also has earnings out after the close, also is higher today by about 1.3%, but very different trend we've seen as of late. So what does the charts really show you?
Yes, this one you could describe as more of a downward sloping channel type shape here. What we would do is after we had our significant earnings gap down, we look for our high point, and then we connect the subsequent highs. You can see that they line up fairly well here. But you can also duplicate it, try to match it up with the low points here to give you another accompanying boundary here. So notably during our last decline, where we did hit our 52-week lows of 76.35, we didn't actually touch on that line. So we had our intraday low of 76.35. We had our worst close of 78.32. In the shorter term, those would be the important areas to be on the lookout for to the downside. But when we look to the upside, 87.15 is the first level that really stands out here because we can see it was high points and then low points here after price broke to the upside. Didn't quite touch there, but once again here and during this period as well. So a repeated sticking point for price. Also notice here that after the breakdown, that was where we failed to overtake that level. Once again, the rally stalled out around that point. So that seems like the level to watch to the upside. When we do look at our moving average studies, we can see that our closest moving average to current prices is the 21-day EMA just below 83. So that could be one area to watch here. Our orange 63-day EMA lines up very closely with that 87 level as well. RSI still in bearish territory here, but out of the oversold area, making new relative highs as well. Finally, when we look at our volume profile study, we can see that the areas of interest according to this metric here, first we have our point of control, the heaviest trading area of all. That comes in just above 91. But then we have two smaller nodes here and here, right around 80 and 83, 84 or so. So those would be some other levels to be on the lookout for price to clear if the bulls hope to resume an uptrend here.
Okay, yeah, and hopefully we can see earnings provide enough of a catalyst for a meaningful breakout, as we're definitely in need of one here, as we've been in this sort of downward trend, as you pointed out, Rick. So appreciate that to Rick, our chart master. And now, of course, last but not least, as we think through trading Octa for example purposes, say leaning in, though, to more of a continuation of the trend.
And perhaps it's trending downward.
Smaller regional banks like Huntington Bank shares continues higher
From an example standpoint, a strategy we don't often
from the watch list.
put diagonal spread. And what this does is it actually just increases the margin.
Intel from the watch list, obviously doing well today.
Looking at what would have been maybe a move to the lows would have been
Micron
but by
looks
making
good.
it a diagonal, you actually change the risk profile. You tilt it on its side a little bit, and you remove that theoretical downside risk. So there's still a best case scenario in this 75, 73 put diagonal spread done for $1, which is a move right to the 73 level, which is basically where that short option would be. But if it does overshoot, you can see it levels off for around a $1 profit, which would be 100. So as done as it is here with the $1 debit, means you have $100 in risk, Jenny. But this is a bearish strategy. Make no mistake. You need a move lower. It is risk defined, though. The expiration, sell this Friday, buy next. So similar kind of expiration time frame as the one that we looked at for CrowdStrike.
And then you do have a bit of duration. I guess it's not a true earnings pure play. You're not looking at like expiration that is.
But I would say, if Octo moves up a lot around earnings, probably running out of time, let's say, for it to turn around. You're going to need a down move post earnings more than likely.
Yes, and of course, like you said, risk defined. Max loss is, of course, at $100 a share, so you at least know your risk going into this type of example trade. We'll leave it there, though, for Chartmaster today. Now, coming up next, it's time to dive into Apple, as we're seeing some leadership shake up from its C-suite, as well as more particularly in its AI division. Apple shares, though, shaking this off, as we're up about 0.75% on the session.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me and my advisor, Jennifer, Tues with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Welcome back to Next Gen Investing. It's now time for FOMO. Joining us is Marley Caden, host for the Schwab Network, of course, and we are talking Apple today, which is seeing some news and developments regarding its AI division. I know that's why this is, I think, becoming such a big deal, as we've discussed the story at length. But Walk us through it here and really like the broader implications that are being perhaps seen by the market.
Sure. I mean, first we'll cover the story itself. Their head of AI, his name is John D'Andrea, is their SVP of Machine Learning and AI Strategy. He's retiring, stepping down from his position. He'll be in an advisory role before retiring in the spring of 2026. They've also announced simultaneously that with that retirement, they've hired renowned AI researcher Amar Subramanya to replace him as the VP of AI. Now, Subramanya will lead critical areas, including Apple's foundation models, its machine learning research, and its AI safety and evaluation units. The balance of D'Andrea's previous organization will shift to additional employees at Apple that will align more closely with the structure that the company currently uses. Now, D'Andrea has played what Apple calls a significant role in the company's AI and machine learning strategy, building a world-class team, and then developing some of the AI technology that they have. But with that said, we have to acknowledge that Apple's pretty widely considered to be a laggard in this AI race, particularly in the Mag 7 group. So let's talk about who they're bringing in place. Subramanya has most recently served as the corporate VP of AI at Microsoft. Prior to that, spent 16 years at Google, where he was the head of engineering for Google's Gemini assistant prior to his departure. He has deep expertise in both AI and in machine learning research, and in integrating that research into products and features that could potentially be important to Apple's ongoing innovation and future intelligence features. Now, some big parts of why Apple's considered a laggard, I think, are important to address here, because I don't want to make a blanket statement about thoughts and not some AI features compared to
all right. So
Samsung in the phone space. They've been quicker to refresh their devices with AI. Siri is now considered a limited AI assistant by comparison to ChatGPT. Siri's been a big point of criticism. Also, they delayed some of their feature rollouts. They have their Apple Intelligence features, including some major improvements to Siri. Those were announced back in 2024. They're now delayed till mid-2026. So, a 2-year window to push a release when there are chatbots widely available. I mean, we've been talking all the past week about Google Gemini 2.0. Apple's still on Siri for 2024. So it's very interesting to look at it like that.
It is, and I guess the counter, and this is going to be my question either way. So, I just wonder, though, and I know this is a very
all right, moving back down towards the low of the day. Not getting much traction here today.
I'm thinking personally, like, what would get me to get an Android phone? And I don't know what would have to happen. And I know I'm speaking just for me, but it would need to be significantly different, because I'm just so entrenched in the Apple ecosystem. Not because I like it necessarily, but because I know how to use it. It's consistent. I think that's what they've done so well, really going on 15, 20 years now, is they've made changes, but for the most part, it's just been subtle improvements. It largely looks the same as it did on the iPhone 4, the little bubbles on the screen. That's, I'm used to using it. So I don't know if you guys have thoughts, either one of you, but like, what would happen?
Okay, so continuing on with what we were talking about before, S&P 500 stocks that are leading, these will probably continue to lead during the day. Teradyne, following through, Teradyne, GE Vernova turning higher, GE Vernova trying to break this downtrend. United Airlines breaking higher, so the airlines might get a bid here. American Airlines. Holiday spending. JBLU, JetBlue, Delta Airlines.
Alex, I'm going to reveal a little bit about my upbringing right now. My parents met in law school, so I actually have a counter narrative and strategy section in my notes to back off the other side, the devil's advocate side of what I just said.
Okay, what's Alaska Airlines look like? ALK.
Apple has consistently
Turning.
had an approach that prioritizes quality, privacy, and efficiency. And those are the things you just said. You're so entrenched in their ecosystem. You know that it works for you. It's all tied together. Why would you change? An AI assistant for you, and for me too, is not enough to make me move. So they have, and also we've talked about that they avoid the hype cycle. That's not their strategy. They're often late to the game, but they emerge victorious every single time. They're very much that person in the corner of the party who watches everything going on, and then they come up with the best idea, and all of a sudden they're at the center of the dance floor. Also, they have a very specific long-term vision with a senior, they have a superior user experience. That's just been their brand, and that's why people don't leave Apple.
Lots of chop.
There is an argument that is made in a lot of analyst notes on Apple, most of which are bullish, saying that they believe they're attempting to replicate that. They simply won't be rushed because
MasterCard, that looks okay. What about Marriott Hotels, Royal Caribbean Cruise Lines? Not much there. Hilton, Hyatt. Okay.
It's almost like it got more extreme though under Tim Cook. They were more financialized. They were a little bit slower.
XLP, dipping. XLY, consumer discretionary, doing okay. Walmart, continuation on Walmart. Looks like it'll just keep going into year end. Walmart.
Like my least favorite kind of color commentators, but no, I mean it's true though. You're fully entrenched in the ecosystem. It's one that I have the iPhone 17. I'm as loyal as it comes, unfortunately.
But even the wearables, the headphones, they dominate those markets. They certainly didn't innovate.
That's true. I mean, they just basically took various designs and made them their Apple their own, frankly. And so that's the recipe that seemingly works. And what's amazing is not one of us have really continued to discuss the fact that their AI head is exiting. I mean, he's retiring. I don't know why this seemingly is all over the headlines today. I do not think this signals anything is going awry with their AI division.
Yeah, well, at some point they're going to have to, guys. They're going to have to compete in AI. It just maybe isn't today, but they need to show the street that they are trying. And I think that's what this.
Okay, hedge flows.
When in doubt, just look at the stock price. The stock price being up $2 today, I think helps. But Jenny was saying before the break on the last segment, she was worried about 2026 example trades. Well, unfortunately, guys, I got a trade going to 2026 expiration. Looking at a call butterfly spread that expires in January of 2026 on the 2nd, though. So this is kind of like a year-end trade. And I thought, with Apple closing in on potentially a $300 share price here, maybe you think that'll happen right around year-end. And you think that this move will continue happening. If you do, the 290 310 call butterfly spread for a $2 debit may make sense. With that,
lots of negative gamma overhead.
292 and then also 308. So it has to land between those two levels. And the closer to 300 it is by year end, the better this one will perform. Has a more pyramid-like shaped risk profile here, peaking out at 800 if it perfectly pinned 300 on expiration day. So kind of a fun way to look at an example in Apple, looking for some upside to that round number by year end.
Yeah, and Apple, I mean, all of our
Very difficult condition to buy or sell premium on the S&P with this back and forth action. I mean, you can sell premium overhead and below, but these hedge flows just keep going back and forth, back and forth. There go the puts now. Puts catching a bid.
Now, coming up next, it's time to dive into Boeing, one of the market's best performing stocks today, as we are seeing some notes that it could be cash flow positive for its first time on a yearly basis since 2023. We'll also be discussing the consumer credit situation, especially following Cyber Monday and Black Friday.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Okay, back and forth, back and forth. So Doji spinning top is the rule today. Spinning top on the daily. Just staying inside of a range, most likely. We were looking for consolidation this week. As we mentioned last week, as we ran up, the speed of that move was pretty quick. We stopped just shy of recent highs, and just looking for consolidation this week. One of the things that Brent was mentioning also. So
the overall market today, that is Boeing, which is pacing for its largest percentage increase since April of earlier this year. So, I mean, a really nice spike today, hopefully turning now cash flow positive. But here to tell us more on the update from the company is Dan King Hall, the host of Morning Movers. So, Dan, walk us through all the upside, because we're still up. I mean, 8.8% here in real time.
Yeah, almost 9%. Earlier it was
not much to do.
9% off the bat.
We sell some premium. We did sell some premium. Okay, MongoDB. Let's see what that's looking like. MongoDB back to 405. So it'd be nice to see this slip down below 395 over the next couple of days.
Annual free cash flow in 2026. They're projecting low single-digit billions. That's after this expected $2 billion cash burn this year. It would be a major milestone after years of challenges and speed bumps for the company, especially, you continue to have that turbulence last year, but it looks like they are turning the corner on this. The CFO saying that the recovery trajectory looks solid for when we're thinking about production
S&P.
factories, especially for the 737 MAX.
Big range, back and forth, back and forth.
They're working down their inventory of undelivered jets. As you know, that's way
big range.
but they're moving those now. Their defense and service businesses.
So we can't run back up to 6850, 6840.
The certification for the 777X that will come in 2027 is delayed, but it finally has a date on that is closer rather than later. 737 MAX 10, they are expecting certification of that in 2026.
So,
but next year they are projecting higher deliveries again for both the
Booking.com up 250 points. Estee Lauder, good holiday gifts. Always in the front of the store when you walk in. What's Macy's doing? They were building Macy's, right? $23. Macy's trending. I like Walmart into the holidays. Walmart looking for continuation. I still have some January 100 calls left on Walmart. Those are $11.50 in the money. Looking good. Okay, hedge flows still messing around down here. We're holding this low. 68.15.
I should say, but appreciate it, Diane King Hall, host of Morning Movers, for that breakdown. But now to shift gears and discuss more on consumer credit trends that we are seeing. And I'd like to welcome in Susan Fay, EVP and Chief Digital Officer at VantageScore. So Susan, thank you so much for being with us on this Tuesday. So from your notes, I've gathered that we're seeing this spike in late payments from these lower income consumers. What's really driving this?
So thank you for having me. So the average VantageScore credit score remains at 701. It's been at this level for about 4 months. And so overall, we would say that the consumer is fairly resilient. We are seeing like a bifurcation within the categories when you look at the different income levels. So lower income consumers.
So Boeing forecasted higher 737, 787 deliveries in 2026. All right, they have the Spirit Aerosystems buyout set to close. They're the ones that screwed up the rear of the plane fuselage with the doors that blew out and all that stuff.
Labor market softening, and then just limited access to credit. And so we're seeing that.
So they're buying that back.
Lower income versus the high income, but there's no doubt about it. Consumers are still spending.
Boeing CFO says expects free cash flow growth in the low single digits next year. The CFO at Boeing signaling higher 737, 787 deliveries in 2026. That's good.
The struggle is very real for part of the economy, and elsewhere maybe not so much, especially those who have investments in the market and things that have appreciated in value, and they've taken advantage of that. My question to you is anything that you guys are seeing showing maybe trends of maybe demographic or geographical region? And beyond that, is it worrisome yet? Or is it just kind of the natural trajectory of an economy as it goes through, its peaks and troughs?
So thanks for that question, Alex. What we're seeing when we look at like the data by generation, so from the post-pandemic through 2022, Gen Zs in the 60-day past due category definitely were performing worse. And this was due mainly because they were new to credit. They didn't have a lot of access to credit. But starting in
S&P 500.
through this year,
I'd love to see them take out these stops overhead.
is actually overtaking that as far
S&P
as
500.
delinquencies in the Gen X.
Palantir's trying to get a lift here. Palantir. Top 10 stocks on the NASDAQ 100. Intel, number one. I do have the 40-50 call verticals for June on Intel. Those are doing well. Number two is MSTR, MicroStrategy. Strategy. NXP Semiconductors is number 3 on the NASDAQ 100. Shopify, number 4. AppLovin, number 5. Let's take a look at these real quick. Okay, here is Intel. Intel having a really good day. Intel. Follow through on that Friday pop. MSTR. Coming off the low. I did buy some MSTR. I'll tell you what I have. I think I mentioned it and posted it in the room. Let's see.
But we're definitely watching out on the lower income consumer. They are definitely the most stressed in the current environment.
Susan, if we continue on this trajectory, are we to the point yet where
190-200 for February? 190-200 for February. So that's not too far away. 190-200. So what I'll do is I have the February 190-200 looking for Bitcoin to continue the rally. If we get up to 200, obviously that's my max profit. I'll just roll those out another month and just keep doing that until I see price action giving us reason to sell, because RSI is coming off the low, turning back up. That's looking good. MACD's crossing, stochastics rising. We got a hammer yesterday. All conditions are set. Once we get above these volume by price bands over on the left over here, we'll move into the Kirby. Fewer trades have gone off there. Okay, looking for this to turn up. See this big indent? That shows you there wasn't a lot of volume that traded down here. So consequently, fewer reasons to expect resistance on the way back up. Okay. All right. Let's see if we can salvage this day at all.
I'd like to now welcome in George Tillis, Senior Markets Correspondent for the Schwab Network. And so, George, we're seeing a pretty optimistic note out of Truist today on Six Flags, which has one of my favorite tickers now of all time. One we don't discuss that often, but up 2.5% on the Six.
Let's see, what's Credo?
Yeah,
Credo doing?
I followed this stock, or actually covered it a couple times in the past, I would say, year.
Credo Doji moving back down into the range.
If you look at the symbol, it's FUN, and that's a function of Cedar Fair's, which was
okay, we took the puts off at the high of the day. As this drifts lower, hopefully we'll pull back a little bit more. I can take the calls off for a nice profit. Okay. Credo, let me see what I can get the call out. What the calls now? Let's see. $45 for the calls? Huh. I might go ahead and do that. I'm going to go ahead and do that. See if I can get out for 45 bucks. $45. Okay. I'm out of Credo calls. I'm out of the whole trade now. Credo done.
Their price target on Six Flags to 23 from 27. The reason being is effectively there's a huge activist investor pool
trying to essentially divest the amusement park business from the real estate assets. Right now, the combined company includes the business and ownership of the majority of assets, which include about 38 U.S. parks in total, amusement parks and water parks and such. They do have international properties as well. But nonetheless, the challenge for the business has been some decelerating, still positive, but still decelerating top-line sales growth. And effectively, in the last year, the company wrote down about $1.5 billion in asset write-downs, which actually put a lot of pressure on the shares as well.
George, it looks like the attendance numbers have actually been pretty healthy in terms of growth.
See if we get a rally end of day.
Cut down on their margins because the attendance revenue has not kept pace with that.
Credo, I'm all out now.
My question to you, though, in a world of iPads and video games and smartphones, like, is just a business model that
Okay, I'm all out of this now.
Disney or Universal Studios, where it's branding and things behind the reason to go, that, like, maybe theme parks just aren't what they were 20 years ago, 30 years ago?
Yeah, I agree with you, Alex. I think there's something there. You know, you look at Disney, Universal, those businesses have branding, everything from, you know, film and content catalogs, caricatures, toys, and things like that. That mixes in with the entertainment component of the amusement park field of their business. I think that, you know, just a standalone amusement park like Six Flags, they are trying to bring in Warner Brothers and DC Comics to blend that together. That's part of the business strategy to become more so like a Universal.
225, 230.
But also, again, like Disney.
220.
But nonetheless, I think the synergies associated with the merger between Six Flags and Cedar Fair is just really has
230, 220.
and I do think, and you brought up a good point, that irrespective of the tickets that are sold to the amusement parks, those are relatively
Okay, let me just check these out. 225, 230.
person. In other words, spend
All
per
right,
customer just isn't there.
225.
So people are still spending on
225
tickets, they're just not spending a lot
sold.
on concessions,
230 bought.
additions. And that effectively is where there's higher margin in the business. But nonetheless,
Okay, and that is
I do
for
think that there's you know, some prospects here for the underlying stock, because I did notice that since the acquisition going back to 2023, the company has actually kept the share count relatively steady at around 100
January
million.
16.
Unfortunately, with
January 16.
the market capitalization of the business about $1.5 billion, they have about $5.2 billion in debt. So it's like 3.5 times their equity.
Okay.
They do have,
And the put side,
because if you look at the
185, 180.
property
185,
equipment, which
180.
is excluding debt, as well as, again, other liabilities, they have about 4.6 billion.
185.
So they can essentially do
180. Don't think they're coming back anytime soon to this area.
the real estate into a real estate investment trust, bring back cash, then of course lease the properties back over time through cash flows.
All right, sold the 185 put.
Some shareholders in a special dividend.
Bought the 180 put. Create a condor. Okay.
And I think that's an important part of the story here. You know, there's also some people think that the company's at risk of bankruptcy, but operationally wise,
Okay, let me just check the deltas here. I thought I wrote that down.
last year, the company
Boeing.
actually had a positive net income excluding that write-down. So for what it's worth, there's a lot of push and pull here, but I think the story here is still unique for
So 19 delta on the upside.
Of what we're seeing, of course, following that merger with Cedar Fair, as well as, of course, Six Flags. So I think
And the puts are 17 delta. 17 delta.
not bankruptcy concerns in the near future, as that makes me happy.
17.
I was a Hurricane Harbor enthusiast, which I do believe is one of their many brands now, but appreciate it. George Tillis, of course, contributor here for the Schwab Network. And Alex, we're ending the show pretty much where we began, as we're seeing still green across the board, but modest strength at that.
You know, we still got 2 hours plus till the closing bell, but we said if Mag 7 can hold on, market will probably hold on. Looks like that's been the case so far.
Yeah, green across.
Knock on wood.
Knock on wood is a good way to put it, but that'll do it for Next Gen Investing for this Tuesday. Of course, we have the watch list coming up next.
The credit. Following credit.
experienced investor, or just getting started, Charles Schwab offers a webcast that's right for you. The platforms and tools webcasts are
$1,250. $1,250.
of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Boeing. Okay, Boeing.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of
Oh, this chop is pain in the butt. That's all we're doing is consolidating. So if you're trying to trade S&P, it's very difficult. Back and forth, just killing premium.
Break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
All right, Boeing. I sold an iron condor. I posted that in the spreads channel. Okay, you can check that out. Tesla's dipping. Yeah, yes. Tesla.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the corner of Wall and Broad here at the New York Stock Exchange, right on the floor with the trader action around us. We have a big show for you today. We'll examine how the AI trade goes way beyond tech, touching multiple segments of the market, including utilities, financials, defense, and so much more. And of course, it's Technical Tuesday. That means Kevin Horner will join us and you'll get a closer look.
Can we get a rally in today? The institutions come in after 2 o'clock usually. Usually we'll get institutions to come in after 2 o'clock. See if they give us any indication that they're interested. My feeling is if I was a portfolio manager, I'd probably just sit and wait. Okay, I'd go play golf, do whatever. As long as the markets are right where they are, I got a feeling we're just going to consolidate this week. People are going to get tired of the market's going nowhere. They're going to make mistakes. They're going to try to trade the range. It's very difficult to trade this on the left. Okay, this chop back and forth. You can see it on Trace as well. The hedge flows back and forth, back and forth. So the dealers are doing the opposite. Okay, so as the markets move higher, they start hedging. That line starts dropping. Markets start to rally. The hedging flows turn back up, and just back and forth all day. Overall, the market, the dashboard is red. So that's telling you to be a little bit more safe. There's a lot of negative gamma right in this area. We want positive gamma. We want purple to show up. More purple will support prices better. Okay, here we go. We're starting to rally. So if you want to scalp it, maybe some calls here. If you want to scalp it, volume is picking up. Scalp it, maybe. Maybe a scalp if we get something going.
Yeah, this is going to be an interesting report, Nicole, because we have heard a lot about.
Other than that, I like to sell premium. We got stocks that have very wide Bollinger Bands like Boeing, MongoDB. I did roll those out to January for another $192 credit, $1,920 credit. Okay. I kept the same strike 390, and went 10 wide since they don't offer 395 for MongoDB in January. They offer 390 and then 400. So 10 wide on that one. It's posted in the alerts, the spreads channel. Credo completely out of that one with a profit. Dell, looking to get out of Dell as well. Dell, if you like selling premium, I do. I like to have 3 or 4 of those a week. That way you can average $500 a day just in selling premium. That's $10,000 a month. Why wouldn't you do that? Why wouldn't you bet the opposite of what everybody else is betting? The markets are fairly random, okay? Price action is fairly random, okay? It's not until you start to get a trend going that you can trade that, but markets are pretty random. So if you're selling premium, 15 deltas, you got an 85% probability of winning. Wouldn't you love to go to Vegas with an 85% probability of winning? Here we go. S&P's taking off. Long. Junk bonds turning up. Thank you, David. Okay. Junk is moving. That looks good. Thank you, David. 6860.
To increase as well, not only when it comes to the 737 MAX, but also the 787 Dreamliner. That's something that has been held up because of quality assurance controls and things of that nature. But overall, they are still optimistic, giving us a little bit more insights into their business. And
Palantir, I like to see Palantir turn up. Palantir does this thing. It runs up in the morning. You buy the dip. If it dips in the morning, you buy the dip. Palantir just got this character about it. He just keeps doing the same thing over and over and over again. If you notice that about a stock, start trading that stock. My son usually trades just NVIDIA, and he's been selling iron condors and credit spreads. He likes the idea of credit spreads. You don't have to be super accurate with a credit spread or an iron condor. All you have to understand is, what's the volatility telling you? Is volatility coming in? If it is, you want to sell that volatility. If volatility is expanding, maybe not the best time to sell premium, because you could probably sell for a better price once the volatility starts to peak and turn back down. But I can't say it enough. If you're afraid of iron condors for whatever reason, or credit spreads, you need to get over that. If you want to develop as a trader or as an investor, you need to learn how to sell premium. Let everybody else bet on what the market's going to do. You know, if you sell a 15 delta, look at Boeing here. Okay, look at Boeing. Okay, I sold a 17 delta. That's 185. You think this is going to drop 25, 20 points, 30 points? You think it's going to drop that much? You think it's going to rally 25 points in the next week or so? I don't plan on holding this to January. I just have that so that I can have it a little extra time in case I need to manage it. But 50 days probably going to run into resistance. It'll probably move above it maybe tomorrow. Come back down, just kind of consolidate here, right in between these short strikes. The red lines are the short strikes. So why wouldn't you do that? Makes no sense that you're not playing the game. Who do you think's making all the money out there? The dealer, not the dealer, the people that are selling the premium, right? I mean, they got everything hedged in their favor. Okay, let me see. That's too large. If you don't understand what I'm talking about, try to teach it as much as I can. I'm not a good teacher. This is very straightforward. Okay, so here, this is a deal with Boeing. Okay, so Boeing, I think price is going to stay somewhere around the 50-day moving average. Currently, that's what I'm thinking. Now, if it starts to trend upwards toward that 225, 230 zone, I got a couple of options. I can sell it, just double up on the lower position. I could double up on the puts. I could roll out. There's a lot of things I can do. But for now, why not take the credit? $1,250. I sold 10 of them. Now, when you sell premium, the broker is going to require you to put money aside. In my case, I need to put aside $2,000. The max loss. Okay. When new traders look at the max loss, it scares them. Why am I only getting $1,250 if I'm risking losing 2,500 or 2,000? I think it's closer to 2,500. Let me see. 3,000. Okay, so $3,000 out of my account, I just have to put aside. So just think that as putting that in a savings account and waiting for the trade to close. Once the trade is closed, you take it out of the savings account and you put it back into your trading account so you can use it. You sell another one. Okay. So you're selling 20 deltas. That's an 80% probability that we're not going to get close to that call side by expiration. Now, I won't hold it till expiration. I'll usually close it within 2 weeks of expiration. So with an iron condor, you sell the 185 in this case. You sell the 185. At the same time, you're buying the 180. Okay, so it's one trade. 185, 180 put. You sell the 185 put, you buy the 180. On the upside, at the same time, you're selling this one, you're selling this. 225, you're buying the 230. A 19 delta, 225, 230. You sell the 225, you buy the 230. This all happens in one trade, okay? You get the $1,250 in your account, and you wait. Now, what can happen is the upside, we can start to rally pretty hard, right? In which case you'll see the call side increase in value. You'll see a negative number on your side. All it's telling you is that you could have sold that call vertical for more money than you did yesterday or today. If tomorrow we up here and we're above the 50-day and just starts to bolt higher, I'll take this side off. But if you have any questions about what is going on in your account, just let me know. I'll tell you exactly what's going on. Okay, iron condor, you're expecting price to stay pretty much in this range, move up a little bit, move down a little bit, move sideways mostly, and that's it. RSI is rising, so I'm expecting a slight drift to the upside. News is good, MACD stochastics rising, so I'm expecting this to grind a bit higher. Because this is a 19 delta, the options market is not pricing in a test of this. It's an 81% probability against a test of 225, just based on options pricing and what the markets expect, implied volatility, etc. Now, the other thing that can happen is that Bollinger Bands can open up, volatility charts start to expand like crazy. And this credit that you sold for $1,250 today, you could probably sell for $150 tomorrow, or maybe $175 per credit, $1,750. You're not losing money. You're just experiencing an increase in the value of what you've already sold. You still win if we stay between the strikes. Okay, so prices will fluctuate. But there's always a way to get out. If it starts to move higher, we can either roll this one out, take it off, and double up on the bottom, or all three of those options, okay? Let's take a look at another example. Let's look at MongoDB. That's one that's in the money. Okay, I'm going to show you MongoDB, and then I'm going to shift to Oracle. All right, so we did that. We sold the credit spread $1,100. So this is a good example. It went in the money. So these calls that I sold are worth more now. Okay, so it looks like a negative on your end. That's a little deceiving. I rolled this because this could stay up here a little bit longer. I rolled this out to January. So that's one option that you could take. You could have also taken this whole thing off for a small loss. I don't recommend doing that. That's not the reason why we sold them. But look at this MongoDB. Etch that into your memory. We're in the money. Now look at Oracle. We took this trade back in September. Same thing happened. We went in the money. By the next day, profit takers saw that we weren't going to continue to move higher. They immediately started selling. That gave us an opportunity on the day of, when we gapped up, to roll out to November, 1 month, for another credit. And as this started to move lower, the rolled credit started to make money for us. And we just kept going. And look where we are right now. So what was scary before turned out to a big win, a big windfall for us selling premium. Okay. And I think all I did was sell call credits. I didn't sell the opposite side for earnings. Okay, so that's Oracle. What else? Dell. Okay, I had Dell. I took the call side off on Dell. Okay, here's a good example here too. Okay, here's Dell. So what did we do? Yesterday's price action dropped down to 127.76. So what happens when price action drops? The calls lose value. So if they lose value, that's a big plus for me. I sold an iron condor. So what I sold for $1, I can buy back for $30. All right, so I make $70 or $700 in profit in one day as it dropped just now, yesterday. So I sold this for $100, bought it back for $30, $70 credit profit times 10, $700. Now I still have these puts that I also want to take off. Okay, what happens when price action moves higher? Puts lose value. That's why I want to sell the premium, because I sell this for $100. It moves higher. I do what I did here. I buy it back for $30, $1,400 in profit. If I can close this for $30, I'll make $1,000 in profit. Sorry, $1,000 in profit. Okay. So why wouldn't you do this? You know, the markets, Bollinger Bands show you exactly what to anticipate. 95% of price action is going to be contained by Bollinger Bands. You can see the Keltner bands a little tighter. Okay, so I use both. So price action most likely will stay between the Keltner bands and the Bollinger bands, unless something changes, in which case I capitalize on that by price action staying inside of this area, this gray area. Why wouldn't you do that? Makes no sense why you wouldn't do it. It's just out of fear or not understanding what's going on. Boeing, Dell, Marvell. Oh, Marvell. I sold Marvell for earnings. Okay, Marvell. I sold a Marvell Iron Condor. Okay. So a 20 delta is the 110, 115 strike. So it's an 80% probability we'll be okay. The expected move is 10%. So it's trading $93. It's trading $93. So a $10 move. Okay. 103. 110 is a little bit beyond what's expected. Expected moves 10.5%. So I sell this. Sell the puts. Okay, just subtract $10, 10%. That would be $84. But I'm giving myself a little bit more room with a 17 delta. So instead of 84, I'm selling 80. Likelihood that the 50-day will hold price. It's in a bullish trend, range bound. I think it's more likely that we could get close to the upper strikes up here at 110, 100. Why wouldn't you do this? Why wouldn't you take $1,370? Even if you only get 50% of this, right? You get $700. Do that every day. You know that $500 a day is $10,000 a month average, right? If you can manage $700 a day, if you can manage $700 a day, that's $14,000 a month, right? If I did my math correct in my head, yeah. Why wouldn't you do that? There are times like MongoDB that you get caught and you have to manage the trade, but that's why I'm here. To show you how to manage it. Okay, what's the S&P doing? Learn how to sell premium. If you don't understand what I just went through, check out Invest with Henry. Invest with Henry on YouTube. He's an ex-Goldman Sachs trader. He's pretty good. The other thing you can do is if you have a subscription to Spot Gamma, you can look at Equity Hub, right? Let's put Marvell in here. Okay, Marvell is going to tell me where the majority of trades have taken place. All right, you can see this is Marvell. You can see on the left, the orange are calls, the blue are puts. Okay, the put wall's at 70. Put wall's at 70. Okay, I sold the 80. So I don't, even if we get down to 70, most likely we'll bounce back off of that level because dealers have an incentive to keep prices above the put wall and below the call wall. Okay, so 70, 75. You can see there's not a whole, this is where there's a lot of volume right here at the 80. So 80 is probably going to keep prices are probably going to stay above. You can see where these curves flatten out. That's where you want to be selling premium. Okay, so we sold the upside. We sold the 110, right? 110. We sold the 110. So here is 110. There's nothing there. And there's a little bit of volume there. It's probably sold volume. They probably sold those calls. There's no puts over here, so there's not likely that we're going to get up to 110. I can be wrong, but okay, MongoDB. Let's see what happened with MongoDB after the earnings. Let's see if we added anything here. MongoDB 400. Okay, there's some calls here. It looks like they're selling calls over here. 400 strike and below.
And beyond, they said that $10 billion long-term free cash goal is attainable at $10 billion. So what does that equate to? Well, that equates to more delivery because they don't get to generate that revenue and that free cash flow until they start delivering more planes. They did state, the CFO did state that deliveries in 2026 are already outpacing what they're going to do here in total for 2025. We've seen those orders pick up and the deliveries pick up a little bit, but this is positive news for traders that have been worried because the stock slid pretty significantly in the month of November. Now up about 15% on this big jump today, but still off about 16% from those 52-week highs that we saw recently. But on that news, we did see a lot of call activity in here today. Call volume is about 3.5 times normal daily average volume that we've seen over the last 5 trading sessions. One that stuck out to me was really short-term positioning in December 19 monthly options that expire in 7 just massive call
Okay,
in there.
so let's look at Boeing.
Here in
Boeing,
that I think investors are
Boeing, BA.
And look, I mean, we've had so many
Okay, so Boeing, upside, looks like they started selling premium above 210, 215, and below 180. 210, 180. 210, 180. 210, 180. 185. Okay, 210. Above 210. We're way up here at 225. Yeah, Boeing's going to be fine. Oh, this is so boring. As I thought, we might see prices just sit here. Our dealers, our portfolio managers interesting in buying up here? Probably not. So we're most likely just going to consolidate, get everybody frustrated. Okay. Now we could pull back. We could pull back in price. That's consolidation. Or we can consolidate in time, just move sideways and go nowhere. Okay, we rallied off that 6,500 level last week, 5 days straight. Okay, we saw that in S&P Equal Weight Index. We anticipated it with the S&P Equal Weight Index. How did we do that? We did it by watching the number of stocks that were trading above their 20-day. More than 72% of stocks were trading below their 20-day in the third week of November. We started to look at that and say, you know what? It's time to start looking at buying some things off of this low. Same thing with the number of stocks above the 50-day. Got close to 70% below the 50-day. What happened? Price action rallied. Now we're consolidating. That's all that's happening right now. So you have to be patient. Every day is not going to be a winning day unless you're selling premium. Every day is not going to be a winning day. Sometimes we're just going to sit here and chop people up. I don't see portfolio managers right now. That doesn't seem like they're interested in buying right here. We got to watch for a pivot. Okay, so we hit the red zone. This is drawn on here. The shading is added just to emphasize what we're looking at. As we rally, number of stocks trading above the 20-day, as it rallies from 70% below to only 20% below the 20-day, or conversely, if 30% are above the 20-day, all of a sudden we run up to 80% above the 20-day. What happens when we get overbought, overcrowded? We run into the red zone and you start thinking about taking profits. That's exactly what's happening right now. Let's look at junk bonds. Looking for risk on. We do. We have risk on. There's junk bonds. For you new members, always pay attention to junk bonds, okay? Junk bonds are a risky asset class. As such, individuals or firms that would buy risky junk bonds, these are bonds that are sold by risky companies that could go default, that can't afford or can't get the financing that, say, somebody like Google can get. This is a cheap company. This is somebody that's a small cap or micro cap company. They're trying to finance operations, so they sell junk bonds against their company. They have investors out there that will buy your junk bonds. The only time they'll do that is when they don't think the markets are going to crash or pull back. You can see what they do very quickly. They'll get out of the way when they think the markets might be susceptible to weakness. A famous junk bond trader by the name of Michael Milliken, you might have heard of him. That's how I got interested in investing back in the 80s. Michael Milliken and Ivan Boesky, they were sharing information, insider trading, okay? The book was called Den of Thieves. If you want some light reading, I find it very interesting. Okay, you can check that out. This is what got me interested in trading in the first place. Okay, Den of Thieves by James B. Stewart, not Jimmy Stewart, the actor, but the author. Den of Thieves, great book. I mean, you could read it over a weekend. You know, it's about what, 350 pages. if it takes you that long. Excellent, excellent book. It's what got me interested. Found out these guys were making tons of money. I'm like, oh man, I want to get involved in that. And so started my journey about 38 years ago. Great book. S&P just chopping people up. Okay, I'm going to take a 5-minute break. I'll be right back. I'm your host, Cosavini, coming to you from theclosingprint.com. It's December the 2nd, second trading day of the month. It's 2:28 p.m. We got an hour and a half to go. Be right back.
Movers for you to pay attention to. Right now, we're looking at MongoDB shares soared to new 52-week highs after revenue rose 19% in the third quarter, and the company raised full-year guidance. MongoDB CEO saying that agentic AI has yet to translate to real results, but that the company is in proper position for when agentic workloads shift to production. Stock is up nearly 75% this year. And then there's Apple stock, which is hitting new all-time highs today. The company's AI chief announcing his retirement after 7 years on the job. And that is John Gianandrea. Now, the former Microsoft and Google AI veteran, and that's Amar Subramanian, has joined Apple. It's new VP of AI. Wedbush says Apple's AI shakeup is the right move at a critical moment, and shows Tim Cook really intensifying the focus on AI. And we're going to be talking a lot of tech right now. Dale Smothers is with us, President, CEO of RGS Wealth Management. Dale, it's great to see you. Thank you so much for being here. Nice to see for folks the tech trade back, the crypto trade. What do you make of it? We're up 6 of 7 days. What do you think is the market's mindset these days?
Yeah, I think there was a lot of profit taking, Nicole. Clearly, there was this profit taking all the way into November. What we call the September and October series of time is typically what we would consider it to be financial winter. It wasn't a very cold winter in September and October. The market continued to climb higher on the backs of AI. We saw this profit taking going into November. I think we saw the bottom of that trade in November the 20th. The bottom at around 6,500 on the S&P 500. We saw a lot of these names, AI names, sold as much as 30 and 40% off of their highs. I think it's all up from here through the end of the year, Nicole, and you want to be a part of this AI trade as it starts to rebound.
Yeah, and that's around the time that also crypto went to the lowest at around 80,000, and it's at 91 or 92,000. So the appetite for risk, or at least some risk, is back. You've liked these tech names for some time, right? I mean, if you weren't in tech or you thought they were too frothy, you missed it, right?
You missed it.
And now I'm starting to read how people have FOMO. They're thinking that there's, with the quantitative now tightening ending, that there's going to be more money flow. Are you saying, like, get into tech now?
Get into tech now.
Between now and maybe a Santa Claus rally?
Yeah, Santa Claus rally. Where is Santa Claus is what we're asking over the first 2 days of the market trading here in December. But the reality is, I believe right now is a perfect time for someone who's long-term focused on...
By the way, if you're scared of doing iron condors or credit spreads, do one. You don't have to do 10. There's nothing says you have to do 10 like me. I've been doing them for a long time. I've been doing credit spreads and iron condors for at least 20 years. Okay, I might do like a, I might buy a butterfly into year end. Let's see. Long call fly. Let's see, a call fly. Oops. Okay, call fly. Let's go S&P, SPX. Okay, so call fly. Okay, so a call fly. You buy a long call at 66.70 in this case, 66.70. You buy a long call at 70.40, and you sell 2. All right, so this is balanced out. 1 and 1. You got to sell 2. Okay, at the center. Now, I'm thinking maybe we get to 6,900 by year end, if not sooner. So what I want to do is I want to go to end of the year. I want to sell two. Let's see. We sell two of. I'm just using this as an example. I'll probably sell more of these. I'll buy two. These iron conduits. All right, so 68.50 maybe 68.50. The reason why I would do this is because it's cheap to do it this way, but big payout. Okay, 50 wide. All right, 68.50, 6,900, 69.50, 79. No.
Triple Qs gain 17%, you get 15%. If the triple Qs gain 20%, you're up 50%.
Let's do 800 here. 50, 950, 69.50, 69.50. Let's see how much that costs. Okay, so that a debit of $450.
Utilities. One thing that AI needs even more than demand is power. If it doesn't have the power, then it doesn't matter. AI, data centers. I think a utilities play here gets you that low beta of utilities names, a good dividend payer.
Okay, maximum profits $4,500 if we make it to 6,900. Now you don't have to wait until you get there. Shit. Okay. So see how we. Oh man, I'm not used to this yet. Oh boy. Okay, 68.50, 6,900, 69.50. Now I could do. Yeah, that's okay. Let me see what. So $480. Maximum. Maximum profits 4,500 for $485. I want to make it a little cheaper. Oops. Damn it. Okay, so let me go. Let's see. Let's see what 6,900 looks like. 6,900, 7,000, 7,000, 7,100. What? Yeah, exactly. I don't think we're going to make it to 71. I don't think we'll make it to 7,000, but if we get close to 7,000, this could pay out nicely. Okay, so let's see what that looks like. Okay, so that's, wait, something's wrong here. Something's wrong.
You did talk about some other sectors, healthcare, financials. Are you interested in those or not?
I love the healthcare and financials.
Center.
What I like about that is the fact that it's broadening out into those areas. I'd like to see it broaden out into the consumer discretionary as we go into 2026.
6,900.
Consumer discretionary, continue broadening in financials
7,000.
and healthcare.
Why is this so much?
This rebound of AI and technology. 2026 all uphill in my opinion. I think you want to be a part of this economy over the next 2 to 3 years as the U.S. economy becomes again the number one U.S. or the number one global economy to be a part
Oh, I see why. Okay.
in the U.S. And I know it's
I see why. Because I have the wrong strikes here. 1231. Let me go.
U.S. is a little bit lower in the S&P 500, but right now I think rebounding in the AI trade, staying broad in your sectors. In the S&P 500 is going to provide you a great amount of upside.
Of these names, we have to go, but of these names, which one's your favorite? Which are you most excited about of the ones you listed?
Of the ones I listed, if it's me, for my clients, they want conservative approach. I think that NDEC is a perfect opportunity to take part in the AI trade and not risk nearly as much money.
Dale Smothers, thank you for joining us here on the show today. Great to see you. Really appreciate it.
Christmas Eve.
Coming up next, Technical Tuesday. Kevin Horner is standing by. He'll take a look at the charts of the S&P 500, Microsoft, Netflix. We're talking the trends here on.
Damn, I don't know how to
We'll be right back.
keep this from happening here. Okay, so too far out. So let's go back to what we originally looked at. 68.50, 6,900. Actually, you know what? Let's do it with SPY. Let's do it with SPY. Let's go SPY. Call fly. Okay. $12.31. $6.70. $700. $7.30.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
$1,300.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn or Instagram for more.
Trading at Schwab.
What's VIX doing? What's VIX doing? VIX.
Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools.
VIX is still pretty weak, bouncing a little bit off the low. Looking for a rally here end of day, hopefully.
And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab. Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions.
SPY.
Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
Okay, so for $173, I have max profit of $827. Okay, I can adjust this a little bit more, but I'm looking at a call fly with a maximum, thinking a maximum that the S&P is going to make it to 700. Let's take a look at SPY. 690. Okay, maybe we touch that leg.
What do you think here as we see somewhat of a bounce back? 6 of 7 days, not bad to have up hours.
Maybe we make it to 690. If I touch this leg, as we ease towards 690, we're starting to make money.
Last week we were talking about the importance of moving through a layer of resistance at around 67.60.
Time to expiration.
Just that. Follow through day on Wednesday, and then we've consolidated over the last three trading sessions, Friday, Monday, Tuesday, today, and really just kind of looks like building out maybe a little bit of a bull flag.
Okay,
And
so that's SPY. Probably going to take this trade.
We don't go up every day, but we hold important levels. And so if you look
Let me see if this is the same. SPY.
Closing high on Friday, and the last 2 days we've just held up. So I think
What about S&P 500?
makes a lot of sense. Traders who are trend traders love the move we've made above the 50-day moving average in the last 5 sessions.
December
That's giving them
31st.
the confidence that we spoke about needing last Tuesday. So they've gotten that. So that resides at 67.30. Some traders would lighten up if we got to close back below 67.30.
Okay, we're trying to do something here. S&P is trying to rally.
But there's no reason to think that that's
coming here, but it does at least give traders ways to maybe set their own risk, levels to watch, levels at which they would maybe do something a little bit differently than what they've done so far. But, like I said, last Tuesday, we were at a very important level, and the fact is we've managed to move right through it. So I guess we have to look at this as a bit more optimistic than bearish, given what has transpired for the last week or so.
Yeah, and look, people are now starting to talk about rallies and year-end and targets that are 7,000 and 8,000 for 2026. True. So there is a lot of positivity out there overall. Let's get to some of the charts that have been in the news and on the move, including Microsoft. Start off with Microsoft. Tell us what we need to know here.
I'm going to throw some cold water on this idea of optimism and bullishness a little bit, Nicole. We spoke about Microsoft just 2 weeks ago. And the reason I brought it up 2 weeks ago is because it looked like we were in the midst of breaking down through a level of important support. And that appears to be what has transpired. So we've noticed that Microsoft retreated all the way to its 200-day moving average now and has managed to bounce back. And that's great that it's bounced back, but I think traders need to recognize that it's going to take a bit more optimism and actually a bit more price action movement out of Microsoft to really get it back above where it needs to get.
Okay, pulling back in. All right, so once again, we're going to go back to S&P. Just want to check this out. Bear with me 1 second. S&P. All right, so I'm going to structure this a little different. Call fly, end of year 12. Okay, so I'm going to go 6,900.
So the reason I wanted to do this in a follow-up was to remind traders of the viewpoint that we had 2 weeks ago, the way things have played out thus far, and what bulls need to see. They really need to get this position back above $500 a share to think that there's more upside and opportunity here, basically get us back into that range we traded in for about 3 to 4 months there from the early summer all the way until we just broke down here in mid-November. So very important to get back above it. This still presents bearishly, and so even though it's in that bounce back optimistic conversation, I think bulls want to force the stock to be through some of these levels rather than anticipating it getting
69.50. All right, 69.50.
It does. All right, some cold water. It's okay. It's okay. What about Netflix? Yeah, tell us about Netflix. I mean, we
For year end, 69.50. Okay, 69.50. 7,000. 7,000.
I'm bringing two Netflix charts today because it's a good reminder that time frame matters, and sometimes pulling back on the chart, looking at
and
viewpoint, a larger view, 30,000 foot view, for example, can be a little different. We're going to start with the daily here.
69.75. Sorry, 69.75. 69.75.
The stock is pulled back
$25 apart.
We have noted
69.
more than 20% from the peak we achieved in the summer.
75.
That's not ideal, nor is the fact
7,000.
that is calling out there at around that 113 price level, the very close proximity of the 50-day moving average to the 200-day, giving us the potential for the so-called death cross.
Okay, for $116, maximum profits $2,300. You can see over there on the right. Okay, so max profits $2,300. Cost of the trade $116 per fly. I'll probably do like 5 of these.
We're going to transition to the weekly chart, and as I noted, it's important to verify your time frame. Your time frame for your trade matters. And when you look at the weekly look of Netflix,
I'm not going to do it right now. I'll probably do it shortly.
We're looking at it on a logarithmic scale.
See what this looks like.
3 moving averages in here: the 20-week, the 40-week, and the 100-week, all of which are akin to similar moving averages in the daily chart, or important moving averages there. And
233 max profit, $4,700. Okay, I'll probably do that.
This week's candle is
I'll wait until tomorrow.
Last week already. So this could present like the continuation of this uptrend that's been working. And this uptrend has been phenomenal. This is nearly a 700% move over the last 3 years, Nicole. So it's tremendously strong. Doesn't mean it has to hold, but if nothing else, it does give traders over 2 different time frames, really 2 different stories to be considering here. So I thought it was a pertinent chart. I thought it was a fairly intriguing chart. If you're bearish and you're trading this for downside,
Market's not doing anything.
20%, Nicole, to the 100-week moving
With an hour and 12 minutes to go, we're just still sitting here doing nothing. Doji Day on a daily Doji Day.
So another intriguing chart that has a number of key
Pretty much what we anticipated. Everything else, yeah, we had a nice couple of things move. MicroStrategy, NXPI, Intel, Shopify, MChip, Booking.com, Applied Materials, Texas Instruments, DoorDash, Global Foundries, Mercado Libre, Warner Brothers, KLAC, Lam Research, a lot of chips doing well today.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single
Okay, so we've got earnings tonight on others. Just sell 15 deltas or 10 delta. Sell one. Get used to how these credit spreads work. Sell one.
Opportunities don't stop when the market day ends. So neither
You don't need to do 10 or 20 like I always do.
round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24
S&P looks good. See if we can't get something going here.
the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardas, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Welcome back to the watch list. CrowdStrike, Okta, both reporting earnings after the close.
CrowdStrike.
Why is cybersecurity so important, especially now? Our panel is standing by Ahmed Khan, equity analyst for Morningstar, and Ron Westfall, VP Networking and Infrastructure at Hyperframe Research. Thank you so much for being with us. So, Ahmed, I'll start with you. Some of your thoughts here.
Yeah, so Nicole, our view on cybersecurity, as we've discussed in the past, is one where you have a very fragmented market, and we continue to expect to see vendor consolidation. So the large cybersecurity vendors such as Palo, Fortinet, CrowdStrike, and Zscaler will continue to sort of constitute a larger market share. And obviously with AI, we're seeing new threats in the cybersecurity landscape, and then these companies are all investing in AI tools to combat those threats, and we expect that to be a growth driver as we look at 2026 and beyond.
And so what do you think here, Ron? I mean, we are expecting CrowdStrike and Okta. Do you think we'll hear something similar that will be sort of trend-setting in cybersecurity, or each one will have its own story?
Okay, I got a nice little rally going here. See if we can't get something going. Let's see what hedge flows look like. It's been a pretty difficult day, if you will. Hedge flows haven't done much. They've just been chopping people up, just moving sideways. A lot of negative delta today. Price is sticking to this price action area, this zone.
Meantime, what we can anticipate is that the cybersecurity market segment has had mixed results recently. In fact, the overall segment has experienced almost a drop at around 11%. And so that means that there is concern with other factors such as the macroeconomic situation and the fact that many investors think, the cybersecurity specialists are a bit overvalued. And so what we can anticipate is that AI will actually be a catalyst further out, not just in terms of near-term reporting results where identity management will be prominent, but also how can these vendors have a better story related to AI security, and that's going to boost the long-term prospects. For example, I'm anticipating that the total addressable market just for the identity and access management segment will be $65 billion by 2034. So that translates into a CAGR of around at least 12%. So the near-term prospects will be a bit mixed. However, further out, I'm anticipating that this will actually be a long-term solid investment for both companies.
Understood. I mean, we think about these short-term and long-term. Ahmed, I mean, is there a clear winner in your opinion in the short term?
So one company that has performed exceptionally well in 2025 is Strike. I was looking at sort of slicing and dicing our cybersecurity coverage, and CrowdStrike and Zscaler were two names that performed exceptionally well in 2025. Overall, our security coverage was on average up 3% for 2025 so far year to date, which is pretty low considering how strong 2024 was. And I agree with Ron's point where people just thought these companies were really pricey. We saw drawdowns in Palo, Fortinet, Zscaler when they reported earnings. So near term, we're expecting sort of that continuation of CrowdStrike sort of leading the charge and performing really well. But longer term, we expect some of the other platform vendors, which we think are pretty attractively priced, such as Fortinet, Palo, and Zscaler, to also participate in that upside.
And when we were talking about some of the long-term prospects, Ron, you were thinking about some of those names. What do you think is the best bet?
Excellent question. I think Qualys is a very solid one. Their revenues were up over 10%. The stock was up 20%. So these are clear indicators that they're not missing any beats, that they really are executing on all their strategic objectives and really taking advantage of both the near term and the long-term opportunities. And I agree that the Zscaler has had a dip. However, I like their long-term prospects. For instance, when it came to the Anthropic report about the government-backed attacks that were AI orchestrated, that is changing the game. And so what I believe is that vendors such as Zscaler, as well as all the other cybersecurity players, need to come up with better cyber deception capabilities. And Zscaler excels in this area. And when it comes to agentic AI threats, somebody like Zscaler will become increasingly prominent and thus a more attractive investment.
I did see some price target lowers now from Scotiabank and JP Morgan on Qualys, only because it had that big gap up after the earnings. Maybe they think it's overvalued at this point. But I know you said you like that one maybe for the long term. It had an incredible jump, at least off the lows there after the earnings. So let's also get you the final word here, Ahmed. Thank you for Qualys. We'll keep a look at Zscaler. You guys have mentioned so many great names. Ahmed, final thought, quickly.
Yeah, I think overall, if you're thinking about investing in cybersecurity, you should take comfort in the fact that it's a secularly advantaged field. CIOs, if you look at surveys, they're continuing to place cybersecurity right at the top of their investment.
CrowdStrike, you could probably sell a 15 delta, you'd be fine.
Alongside AI.
We're only looking at 6.3% move, so sell 15 deltas, buy 10 deltas, you should be fine. I did Marvell for earnings with 9.65%. So use 10%. That's about $10 on Marvell.
Google, Meta, big picture, a lot of tech doing well.
Okay, Marvell, 9%.
I'm Nicole Petalides. Thanks for being with me here on Schwab Network every single day at 9 a.m. and 2 p.m. This is the watch list, and keep it right here. Market on Close is next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab.
S&P still not able to get through this level.
Navigate Schwab.com.
Need to see a break through this zone.
Mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real
All
time.
right, volume's coming in. S&P volume.
And precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
2025 kept investors on their toes. Now, get ready for the road ahead. Join Schwab's panel of experts on December 11th for 2026 Market Outlook, your guide to the forces shaping stocks, global markets, inflation, rates, and more. Hear from experts on where the markets may be headed, spot opportunities, and see what could drive your portfolio next year. Tune in on December 11th at 7 p.m. Eastern on Schwab Network.
I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters. And I'm Sam Bonus, coming to you live from the floor of the New
Yeah, whatever.
Live from our New York headquarters. There's just an hour to go until the closing bell. Stocks are looking to take a comeback here following Monday's risk-off sentiment. Let's welcome in here quickly. Break down all the headlines here. What are you seeing in the markets, my friend?
We're seeing a nice reversal from yesterday. Call it turnaround Tuesday. Let's start with the Dow here, up almost 0.5%, or just over 200 diagram would look like. In other words, it's kind of this is what you expect to go into the end of December, except the
Good analysis. Markets look like an electrocardiogram today, line chart. Marvell. Another credit spread on Marvell.
Signals and just kind of checking on the baseball. It's only an extra half a second. It's down a little bit. It's been steadily down since the last close here a couple weeks ago. And just checking in on the bond market as well. Another reversal here, just like stocks. Except this is yields to the downside. They were up quite a bit yesterday. We saw the 10-year up about 8 basis points, down one today to 4.08%. 30-year down to 4.74%, and that's down only 1 basis point. And the U.S. dollar index, which ended the day pretty close to flat again today, although we did see some hiccups yesterday morning. I'm going to zoom ahead here to the sector action, and guess what is in the pole position? That would be tech, the AI story. Is it alive? Of course it is. It's Christmas. Here, tech is up 1.11%. Industrials and communication services, those would be your outperformers of the S&P 500. Financials and discretionary, also in the green here. Energy was yesterday's big data, and today is the biggest loser. It's down 1.4%. Materials, staples, utilities, healthcare, real estate, also in the red there.
Doji Day across many stocks. Let's see what's working still. Boeing, sold an iron condor on Boeing. Okay, that looks good. Boeing at the 50-day moving average.
ACHR. Keep on going here. The SOX, the Philly SOX chip index, that is going to be up 7 days in a row. Intel here up 8%, Applied Materials up 4%, Texas Instruments 5%. So some of the
SMH looking good. SMH. Semis continue outperforming. Probably going to run into some resistance soon.
ACHR. I'm going to close with my leaders here, and in the number one position is Bitcoin. We got Ines on deck. She's going to talk to you about all things crypto, but aside from that, we got SOX, that's that chip index I was talking about. Then we got the quantum trade, the disruption trade, South Korea, software, internet, aerospace and defense, which was one of the biggest movements yesterday. FLNC. Top row there, and then one of the bright spots yesterday is ONDS. That would be China Internet, also biotech down. So again, just kind of flipping over from yesterday.
Tesla turning up.
STS. Thank you, Jared. Appreciate it. Now let's get a check on the crypto market. Bitcoin holding on to gains, now hovering just under 92,000 token, and as for Ray, joins more. That's
Josh, a reversal from what we saw yesterday with Bitcoin at more than 7% right now, covering just around the $92,000 level, just below that, really sort of catching up with the broader market. A series of headlines may have been also helping here as well. You have the SEC Chairman Paul Atkins in an interview talking about plans to unveil an innovation exemption for digital asset companies.
A lot of chips doing well. NVIDIA. Okay.
Cryptocurrencies to be traded on its platform. So this is all bullish for Bitcoin and the rest of
The Bitcoin trade MSTR, that's been hovering at number 1 or number 2 spot all day. Hammer yesterday. Looking for a follow through in the next few days. Tesla turning off the low here. Tesla. Doji need to get above the 50-day. If we can get above the 50-day, maybe we have a shot at 450 in the short term.
from yesterday when the whole sector was really under pressure and coin up more than 3%. Coin, by the way, in December 17th, is going to be unveiling some offerings, including prediction markets. That's huge in this space now, and tokenized stocks as well, as it aims to further go into sort of an everything exchange.
Boeing. All right. So pretty strong move here on Boeing.
Joining us now with a look at investing strategies ahead of the year's end. Let's welcome in Huntington Private Bank Director of Wealth Strategy. That would be Dan Griffin. Dan, always great to see you. Like John said, maybe we'll start there, Dan. Continue this conversation on Bitcoin. Just curious, get your view on Bitcoin and how you think about, Dan, that relationship between Bitcoin and the equity market. I asked them, I had some strategists on the show, and they're not crypto guys, they're equity guys, but they're watching Bitcoin closely.
Well, I think everyone needs to be aware of what's going on there. We at Huntington are evaluating it really closely. We get questions about it every time our clients are coming in and asking about it as well. I think one of the biggest things that when you're talking about crypto with your clients is, why are they asking? Is it they're asking because they're concerned about risk and diversify?
Boeing. Tesla looks good. Tesla turning off the low. Tesla. Tesla with a nice turn.
SMX.
I saw a headline. I'm going to ask Dan about this. I don't know if you saw this one. Bank of America, Dan, sitting in your house. They say its wealth management clients start thinking about getting some crypto exposure to their portfolios. The firm is endorsing, let me get this right, a 1 to 4% allocation to digital assets.
ALBPA.
You see a headline like that. What do you make of that? Is that smart guidance?
I think it's good to consider diversification in all of these forms, and crypto is one of those areas to think about. Again, I think you need to make sure that you're going into it in the right way. Just because somebody talks about a sector doesn't mean that the particular instrument that you're involved in is the safest one. So that's the
Boeing.
question. Does it make sense?
Tesla. Boeing looking good here. Boeing. Nice rally on Boeing.
More broadly, like this, what you call the duality of how people feel and what they're
SMX.
Walk me through that. What do you mean?
I think as we talk to a lot of business owners these days, many of them are experiencing two different things that are very, very in contrast with each other. The first is they're having a lot of concern relative to the headlines that they're reading. They look at what's going on in the markets. They talk to other people around them, and they say, "I'm really worried about the economy." I think everybody is experiencing that to some degree. Worry is a real thing. But then if you look at what's actually happening, if you ask a business owner, how is business? Many of them are experiencing really good things. Many middle-class Americans are experiencing balance sheets that look really good. The problem is the duality of that means people, they are experiencing positive things, but they don't necessarily translate that into optimism for the future. And that's a concern, I think, as we move into 2026.
Well, you noted here, speaking of looking ahead, the consumer spending has driven a solid 2025. But then it sounded like they were sort of offering kind of a bit of a warning sign here about who exactly is doing all the spending.
We're concerned about 2026, I think, is going to largely look one way or the other, depending on which headwinds and which tailwinds come into play. And consumer spending is one of those. If we see some of the benefits of the tax plan that passed this last July come to fruition as we begin to turn the calendar in the next year, that could push a little bit of consumer spending. Many seniors, as an example, are going to get tax returns back that are a lot higher than they expect. I joke it's going to be hard to book a Viking cruise next year, maybe in the fall. So those things are some surprises for benefits.
S&P just can't get out of its own way.
Depreciation, 1079 deduction, all those could push CapEx spending. If they come to fruition, the economy could have a little bit of a tailwind.
Boeing.
Some of this headwind that we've traditionally seen. Trade imbalances continue to be a problem. If we don't see interest rates kind of make significant moves, that might be the story we see in 2026.
So do I broadly, again, if I add up, am I trying to position my portfolio broadly for kind of moderate growth, sticky inflation, and plenty of, it's not like policy questions?
I think that's right.
Oh boy.
About what the future has to hold when it comes to equities. I think obviously diversification, as we mentioned earlier, is always a good policy, and now is the time to be doing that and exercising that discretion.
Stocks aren't doing much of anything today. Palantir is just sitting here in the lower half of today's range. It did bounce, but no follow through.
I think so. I mean, everybody's asking the question, how is AI going to make a difference in my life and as a result, the lives of my businesses? I think some of those efficiencies are going to come to fruition. We're spending a lot of money as a society creating the infrastructure. That investment probably is going to lead to something one way or the other.
I want to end here quickly. Yeah, Huntington added 4 new stocks recently. Yeah. Got Walmart, got CrowdStrike.
Tesla going.
SLB and Conan. Are there some common themes and trends kind of tying those names together? What are you screaming for?
You mentioned AI as an example, and I think
Tesla, nice follow through. There goes the S&P.
So for a lot of our clients who are asking, how do I get involved in investing in AI data center development?
S&P trying to take out the highs. Got a ways to go. Got some stops up here. Be nice to see a stop run. Tesla's on the move now. Tesla's starting to go.
The founder of Dell Technologies is embracing the season of giving. Michael Dell LAES billions of dollars to supplement new savings accounts for young children. And Yahoo Finance's Washington correspondent Ben Worschel joins us now with the details. Ben.
Yeah, Josh. So this is a
Got a MACD cross on S&P 500. 1 minute chart, S&P 500.
The money here will go to the U.S. Treasury, which will then be distributed in $250 increments into about 25 million of these Trump accounts. This is alongside money that was allocated by Congress to give $1,000 to newborn children. This money will go to children 10 and under, so kind of expanding the pool of kids able to access these accounts. These accounts are intended to you set it up at birth. Your parents or your employer can contribute up to $5,000 annually, and then you access it after age 18 to kind of give you a jump start on things like education and buying a home. What we're also seeing today from this White House event, but also throughout the day, is kind of a real push to get more folks involved, more philanthropy, more billionaires getting to it, but also getting companies involved in this too. So we're seeing a big push in that way. One interesting voice on that side is Cory Booker, the Democratic senator from New Jersey. He's not at the event, I don't think, but Ted Cruz is another senator. They co-wrote a letter to the Fortune 1000 CEOs saying you need to sort of get involved in this. They essentially clearly push here to make this a benefit for employees. Alongside your 401k, the companies can give up to $2,500. So that there's an effort to make that part of your benefit going forward, even as there is skepticism about how involved.
Poet, you looking at Poet?
Given some kind of limited tax advantages you get from contributing your own money towards this account.
All right, thank you, Ben.
Bye-bye.
Coming up, we'll take a look at the latest sales data from the biggest automakers. That's next on Market Domination.
Say hello to the Cobb Goblin, the effortless corn stripper. That's cream of the crop with its ergonomic design.
Can we get an end of day run, S&P? Can we get an end of day run? I hate this stupid commercial. You know what I really hate are these commercials that are produced using AI. AI people is so creepy. So they're not going to be using real people anymore. At least not as much as they used to. Creepy AI ads.
off. Trust me, your cleaning routine will never be the same. Go ahead, scan the code on your screen right now and get yours today. You'll thank me later.
Fresh pineapple is delicious, but cutting exact rings is impossible. Now, you can make rings with ease. Introducing the Pineapple Ring Master. Simply slice the top off a fresh pineapple, then align the Pineapple Ring Master around the core and twist. With each turn, the rings are cut in a spiral, right down to the base. Give it a pull, and you're a ring master. Plus, you've got a perfect pineapple cup for serving your favorite tropical drink. Scan the code on your screen now and get your Pineapple Ring Master today.
Hey, Blake Anderson here to tell you about this, the Flash Force Tactical Flashlight. Stick around because I'm going to tell you about an amazing offer just for our TV audience. Or, if you really can't wait, scan the code on your screen now and check it out. Let me just tell you how great it is to have the Flash Force. It's literally like no other flashlight I've ever had. The white high beam LED is bright, super bright. You can see it from up to 2,000 meters away. Its built-in lithium battery charges up with USB-C, and it even has a level meter on the side to show you just how much juice you have left. The features just keep going. The telescopic zoom gives you a range of lighting options to light up an entire area or spotlight on something specific. If you hold the power button down, you get a side light, perfect for working in the dark. Push the button again, and you get a red and blue flashing light, which is really helpful for emergency situations. The IPX4 waterproof design makes it great for outdoor adventures. I love having one around my house, and of course, I keep one in my glove box too. You can even use it as a power bank to charge your phone. And it's only available for a limited time, so scan the code on your screen right now to get your Flash Force Tactical Flashlight today.
Two of Wall Street's biggest firms say the AI boom is far from the speculative mania. For more, we're bringing now Yahoo Finance senior reporter Allie. Allie.
Hey Josh, yeah, and we've been talking a lot about this year, whether or not we're in an AI bubble, and I went to these outlooks from both Bank of America and BlackRock, and the messaging was clear. We are not in an AI bubble. In fact, BlackRock said we don't think the bubble framing is that useful at this stage for investors, because when you place a sort of backward-looking metric or assessment, it means that you're going to have an incomplete picture of what's currently happening, especially since this AI build-out is so unprecedented at the speed and the scale. So this comes as earnings have been really strong for a lot of these big tech companies that's so large that it's actually a growth story, and the expectation is that that could continue to boost domestic growth. BlackRock saying that we could see a new wave, a new industrial revolution from AI, which could lead to sustained growth above 2%, which we haven't necessarily seen historically. And given that we have all these AI tailwinds, BlackRock is very bullish heading into next year. They are still overweight U.S. equities, and they do see AI driving new earnings pools and productivity gains across the economy. BofA, same kind of optimism, but also with
Tesla, nice trend in through the end of the day. The afternoon session, Tesla just turning the corner, moving higher. Looks good. Tesla looks good. Boeing having a good day. Boeing at the 50-day, above the 200-day, looking for some consolidation in this area.
Typically, if there's any amount of skepticism in the market, skepticism around the bubble talk, that means we're not in one.
Yeah, right. So let's talk about a bubble.
Exactly. We don't have that irrational exuberance like Greenspan.
So lots of about AI. Another theme, the K-shaped economy is a hot theme, a hot trend. What did you hear there?
Yeah, and BlackRock described it as K-shaped everything, right? We have a K-shaped stock market where you have equities tilted towards tech. You have a K-shaped economy where you have this higher income consumers boosting growth while the lower income consumer is struggling. And I asked Bank of America specifically about this. And their economist, Bade, he told me that the two can't coexist forever. At some point, you're going to have something break. However, BofA is pretty optimistic. They see GDP growth going down to 2.4%. And part of that view is that the bottom of the K is going to stabilize before the top of the K collapses. And that's really underpinning that more optimistic view there. But what he did say that was interesting is even though a K-shaped economy is not necessarily sustainable, what do consumers spend the most money on? Services. Would you say the higher income consumer spends on services or the lower income consumer spends on services? It's actually the higher income consumer. So if we continue to see spending on services, that could prop up that area of the labor market and that could maybe make up for some of the softness that we've seen there. So even though a lot of the soft data, a lot of the survey data has been a little bit pessimistic about the state of the economy and in particular the labor market, there are still things to like within this K-shape. So really interesting conversations, and Becky Merkel also said that we cannot see us entering any type of recession next year either.
All right. Wildly positive, constructive. Thank you, Allie. Appreciate it.
Boeing, Tesla. What's Apple doing? Apple.
Reportedly declares code red now. Yahoo Finance's Dan Howard joins us now with your man.
New York Fang started off the day pretty nice. New York Fang components. Okay, we're a little bit off the high of the day, but bullish. See if we can follow through into the Friday.
There was a few different AI headlines there. So we're talking here about Sam Altman.
All right, we can't get out of this range. S&P just chopping back and forth. Just got rejected again. Doji on the daily on the right. Unless we start doing something in the next few minutes. Just a choppy day. Choppy, choppy. Maybe we get something going right here.
Again, they will also see also ran.
Oh boy. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is December the 2nd, Tuesday. We got 32 minutes to go. Markets are just stalled at the moment.
They're getting a lot more attention as of late, and I think that's kind of like I said, where we are in this kind of stage when it comes to AI.
Dan, thank you, buddy. U.S. auto sales for November rolling in on Tuesday. Ford, Hyundai showing decline in year-over-year sales, while Kia up 7% from the previous year. We'll bring in now Aaron Keating, executive analyst at Cox Automotive. Aaron, always good to see you. So let's talk big picture here, Aaron. You estimate November sales coming in at 15.7 million, Aaron. So that sounds like a bit better than October, but also down from a year ago. Start there, Aaron. What explains that?
Hey Josh, thanks for having me. It's always good to see you. I mean, I think we knew that we had a bunch of pull ahead demand come into the market. July, August, September, we knew that the EV credits were going to start to roll out. And we just saw a lot more activity in the showrooms leading into that September 30th.
PLRZ.
And we expected that October would drop off. We absolutely saw it, especially in the EV market. We saw a 50% decline, nearly 50% decline in the EV sales. And so there's nothing really alarming to me that we're seeing in the sales results this month, other than what we expected might be softening. We still expect at the end of the year we'll land. We're at a year-to-date selling pace at around 16.2, which is still higher than what it was in 2024. So it's not terribly pessimistic.
So what are the kind of vehicles, Aaron, that are popular right now, that are selling relatively well in this environment?
Yeah, I mean, for sure, America has shown for over a decade that it's the SUV and the big trucks that are continuing to be the things that the Americans want to buy. And, some of that is starting to move maybe mid-market. So while the Ford F-150 slid back just a little bit this past month, we saw the Maverick and the Ranger really do well. So some consumers are still looking at what they want in utility, but maybe going a little bit smaller. Same with the SUVs, mid-size, full-size SUVs. They're still really great sellers. Cars we're continuing to see, they're not dead, but they are diminishing, even though Honda and Toyota still reliably push out a ton of those, thousands of them a month. But yeah, rest assured, the American consumer is focused on the bigger the better.
All right, Americans love their trucks. We know that. You do mention here, Aaron, compact and mid-size car sales. They keep slipping, though. What do you see there now and ahead?
MLDC.
Yeah, I mean, I think they'll continue to slip just merely because this market is not continuing to hold them up. I mean, I love what Ali was talking about, the K-shaped economy. We really continue to focus on that as well. And those well-heeled consumers in that upper funnel of the K are still the consumers that really like those large vehicles. And so we're going to continue to see a decline, I think, in the sedans and cars. Again, reliable Honda, Toyota will continue kicking those out. They have a substantial amount of loyalty that is focused on those cars. But otherwise, most manufacturers, especially the domestics, will continue to pull away from that segment.
What about tariffs, Aaron? I'm curious, you have such a great view of the industry as a whole. How are automakers continuing to sort of navigate that dynamic?
It's still a complicated picture. I think a lot of people almost forgot that they existed because we really just weren't seeing the price increases that we expected. Right now, we're sitting about 4% year-over-year pricing increase.
Okay. 28 minutes to go, a little bit over 28 minutes to go. Can we get a little bit more out of this? Okay.
Not on firm ground, but I'd say on relatively firm sand, if you will. I mean, a lot of the numbers have come out. They know what their effective tariff rate is for most countries. The big wild card for 26 is going to be the USMCA.
All right, volume is coming in. Maybe we'll get a little run here.
Automotive industry, if anything should really shift in a wrong direction there. But otherwise, we've seen the tariff impact be fairly muted. We're seeing it show up in destination and handling fees. There will be
all right, futures going.
If you will, so selling the same identical trims, but with less content within the cars, so that they can hold price without maybe having to offer as much to the consumer. So those are the ways we're seeing some of the tariff impacts seep in.
You mentioned there in the EV market. I'm just curious, when you see this headline about how prices at the pump continue
Netflix still pushing. Apple looks good. Meta looks good.
I think for the foreseeable future, gas prices just aren't, we've seen it. They're not a main driver for adoption of electric vehicles. Most people, when they're considering electric vehicles to this point, have been very tech forward consumers that are looking at it, maybe from an environmental perspective. You know, the rubber hits the road once you get behind the seat of one of these things. You know, the performance is there. The vehicles are becoming more mainstream in their looks, their feel, their technology, and so forth. So I don't know that gas prices is going to start driving those decisions heavily until, you know, a couple of years down the road when we actually have more vehicles on the ground. I think I continue to say the Bader-Meinhof phenomenon is there now. We've just pushed a ton of EVs into the market. So you're left and right of your neighborhood, you might start seeing more EVs show up, and that's going to continue to drive some organic demand. But I'm not convinced that gas prices is what should be considered as a driver for electric vehicle adoption at this point.
Aaron, always great to have you.
EPOW. Yeah, thank you.
Coming up, I speak to the CEO of a health insurance startup that just gained unicorn status. Don't go away.
Where is the TV remote? How many times have you heard that? Well, SMR. Scan the code on your screen now, because the searching is over. The remote to it is a multi-pocket armrest organizer. It can hold all your remotes, snacks, phones, glasses, books, whatever you want. All your couch needs right at hand. It folds up, so it's easy to store and easy to clean. Stop searching and start watching.
Okay, the nukes, they're starting to turn. Maybe. Nanonuclear, Oklo, SMR, they're all turning.
So you mean our phones will always be charged so we can still doom scroll and power outage?
The Rescue Volt 7-in-1 power station is travel-sized and ready for any emergency. And yes, it charges your phone too.
So I gotta post my socials.
This is a limited time TV offer and makes a great gift. Scan the code on your screen. Get your Rescue Volt 7-in-1 power station today.
Yeah, these AI ads are getting so creepy. These actors, I mean, they're obviously not real. What a world we live in. Okay, let's see what's going on here. ASTS, that's ASTS. Okay. AST Space Mobile. ASTS, nice. 55, 57. Netflix still going? Q's. Q at the highs.
Securities and Exchange Commission Chair EPOW looking to make it easier for companies to go public. And senior reporter David Hollerith is here with more.
Hey Josh, so the new chair, the Trump appointee, Paul Atkins, has been talking about wanting to make it easier for companies to go public.
Make IPOs great again.
Yeah, for some time now. And today he was at the New York Stock Exchange, and shortly after ringing the opening bell, he
NVIDIA turning over a little bit. It's a profit taking. You see profit taking. We got 22 minutes to go. 22 minutes to go.
Now, broadly, it's not clear what that means other than to focus more on material financial information. So to us, it sounds like focusing, having companies not required to file as much ESG related topics, but also specifically you focus on smaller companies talking about a scaled approach to public disclosures. Now, this could mean for newer and smaller companies that are public of a certain size, they would have less kind of reporting requirements. And we don't know quite what that
New York Fangs are mixed.
but it could be fairly significant.
Pretty good showing though today. Most of the NASDAQ 100 looking very strong into the last hour. Okay. Where did my chart go here? Here it is. Okay. There it is. Okay, so we have end of day, we have 76 stocks on the NASDAQ. 76 stocks out of 100 on the NASDAQ 100. Rising today, 275 stocks on the S&P, 719 in the IWM. Not a bad showing. Didn't get everything we wanted to happen today. S&P still not giving us any kind of follow-through breakout.
Whenever that change, if it were to happen, the SEC is able to move from a 4 times a year to 4 times a year to 2 times a year reporting requirements. Companies don't have to follow it immediately, but they have to be prepared to change, and ultimately it could be cheaper and easier for them. Obviously, less transparent for investors.
Okay, S&P. No follow through S&P. We keep getting rejected up here. Got supply overhead. Selling right out of the gate.
So there's a lot of unanswered questions there, but it sounds like the talk is that it could be fast tracked. Wow. All right, Dave. Thank you, sir. Appreciate it.
Right around 11 o'clock, we got the selling, and then we went sideways.
Fundraising round bringing its valuation to unicorn status, meaning above $1 billion.
Iron's still going? Okay, cool.
Disrupt the insurance industry. The focus on preventative care. Joining now is Fred Turner, co-founder and CEO of Tues. Fred, it is good to see you. So let's get right to this headline. You raised $150 million, Fred. I'm impressed by the A-list investors here. You got Druckenmiller, I see Novogratz. These are big guys. Walk us through the news and how you intend to put this money to work, Fred.
Yeah, thanks for having me on, Josh. So we're excited to announce today our Series B round and insurers.
Iron pulling back.
$1.3 billion valuation to really keep scaling our model of employer-sponsored health insurance that actually focuses on prevention. So we use a combination of engagement and preventative health to really get our members to engage as early as possible, go and take care of themselves. And we see that then translate into the results. About a 30% reduction in inpatient hospital admissions within 6 months of employers who are moving to the curative model. So we're planning to use this to continue scaling up. We started the health insurance business about 3 years ago now. And currently we're operating in Texas, Florida, and Georgia. We're planning to use this funding to scale up nationally. So we'll be starting first in Maryland and DC, but looking to launch in Indiana, Ohio, and hopefully New York. And then over the next couple of years, roll this out nationally.
You talked earlier about how AI-driven member experience is a big investment area. Just walk me through that a bit more, Fred. I mean, where do you see the significant automation coming?
Yeah, I think it's a really exciting time to be building in the insurance space. Yeah, it's usually maybe not considered the most exciting market, but it's an incredibly document and interaction-heavy industry, right? We, even as a small insurance company, receive 10,000 pages worth of faxes every single day. And so historically, you would have these
S&P, nada.
And that leads to very slow responsiveness from members. It takes a long time to get anything done dealing with an insurance company.
slow grind, sideways, back and forth, range bound, boring kind of day, unfortunately. It's pretty much what we're anticipating for the week. S&P sideways, just chopping around. Instead of pulling back in price, just enticing people to do things when there's no need to trade.
Otherwise, people will dramatically overutilize. But the data in the literature has really shown that the opposite is almost true. That when you put in place these barriers, deductibles, co-pays that are supposed to make people good consumers that will go and price shop, only get the necessary care, it's just not what really happens in reality. When you put in place those barriers for people, what happens is they just stop seeking full care. They don't go do the preventative visit. They don't go do the screenings. They don't go get their colonoscopy or their mammogram. They put all that stuff off because they want to avoid the out-of-pocket costs, or even the perceived out-of-pocket costs.
16 minutes to go. 16 minutes. It is December the 2nd, Tuesday. Rather lackluster day. Closing. We'll probably close right in the middle of the range today. Another doji. For the past 3 to 4 days, we've just been stuck between this area. Spiders. Let's see. Tesla. Apple. Looking for Apple to continue. Apple. Apple. Looking pretty good, Apple. 287.50 is the upper call wall. Hopefully that'll shift up to maybe 290. Okay. Higher highs, higher lows. It's a little profit taking in the day. Apple, looking forward to another day tomorrow. Apple. Tesla, looking for a follow through. Netflix, decent move off the low. Trying to get back above 110. Netflix. Microsoft had a nice run up in the morning and just kind of faltered in the evening session. Meta continuation. Meta looking pretty good. FBL 2 times Meta. FBL.
Yeah, we expect to continue being profitable and grow the profitability of the business going forward. I think obviously in insurance, it's
Meta looks good. Meta looks like it wants to break higher.
a certain scale before it's possible to be profitable. So
Meta.
rapidly investing, over the last few years and getting to that profitability. We're now about 165,000 members on the plan, but we grew 100% this year. So we're hoping to keep that growth rate going, but do it in a profitable and sustainable way.
What do you think, Fred? Last question. Ultimately, what's the exit strategy here? Is it IPO, Fred? Strategic acquirer? What do you think?
Yeah, we're looking to build a big insurance business. There's a gap in the market for a plan that is really focused on prevention and building something that the end consumer actually wants to have as a product. I think health insurance is this.
If you're thinking about CrowdStrike, just sell some 15 deltas above and below. Sell the 15 deltas and then use wings that are like 10 deltas. Take the 10 deltas overhead and below. All right, a little rip here, S&P. Got 13 minutes, 30 seconds to go. Don't expect much here.
Coming up, we get a look at some of the top trending tickers on Yahoo Finance.
When anything falls between the seat and center,
Oh, gosh.
it's impossible to retrieve. Introducing the console catcher, the perfect addition to any vehicle. It's flexible, easy to clean, and even easier to install. Simply place the console catcher around the base of the seatbelt buckle, and that's it. Now nothing will ever fall between the cracks again. Scan the code on your screen, and get your console catcher today.
Not a very good feeling, is it? I'm Blake Anderson, and if you've ever dropped your phone, wallet, or fries between the seats, you already know why I use the console catcher. It's a flexible insert that slides between your seat and the center console and stops everything from falling into that annoying seat gap. When it's installed,
12 minutes to go. 12 minutes.
Price target number. As we take a look at Okta on its own, though, and some of the technicals coming into the earnings event, I can already see the downward sloping channel here. But what's the setup look like?
Yeah, for sure. So what we have is a situation where we made our 52-week lows just recently, fresh set of low points here, 76.35. And that area between our intraday lows and our worst close, which was 78.32, that gives us our potential supportive zone to be on the lookout for. But if you were to backtrack a little further, 87 and 98 are the levels that stand out. First, 87, roughly these low areas here, 98, the high points here, and the consolidation phase here, as well as frequent stopping points for both price levels previously on this chart here. When we do look at our moving averages as well, we can see that we are overtaking our short-term 5-day EMA here, our weekly EMA, but we are so far stuck at our 21-day EMA. That comes in right around 83, just below that mark here.
Okay, what's MongoDB doing? MongoDB. Okay, we faded during the day. I told you this is what we were looking for.
Rewrite this whole story, so perhaps take that information with a grain of salt. Finally, when we look at our volume profile study, our volume nodes come in here and about right here as well. We're about 80 and 85 or so roughly. And then we have our point of control, the heavy trading area, all the way up here near 91. So those could be some other areas of note.
And in terms of options activity, we do a lot of the time see increased activity, particularly for any of these names that are under pressure. Is that sort of the setup here for Okta as well as we come into their earnings?
Yes, our sizzle today is about 5, so 5 times the 5-day moving average of options volume here.
MongoDB pulling back. All right, so that's one of the iron condors that we sold. Took the puts off at the highs.
Here for December 5th, about a 9.5% potential expected move here in our orange box. So the highest open interest areas on the call side, 83 and 90 for this December 5th.
MongoDB.
On the put side, 70 was the highest by far, 2.7, 2,700 contracts of open interest there.
And as far as notable trades, was there anything of note?
Yeah, so as I said, not the biggest dollar amounts here, but there were some very outsized trades in the January 16th expiration series, the 115 and 120 puts. Someone bought a total of about $1.909 million worth of long puts there. So there's only about $15 million worth of trading in the whole market for Okta today. So a very big outsized.
All right, so we got a nice fade on MongoDB. As I mentioned, we're probably going to see this drift lower into tomorrow, into Friday. If you haven't already rolled these out, you might want to consider doing that soon. If it drops dramatically tomorrow back into the range, say below 385, 377, you can take the call side off. I already took the put side off. And I rolled out to January with another $193 credit, $1,930 in credits.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
Okay, we took a Marabell. Iron Condor today. Okay, expected move 9.85%. Just rolling that up 6.5%. That should be 6.5, not 8.5. 6.5. So just round it up to 10%. Give yourself a little extra. Okay, 10%. We're trading 10%. We're trading 93. So just add $10 to this, 103. I sold the 110. So I gave myself plenty of room on the upside, 20 delta. Just feels like we'll test the upside before we'll test the downside. The downside, 17 delta, just subtract 10 points. Okay, so that give you 83. I decided to sell the 80, 17 Delta, total credit $1,370. So once again, credit spreads on the top and on the bottom. Credit spread overhead is a bear call spread. We're looking for prices to stay below or move lower. At the lows, we got a bull put spread credit, which we're looking for prices to move higher. So we receive a credit and we're just expecting prices to move higher, lower, just as long as they stay in between these levels, okay? And for implied volatility to collapse. To take this trade, you'd need to give the broker about $3,000. Just put it on the side, okay? Just in case you fall asleep or go on vacation, you forget about the trade. Max loss is around, I forget what it was. Max loss, I have it in the room with 6 minutes to go. 6 minutes to go. The maximum loss on this one.
So, the question is what do they do? Well, they're essentially a high-speed data transfer connectivity technology.
Did I not post this?
They
Marvel?
provide the marketplace with optical
Looks like I
digital
didn't
signal
post it. Let me see.
processing
Maybe it's in the.
technologies. They also supply
Yeah, here it is. Okay. So let me put this.
integrated circuits that are focused more on basically
Copy link.
taking,
Let me put that in the spreads channel.
technologies, hence, NVIDIA and Super
Okay.
Micro.
So the maximum loss is $3,500 because I took 10 of these. I might double up. So you don't lose $3,500. That's the maximum that you could lose. So we wouldn't let this happen. We wouldn't let the maximum loss occur. We would roll or do some other kind of shenanigans with the options in order to keep as much of the profit as we can and not have to be assigned or have a max loss. Okay. So that amount of money gets put aside, $3,000 gets put aside. Your broker doesn't let you trade with that, just in case you fall asleep or go on vacation, forget about it. Once the trade is over, you get that money back available to trade to you, and you take the profits, hopefully, on Marvell. That's pretty much it. You're not betting on a direction. If you were just selling put credits, you'd be looking for prices to move higher. If you were just selling call credits, you'd just be looking for prices to move lower, stay where they are, or drift a little bit higher. In this case, we're selling an iron condor, looking for prices to stay between our short strikes, the red lines. Highly likely. With a 20 delta, you have an 80% probability of no touch. And a 17 delta, you got 83% probability of no touch on the 80s. The way options are priced in, okay? So those are derived, those figures are derived, those deltas are derived by option pricing and implied volatility. So we want to sell that implied volatility. When a company goes into earnings, you got the dealers selling you options. Okay, they're the house. You're buying options from them, betting for a big move to the upside or a big move to the downside. The dealer inflates the implied volatility. Implied volatility inflates. You wind up paying more into earnings so that the dealer doesn't have to be exposed. They inflate the prices. Okay. So once earnings are over with, that need to inflate prices collapses, and you get what's called volatility crush. That's what we're selling. We're selling the volatility crush, and we're selling 20 deltas on top of it. So I mean, I can't tell you how many times when I first learned about options, the first thing I would do is look at like a 20 delta and go, oh wow, I can spend $100 and make several $1,000s. And I quickly found out that buying a 20 delta is a fool's game. Unless you're doing, the only time I would buy a 20 delta or anything lower is when I see something in an intraday trade. I'll do it on an intraday basis because I can manage the position very quickly. I'll buy a 20 delta, and this thing we see hedge flows turn up markedly. You buy something that's like 20 points out of the money and see the possibility of a quick move to the upside. That's the only time I would do that. Or if I'm selling premium. All right, we got 2 minutes to go, a little bit more than 2 minutes to go. All out of S&P. All right.
In-platform chat. Trade brilliantly with Schwab.
We're back here on Market on Close. I'm Sam Bartis on the floor of the New York Stock Exchange alongside Marley Caden in our Chicago headquarters. We've just got a few minutes left now in today's session. Let's welcome in Kevin Green, Senior Markets Correspondent, to help close out the day. So, KG, what levels are you looking at on the S&P 500? It looks like we're off the day's highs now.
What happened to Iron? Iron? IREN. What happened to that one? Big move lower on Iron. Okay. I'm out of that one, Mondo, by the way. Got stopped out earlier.
If you're kind of looking at going into the close, that you would like to be able to see
Okay.
being able to at least try to hold this 68.25-ish area. We're about 3 points away from it right now to the upside, but you would like to actually hold that type of structure. That's pretty much going to be the midpoint of this range or this consolidation that we've seen over the last couple of trading sessions. And in fact,
You're looking at Taiwan Semiconductor?
too much longer if you are a bull within the S&P 500 because we still are effectively still making a lower high.
TMC Metals. Okay, TMC Metals. Ooh, that looks good. TMC. All right. I thought it was Taiwan Semi. TSM. Okay.
That's one of the things you are starting to see options activity or call and put volume actually increasing both on the wings, the SPX, as well as in the middle or the at the money, strikes as well. So
Okay, 30 seconds to go. 30 seconds. All right, got another hard stop. Got another hard stop after the close. Got to get out of here. Hope everyone had a good day. Kind of boring. So if you didn't make a lot of money today, other than selling premium, that's pretty much par for the course today. Riot is selling off here. I don't know what's going on with Riot. That's pulling back pretty quickly. Okay. Hope you have a good day. Enjoy the rest of your evening. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Welcome to all the new members. Have a great evening, everyone. I had a hard stop. I got to get out of here. Got to go to a couple of things for Christmas. Enjoy. Take care, and good luck on CrowdStrike, Marvell, and whoever else is reporting earnings. Take care. See you tomorrow. Ciao.